Yo, what is going on, everybody? Happy Wednesday, happy hump day. We are back at it again. I think this is now our 18th consecutive boot camp, March 2022. We are excited to have you all here. What is going on, everybody? We're going to do a couple things up front in order to set the stage for today. First things first. It may be a little bit early for some of you. If you're joining us from the West Coast, you woke up early to hop onto the boot camp. Your fingers might still be a little bit slow. Your brain might be a little bit groggy. So let's start with some participation in the chat. All right. In the chat, I want to get a look at where everybody is coming from, and then also give me your level of expertise. You can say beginner, you can say 1 out of 10, you can say professional, whatever it is. If you figure out how to drop into the chat what level of expertise you have, we'll figure out how to quantify that. And the reason why I asked for that is because this day is all about you, right? We do these boot camps because we have fun with it, but the real reason why we put the boot camps on is because we didn't see anybody who was really doing comprehensive education. There's tons and tons and tons of education out there. Don't get me wrong. We do tons of webinars ourselves, but there's not anybody who's doing, we're going to take a day, we're going to take a topic and try to take everybody from zero to hero in the course of that day, right? That's the whole idea of the boot camp. That's why we do it, is because we said, hey, there's 1 hour sessions. There's plenty of things to read. There's plenty of noise that's going on at all times. But there's not anything that takes a full day and then says, we are going to go zero to hero on this day, leave people in a position of expertise after they get through the day. Shout out to everybody who's dropping in the chat. We got, let's see, Iowa, North Carolina, Florida. I am here in Detroit, Michigan. It's a rainy day today, but summer's coming. It's all right. We pushed through those rainy days. And also, what else do we push through? We pushed through some rainy times in the market. I'm going to pull up a chart of the S&P 500 really quick. Check it out. S&P 500, it is up on our screen. We are looking at 1 year. We're looking back 12 months. We have daily candles. All right. So each little green or red bar on that chart represents 1 day. What have we had for 3 straight months? We have had some serious chop. We have had some serious bear markets. So what does that mean for us? All of us boot campers who are getting after it today. And again, taking a full day to try to go zero to hero in one topic. We are getting deep into analysis today. All right, the times of 2020, even a lot of 2021. Here, let's zoom this chart out. Here's a 5-year S&P chart, right? Where we could just pick a stock. We could hang on. We could pick a small cap stock. We could pitch a large cap stock, and we could just hang on, let it run. Make some money off of those stocks. That trend has been broken for the past several months. So what does that mean? That means we got to sharpen our pencils. We got to pull out our notepads. And we're going to hang out on this boot camp today and get deep into understanding, how do we actually analyze these stocks? So let's do a quick look at the agenda. Up on our screen for today, we're looking at the agenda right now, and we're going to have six steps. Again, if you're just joining us, I want to know in the chat, what level of expertise do you have? Where are you coming at us from? I see some people from Europe joining us. That's a far away from where I'm sitting right now in Detroit, Michigan. But again, zero to hero plan for today, getting deep into analysis, what's going on. We're going to start chapter 1 is going to be about establishing a plan. Okay. Like I was saying, the days of being able to go willy-nilly, pick some out of the money calls, pick some small cap stocks, those days have come to an end. These past 3 months have chopped up a lot of us. I've had some bad days these past 3 months. We're going to establish a plan. Next, we're going to hear from the professionals over at Schaeffer's. All right, how they approach market volatility. Chapter 3, we're going to be getting into picking a hot sector. this sort of gets us into the top-down approach from the day. So you can think about chapters 1 and 2 as getting set up, and then chapters 3, 4, and 5 as the top-down approach. So chapter 3, we're starting off with picking a hot sector, find the right space to be in. Chapter 4, once we find that space, how do we analyze the stocks in that space? And then chapter 5, how do we actually manage that trade? So chapter 3, we're saying, okay, we think that electric vehicles, as an example, is the space that we want to be in. Chapter 4, we're saying, all right, here are the stocks that we like in that electric vehicle space. Chapter 5, what am I actually doing to manage that trade now that I'm in it, now that I've picked the stock, etc. Chapter 6, we're going to be bringing Ripster on with us. Check him out on Twitter, Ripster47. He's going to be talking about long-term trends, doing a little bit of a zoom out. We zoom out. How do we look at some of these longer-term trends? All right. Any questions about the agenda? Drop them in the chat. I'm reading them all. Okay. I see that Clay is there from LA. I see that Labas is from Lithuania. Right. I'm reading them all. Drop them in the chat. And that's what we'll be getting after today. Couple other cleanup items before we dive into today's segment. Couple recommendations. I said up top, this is our 18th consecutive boot camp. I said why we do these. There are tons of 1-hour educational videos, webinars, things to read. What doesn't exist, what didn't exist before we started doing this is a full day where we just take some topic and we're trying to bring everybody up to expert level throughout the course of the day in this topic. It's going to be intensive. It's going to move fast. There's no doubt about it. You are not going to get out of today without a notepad, okay? I already started jotting down my notes. I wrote down some of my winning trades, some of my losing trades. I wrote down some of the places that I'm having success, some of the places I'm losing. I'm telling you guys, have the notepad out. Born to be Free is saying, chat, smash the like. I 100% agree with that. Next up, we are going to have the recordings for the session. If you want to be able to go back, you want to be able to study, you want to watch these again, you want to take your notes again, you wrote down some note. I do this all the time. You wrote down some note. It doesn't make sense to you. You need the context for it. We will get a link in the chat in order for you to download those video recordings, and you can keep it going by watching the replays. And then the last thing that I will throw in, guys, drop some tickers in the chat. If you have symbols that you're looking at, you have tickers that you want us to talk about throughout the day, we will have time for them. We've got 6 hours ahead of us, okay? Again, we're bringing in 6 different speakers throughout the course of the day. And we'll have some time to do some stock lookup, okay? Early bird gets the worm. Throw the symbols that you care about in the chat. I have my notepad, as you all saw. I'll be jotting them down, and we'll be able to do some dives into some of these stocks. We're going to need examples throughout the day. So if you have tickers that you care about, you have a favorite stock, a trade you're thinking about making, put it in there, okay? I see you. I see Affirm. I see Verizon. I see Rail, Air, Snap on the short side. God, shorting anything can be scary in this market after what we just saw from GameStop yesterday. Did anybody get in that GameStop action yesterday? Or let's call it the past 3 days? That was a little bit of a wild ride for us. It was a little bit, I would almost say, refreshing to see. You know, it's like the market of old, the market when life was easier before we got all this chop in the S&P 500. 2020 times, so you could just pick a stock and let it run. That's why I think it was a little bit refreshing to see some of these moves in these stocks. But did anybody get in on this GameStop action? And in case you missed it, in the course of 3 or 4 days, basically, we saw GameStop go from 80 to as high as 150. Pre-market today, we're up another 7%, hanging out at 132. But I am curious if anybody got in on the action of any of those stocks of old, the stocks that I know a lot of us out there in the chat cut our teeth on, the GMEs, the AMCs, the Blackberries I saw moving again. I don't remember if the other ones were Tootsie Roll, Bed Bath and Beyond, Naked Brands. I don't know if those ones got ripping as well, but I'm curious if anybody got into any of that action. Drop the 1 in the chat, and if not, drop the 2. We are absolutely going to be talking about those stocks today, because again, if we go back to our agenda in what we're going to be getting into, the whole point of today is we want to get deeper in analysis, right? We spent a lot of time throughout the past 2 years talking about trading tactics, talking about options, talking about hedging, all those sorts of things. Amid this volatility that we've seen in the S&P 500, in the small cap stocks, the market as a whole, right? Commodities. Oil is more volatile than Bitcoin right now. Okay, that shouldn't be the case, but it is. But amid all of that chop that we've seen in the market, we said that we want today to be about analysis, digging deep into things. And so as we pull the agenda back up, we have our establishing a plan, picking the right sector, knowing how to manage those trades, etc. When we get into the sector picking, so some of these meme stocks, some of these hot flyers are absolutely going to be on the table. It's going to be something that we talk about. It is this a trend that's here to stay? Do we get back into these names because we can hop into a GME at 130 and let it ride to a 180 plus? We don't know the answer to that yet. But again, as we start to dive into the analysis of the sectors, the analysis of the individual stocks, that's what we'll be getting into today. Again, I'm going to throw this one out there to the chat. If anybody has questions for us, things that we want to make sure that we get into today, we've got plenty of symbols. I see triple L in there. Drop them in. We want to see where we're at. All righty. Next. We're going to have Mark joining us in just a minute here to get us into our establishing a plan segment. But let's throw this one out there. Do we want to do a stock pick before that? I've got 3 stocks to pitch throughout the course of the day today. Do we want to go ahead and do one of those first stock pitches while we're waiting for Mark to get in here? If yes, drop the 1. And also guess the symbol that we'll pitch, the first stock that we'll pitch for today. If we want to wait on the stock pitches, get the education flowing first, we can absolutely dive into that and save the stock pitches for later. But again, if we want to kill some time while we're waiting for Mark to hop in here with us and get us going on establishing our plan, drop the 1. We'll get the stock pitches flying. If not, drop the 2, and we'll dive straight into the education. And I'm just taking a quick look here in the chat. We see them all. Right? We got a lot of chatter back and forth about the meme stocks. We got some AMC lovers in here. Okay. All right. It looks like, yes, we are going stock pitches. All right. I'm going to ask one more question. I've got, and a lot of people who follow these shows regularly, sorry, I don't have anything that's brand new, but I've got a couple of high conviction trades. Do we want to go with a China stock pick or a U.S. stock pick? Which one do we want first? We'll do both throughout the course of the day today. Which one do we want first? 1, if you want the U.S. one first. 2, if you want the China one first. And let's wait for those ones to flow in. Stay out of China. US. All right, let's do it. This is going to be a boring trade, but I think it is one of the more no-brainer trades that I've seen. Check it out. Up on the screen, Meta Platforms, Facebook, ticker FB, Foxtrot Bravo. It's a stock that we all know. I know that as soon as I say this one, I am going to get tons of hate in the chat of people saying that Mark Zuckerberg is trying to control the world, that they hate Facebook. I don't care. I am here to try to turn a profit on this thing. I'm trying to pick a hot stock. whatever the opinion is on Facebook, whatever Congress does with Facebook, whatever Facebook tries to control in the world, so be it. All right, I'm out here to pick a stock. Yep, I see. There's the first one. Boo. Facebook is the first one. Let's dive into the why. Whenever I'm pitching a stock, I need to see two things. I want to see, one, the story side of things. Two, I want to see the numbers line up. Let's talk about the story side of things. Where Facebook is a stock, and I'm going to click us over to our financials here. We're going to go to the statement of cash flows. I'll give us a couple zooms too so we can see. We look at operating cash. How much cash is the business of Facebook throwing out? $18 billion a quarter, okay? That's not $18 billion of paper profits. That's not $18 billion of revenue. That is $18 billion of excess cash that Facebook is throwing out. All right. Why has Facebook corrected so crazily? Here we're going to 1 year chart, daily candles. You got the stock up here, $385, got as low as $180. Now settling out in the middle, somewhere around 215 bucks. Okay. Facebook got washed out with the tech sell-off. Let's go ahead. Let's pull up the chart of QQQ. We alluded to this morning. Why are we doing analysis today? QQQ, NASDAQ, the ETF that tracks the NASDAQ index, heavily tech weighted. Obviously, there's been some washout in this as well. A lot of the high flyers went with it. There are some stocks that got sold off in this correction that I think should have gotten sold off. Here's your 1 year chart of Peloton. Shitty stock. Totally okay that one got sold off. Not trying to pick a bottom here, but what makes Facebook different, okay? Story side of things is it got hacked up with the rest of the market. The company gave worse than expected guidance, but not bad guidance. That's this first little cliff that we see here. The company said we're going to have our second biggest quarter in company history, and the market took it from 330 bucks to 240 bucks. I said, okay, I think that there's a dip to buy there. Market continued to wash it out on just general choppiness in the market. Now let's talk about the valuation side of things. All right, we have a stock, Facebook, that is trading at 4 times price to sales ratio. Okay, 4 times price to sales. That is cheap. You have Facebook that is trading below the S&P 500 average, but it gets better. Not only does Facebook produce a ton of revenue, more importantly, it produces a ton of cash flow. We talked about the $18 billion of cash a quarter that Facebook is throwing off. It produces a ton of EBITDA as well. So we have Facebook trading at an 8 times EV to EBITDA ratio. Let's compare this to the rest of the market. S&P 500 average as a whole. Guess what the S&P 500 average EV to EBITDA ratio is? Throw it in the chat. I just told you Facebook is trading at 8 times EV to EBITDA, right? Highly cash flow producing stock. A company that came out and said, we are going to have our second best quarter in S&P 500 history ever. And I'll throw in one additional caveat on there. A benefit of Facebook, an advantage of Facebook, is that we might see a rotation, right? We'll talk about this as the day goes on, but we might start to see some sector rotation. Where the market wants to get more defensive. They want to start transitioning assets out of some of these high-flying tech stocks, right? My favorite one to pick on as an example that tons of people got into as tech was hot and then got smoked on, Peloton, all right? But as people start to rotate assets out of these high flyers into more defensive industries, they're still going to want some tech exposure, right? People are going to say, hey, I want to get more defensive. I want to get safer with my portfolio, but I still want some tech in here. Facebook is going to be one of those tech names that they turn to, right? Facebook is almost old tech at this point. And again, super cash flowing, super undervalued. We said Facebook is trading at an 8 times EV to EBITDA ratio. And if anybody doesn't know what EV to EBITDA ratio is, put a 1 in the chat. That's my favorite quick ratio to use when analyzing stocks, so we can talk through that one. But Facebook is trading at 8 times, S&P 500 average 15 times, okay? So you have a stock like Facebook, love it or hate it. I know a lot of us out there hate it, but you have a stock like Facebook that's trading at half of the valuation of the S&P 500 average. It's throwing off tons of cash flow. Stock has gotten hacked up. And so for that reason, I think that Facebook, when we look back on it 2 years from now, 1 year from now, 6 months from now, is going to be one of those absolute no-brainer trades. This is the largest stock in my portfolio.
Hey, Luke. Hey,
yeah.
I'm in here. What's up? I'm in here audio only. I'm having some camera issues.
Why audio only, Spence?
Because I'm having some camera issues right now, and I got Mitch here as well. You want to bring Mitch on?
Yeah.
Here he is.
All right, Mitch. We had tons of people in the chat asking about EV to EBITDA ratio. Do you want to explain that one, or do you want me to take it?
Why don't you take it, Luke, since you brought it up?
All right, I brought it up. Okay. When we are comparing stocks, we need some sort of neutralizer to say, we can't look at a stock and say this stock price is $200. This other stock price is $20. That means one's overvalued, one's undervalued. Why can't we do that? Every single stock, every single one has a different number of shares, right? A stock could be $200 with 10 shares. That would give it an implied market cap, right? How much the whole company is worth of $2,000. You could have another stock that's $20 a share with the 100 shares, which would give it the same implied market cap of $2,000. Okay, so just looking at the stock price doesn't work for us. So what else can we look at? When we get to EV to EBITDA ratio, we are looking at the value of the whole company. So that's the market cap plus the debt. And then we are dividing that by how profitable the company is. EBITDA stands for earnings before interest, tax, depreciation, and amortization. Okay, let's do that one more time. Earnings before interest, tax, depreciation, amortization. Why do we take earnings, profit, before we get to those specific line items on a financial statement? Depreciation, who cares? It's a non-cash expense. It's a fake expense. Accountants throw it on the books because they have to. It doesn't actually have implications for the earnings or the profitability or the operations of the company. Okay, so when we look at the EV enterprise value, market cap plus the debt, so the value of the whole company, we divide that by how profitable the company is. It gives us a really quick look as to what is the valuation of this company. And so on average, the S&P 500 stocks, that market cap is 15 times higher than that EBITDA. For Facebook, the market cap is 8 times higher than that EBITDA. And so I would imagine that there's going to be some sort of revision to the norm. How is that, Mitch?
Honestly, that was better than my corporate finance class at UCF, so I'll give you that.
That was great. That was
All right.
great.
No,
All
definitely. Right. I mean, I just learned more than my corporate finance class. So thank you, Luke.
Corporate finance with Luke Jacobi.
Yeah, there you go. We got it already. 101. Thank you, Luke. One of the things is I always say learn a little bit, right, about every variable, right? In stock trading, I feel like there's 3 major variables that you need to kind of know. You need to know some technicals. We'll get into that later today in the boot camp. But fundamentals, right? And you're speaking about this right now. You don't need to know an insane amount. Just knowing some basic, some good, keeping it simple kind of things are definitely going to help you take a quick look in the fundamentals. And then you can at least just knock that down. Is it, in my eyes, a good company on the fundamentals, or is it not? I think it's a great way to kind of get you into higher conviction types of trades.
Exactly. And here's why I like getting into some of these fundamentals. I'm going to go back and I'm going to pull up an S&P 500 chart again. Let's take a look-see here. There we go. All right. 1-year chart, daily candles. Look at all this chop that we've had. Right? If we switch this to a 5-year chart with, I'm going to guess these are weekly candles. Yeah, weekly candles. Right? We had a long time where you could just grab a hold of anything and let it rip. Right, when we start to get into some of this chop territory, and it's not as easy as it was, I really like looking at the fundamentals, just because it gives me a little bit of defensiveness. Right, if we get to the other side of the Facebook pitch, let's pull the chart back up. I mean, these are some nice green candles that we've had. Right, if you throw away today, right, we're looking at this thing yesterday. This is a really nice uptrend. We're making higher highs, lower lows. To this pre-market doesn't look great today. But if I have a chart that gives me a little bit of conviction, plus I have the valuation story on my side, makes me feel a hell of a lot better during this market choppiness.
So-
Hell yeah. And then just to add on that, one thing that I look for is when I knock those two downs, I'm looking for, is there any future catalyst coming? Is there any news flow that has been pointing towards the upside? That is what I call the story of the stock. And I think it's very important to also know that.
So we're doing this new thing, right? Today's a bit of an experiment, right? Because we've done these boot camps now for what, like a year, maybe more.
We did our first one.
Yeah.
Do you know how the boot camp started, Spencer?
I mean, I vaguely remember, but I wasn't like super involved. So.
Let's tell the story with the chart.
Yeah, you can.
All right. Putting it back on the screen. All right. We are looking at the chart we've looked at a few times today already. S&P 500, 5 years weekly candles. Okay. Market's going along. It's doing its thing. One of the things that we do here at Benzinga, and now back, coming back to us live in person in May, is we used to host live events. We host live events for traders to get together, do some intensive education. We're doing it again in May. We'll talk about that in a little bit. We would love to see all of you in person. We'll all be there hanging out in May to swap in stories, talking ideas, but we'll get there. But we used to do these live events. And then what are these two big red candles here, Spencer?
Wah, wah. Where's my soundboard? I have that. Oh, it's too quiet. COVID, pandemic makes in-person events not a thing.
Exactly. Market tanks. We can't do live events anymore. From like the actual business side of Benzinga, we're freaking out. We're like, events is a big part of our business. We can't do events anymore. Like, are we screwed? And so what did we do? In April of 2020, we introduced our first virtual event. It was entirely pre-recorded. It sucked. It was rough. We'll have to look back at that one for a laugh. But we said, hey, let's try to do the best that we can virtually. And so that's where the first boot camp came from. April of 2020. And we're now going on almost 2 years, Spence. We've been doing it every month.
So my point of bringing that up though is because we've always done these on weekdays, right? Today's a bit of a new one for us. We're doing it during the day, during market hours. And we're going to see how this goes. So normally at this time, we have live trading. We got Mitch, we got Ryan, Zunaid. Let's bring them into the fold.
Yeah, can we do a little bit of live trading?
We can, because we have two
Getting ready.
open. So let's bring Ryan and Zunaid up here. Ryan's doing his flex. He's flexing his fingers, right?
Did he pick up the weights? I know my man likes to.
Zunaid is just chilling. He's just chilling over there.
Hoodie on.
This is awesome.
Yeah.
I
Closet
love
locked
it.
up.
This is awesome. This is 4 of the hardest working people at Benzinga and Spencer. So we're
Oh,
just
come on.
take that, Spence. Take that.
I'm expecting money trades from Luke. I think it's your first time. So
I
I'm
didn't mean
looking.
to
I'm
scare
like,
him away.
I'm betting the
Right.
farm on whatever Luke calls out for the day trade.
Shut him
All
down.
right.
Shut him down.
Are we
says
doing
Ryan.
day trades only right now?
No, you
Yeah.
can do any trade you want, Luke. We're here to please the masses. So we do all types.
But if I could make money in like 10 seconds, that'd be great too.
All right. Well, I'll give you guys at least one of the trades that I'm looking at today, and I'm trying to put the big boy pants on. I'm looking for potentially Tesla short above 1,000. So right now we're hanging at 980s. You've seen a little bit of weakness into pre-market. There is a trend line resistance that would push us into 988s. I'm expecting to see a little bit of a shootout
3, 2,
right out
1.
the gates.
3, 2, 1.
Let's go.
Here's our
Let's
bet.
get
Look,
it.
folks, I carried a NASDAQ short overnight that I'm looking to close here on the open.
Uh-oh. Short in the NASDAQ.
It's
How
a
do you short
synthetic
it? The ETF?
It's a synthetic short via SQQQ. I don't short.
Okay, same difference. Bearish bet, regardless. All right, we're watching the movers. We're watching the scanners. We're seeing what's happening off the open.
Yeah, like always, one thing I do want to state is everybody in the chat, let's also call out some moves. If you guys see some big moves, definitely call it out. We'll see if we see a pattern or any kind of edge that would be towards that kind of trade, and go ahead and call them out.
All right.
Sean
I went in
Cox.
and got filled real quick on Baidu. Went in and got filled at the 150s. You know, I love my whole numbers. A 150.33 stop loss is going to be below 149.50. Going to try to take some profits around 150.95 if I can.
Oh, that 150 fill is juicy.
I always love it, man. And there you go.
QQQ.
That was a quick little trade out.
That was great.
And for those of you that have been with us for a while, you know those 150s, 50s, 100, those are juicy. I mean, there's a reason Mitch loves 1,000 on Tesla.
Mm-hmm.
You see, I've got an alert right there to go
Whole
short.
numbers. Yeah, I'm expecting a big push towards 988 here, and you're starting to see a little lift right there. There's a resistance trend line. If you look on the 15-minute chart on Tesla or whichever kind of intraday chart you're looking at, you'll see that trend line that it's going to run into. I think it actually breaks out through there, but then I'm going to look for a quick turnaround at the 1,000 level.
UPST, if the 5-minute candle closes above the 125, I'll look to get some calls if it's not spready. That's ticker UPST above 125, 5-minute candle closed.
I just want you to know that I'm still here. I just took my camera off because I didn't want to cover Luke's beautiful face. So I sacrificed my.
You say that as the banner on top covers his eyebrows like they're bad.
My eyebrows are fine.
It was worse before. It was worse before, right?
Junaid.
Long lucid here.
What about taking one of these meme stocks for a ride today?
Well, so let's
like
talk
an
about
AMC.
it.
Yeah, let's talk about GameStop right now. Let's talk about
GameStop.
Yeah.
The chart doesn't look great.
It doesn't. Matter of fact, Aaron Bree, I told him to take GameStop with me calls on Monday. I don't know if he did, but to me, I really don't have a read here unless it gets to 125 or like the 120s. Besides that, I don't really have a good read on it. Let's take a look at AMC. AMC 20.
Or if we get highs of days. If we're approaching highs of days, I'm hopping into that thing and letting it ride.
100%. But AMC though, the more it gets towards 20, the better short opportunity you have. And of course, over 2050, you go ahead and get out. Look at the whole number in pre-market. Couldn't quite get over it after it came back down below. And you said Lucid. I'll put your ticker up here on the right-hand side.
Yeah, I might get even stopped out right here. It's close to
I've got it up for
Yeah,
you.
Paul, I'm with you, Paul. I'm watching Oxy as well. Oxy's mooning right now.
I'm so upset that I got stopped out on my swing trade on Chevron. Should still be in there. Got stopped out by 2 cents on the low of the day. That's what happens sometimes when you put stop orders out there, guys. Be careful when you're putting your stop orders, especially at like known levels. A lot of times you get just hit really quickly, and the next thing you know, the stock turns around 2 cents away from there.
There's something out on China like just now. Look at FXI really quick.
Okay.
China ETF.
News me.
I'm looking. I don't see anything yet.
Yeah, you've got a nice little candle down there.
Web, same thing. The entire ETF going down.
Yeah.
Yeah, not liking this Lucid.
About a
About to
week
get
off
out.
the open.
Crash
first move
30s.
down. Same with JD.
JD, Baba.
Yep.
We're actually short DD. Let's see if that thing goes back down.
Alcoa with a huge move off the open here. $2 rip right off the open.
We got some movement here.
Yeah, we do.
All right, guys. So energy and basic materials leading us. This is what I love to do is look at sector to industry analysis. So if you look at basic materials, you'll see it up 0.39% from the open. Then you look at where the strong stocks are. So you can look up coal traders like BTU up already 6%, AMR up 3%, ARCH up 2.2%. All these kind of coal stocks kind of will move together. And this is why I like to sometimes find trading with the herd kind of style. So if you look at certain coal names, you'll see that movement. And that's what we look for a lot of the time.
Plug Power looking like it wants to break out. Getting close.
All right, Lucid looking a lot better here now, guys. I'm going to go ahead and add right here on this pullback. Just added there. Now have an average close to 50 here, 50, 51. We'll look for it to get back above 26.65. Did Tesla get up there towards the 1,000 yet?
Yeah, Tesla's currently trading at about 987. So
look, remember that 988 level that I gave? Look how Tesla stops right there, 988. There's a resistance there. That's what we look for. Now there's the 990s there. Now we're starting to get that push.
Check out Tilray, Mitch.
We'll take a look. Yeah, there was some news this morning. Spencer can fill us in on that, exactly what that news was in the cannabis industry, but definitely Tilray is moving off of that.
They all started to move last night.
Yeah, they
Tilray,
did.
CGC,
Yeah,
Sundial, all of them.
yeah, they did.
That's a nice VWAP bounce trade there, Luke. That's a red to green VWAP bounce trade. We talk about that one on live trading all the time. If you take a look here, I can put it up right quick here and show you guys that. If someone can throw up my chart right quick, I'll show you it right quick.
I got you.
All right, so you see a lot of times we get a stock that is green and pre-market, right? Green look pre-market. Look for the support to be slightly broken and then turn to green. So this is what we mean by red to green, a quick move down right out the gates. Then it recovers that opening price. The opening price here was 605. Once you get that recovery of that 605, look for that 605 to hold on the pullbacks. Look how this stock goes up towards 616, pulls back towards 606, holding that open, and then takes off. That's one of the trades that you see common with momentum traders, red to green. Then they use the VWAP, which is that orange line, for entries, looking for that open to hold, and then look for the push. There's Lucid. Now we're starting to get that gain that I'm looking for. I'm going to look for this to be a quick push, sell into, because you guys remember, I'm looking to actually short Tesla. So I'm looking just for a quick gain here. Scalp kind of gain above 2670s. Then we'll go ahead and get on out.
Well, if you want to short Tesla, here's your chance. You're coming up at 997. They're about $3 away from 1,000.
Okay. My biggest thing is not to go immediately into that 1,000 because you'd be shorting way into the rip. So I'm going to look for a couple rejections up there.
Wow.
I'm going to take a chance at Oxy
There's the
here.
70s
Ticker.
look here for Lucid. Didn't want to get up there. It found some selling there at the 68s. Let's see if we can get clear it through now.
I like that Oxy as well.
Yeah, I'm going to go ahead and take an Oxy trade here. Again, short size here at weeklies. I'm going to go ahead and get filled at the $65 calls expiring this week. $65 calls on ticker OXY right over here. They had $1 million buy, $1.5 million buy a couple of days ago on ticker OXY. See.
I'm thinking of chasing some steel right now. I don't know, U.S. Steel or Alcoa or Cleveland Cliffs or whatever. They're all ripping.
All right, just gotta be careful here with Lucid. It's not going up towards that level there. Did I get
Jim Cruz? Oh, here. You know what? He probably can't hear me, so I'm gonna tell him in the chat. We're having some weird YouTube issues today.
Yeah, YouTube in general is having a little bit of trouble.
Yep.
All right, just got stopped out there and Lucid there at the 2640s there. It looked like we got a little bit into the gain. It would have been like $15, but it wasn't much there.
Hey, look at that. Look, you've got a fan. By the way, Tesla rejected 10 points there almost.
All right, there's Tesla starting to reject there. Let's look for one more tick up there. Did we get to the 1,000? No, we didn't even get there.
Yeah, the highest you got was about
997?
998. Yeah,
Yeah,
997.95 to be exact.
Exactly. Let's see. Let's look for one more drive there. Double top at 1,000 level. That's what I'm going to be looking for.
No sooner do I say I'm considering taking steel here, and what does it do? Let's start going down.
Yeah.
Look at GameStop, Spency.
All right.
Now might be your time if you need a trade. Maybe you want to see one more green candle.
Could take. What's my view up here? What is that? 133. I could take that. That's not bad. Take that as a stop. Take GME right now.
USWS highs, by the way.
Let's take it. Let's take a GME trade right now.
Did anybody talk about BTU?
Yeah.
Every day we talk about
that's my favorite. One of my favorites, Luke.
What do you think right now? I think I'm gonna let BTU ride long.
Right now, I mean, I look for a lot of times this one does VWAP bounce trades, and then it goes from like 1 minute momentum to a 5 minute a lot of times. This one did rocket off right out the gates, so I'm looking for a pullback towards 25.18s, but it doesn't look bad. I mean, it had a nice sideways consolidation yesterday, and then got strong this morning.
All right, took a quick GameStop. Wow, that was really. This is really moving right now. This is really moving.
Let's go, Spency. Come on now.
Tesla past 1,000.
There you go. There you go. AMC also pushing up there, guys. If you guys want to take a look at AMC, that would be an entry down towards 19 here. Risk would be for me off of 1860s. So that's about 40-cent risk there. So you need to at least get back towards 1950s. I think it has a resistance at 1990s.
So I'm in a GameStop at 138.47. My stop is going to be that VWAP, which is for the moment 134.
Hendricks, is it time for Tesla? Is it time? Bless you, Hendricks. Bless you.
I mean, you're still getting new highs in Tesla, man.
Let's go. Let's go.
Yeah, you're
Hendricks sneezing today, man.
You all right?
He thinks the market's going down. He's sick of this.
He's sick of the bull run?
He's sick of it.
FEMY spot at 222. If it snaps that, I think you might get a pop on FEMY.
Start setting up here in Tesla.
If
I'm thinking
AMC comes to 19, you have a good risk reward there. And there's Tesla at 1007.
No, Quantum, opposite of diamond hands. Opposite of diamond hands. Paper hands. This is a quick trade.
Don't say it, Spencer.
Let's pull up Zunai's chart.
Yeah, I got GME here. I got Tesla, OXY, and AMC. On OXY, I'm down about 25%. I'm going to add a couple more contracts here. Got filled at 76 cents as it's testing VWAP. And you've got GME with the 140 short-term rejection.
FEMY through 22, long on 222.
I'm sorry, what was that, Ryan?
FEMY, it's just a micro cap here. Sorry, I was clicking around my scanner. FEMY, micro cap here, took out 222, which had a big seller here. I'm actually looking for a pop above 222. Stop at 217. Room up to 265. I think the next spot here is going to be 240. Yep, 240. Up 217. If we stay below this here, I'll probably just stop out on this one. Feels higher, though. This is a huge volume this morning compared to its average.
GME high day at about 141.
You are quick.
Spencer.
Watching that. Trying to watch GME and my scanners at the same time. AMC popping.
Yep, AMC approaching the $20 mark. Now, I expect a little bit of rejection from 20 if we can get that.
Top trending stock today is
What's that?
LBPS and CELZ.
CELZ is wild today.
Yeah, so is LBPS. Anyway. Justin, that's the story of my life, man. I never know what's going on. I'm just here for it.
I'm just out here pushing buttons.
Roll with it, man. Roll with it. Take a journal, guys. Like Luke said, pull out the pen and paper, man.
Or just wing it.
Well, if
Just
you're trying
press
to
buttons.
learn, maybe not wing it.
Wait, Zunai, what happens if I push this button right now?
You end the stream.
Oh, crap. All right. Hey, don't joke. It's happened before.
I know it has. I know Jason's done it before, too. He tried to leave the stream, but he ended it.
Oh, don't do that one.
Actually, one time I tried to end the stream and I left by mistake.
And the stream was just up?
And the stream was up and I was not.
Yeah. Spencer's done that before. I see him all the
That's
time. He just walks away,
hilarious.
you know. He's like, whatever.
I
Broadcast up.
love it, bro. I
Yeah.
love it.
Chris is wrong.
By the way, on the OXY, the additional ad that we had is 75 cents is now trading 86 cents on the bid. So if you like the 12-cent gain, please go ahead and start selling it as we approach 63.50s here.
Well, steel coming back. That's X. Yeah, steel off the high of the day. Chris dropping Tilray in the chat. Wait. How's Chewy doing?
Spencer, your LBPS is halted. Somebody in the chat threw that one.
Starter short Tesla.
Whoa!
1,003.56. 5 shares. Little. This isn't big, guys. I just want to tell you guys, I'm not going crazy here. Just got short at 1,003. Why? 3 tops there. What do you get? the rule of three. 1, 2, 3. Tries to break through that. Saw this rejection to get through that level. Started jumping on it. Now, what will get me out of this is a move clearly above the high of the day. So right now, the high of the day is 1,009. So I'm going to give it to 1,010. Above that, I'll go ahead and get out. I can get back in. One thing that you don't want to do is when you're shorting up at the highs is fight the tape too much. So I'm just looking for a quick rinse down, right back down to those 988s.
New high day in GameStop. I beat you tonight. He's focused.
Dun, dun, dun. The focus is on. The focus game's on.
The Chinese stocks bounced back really nicely. They're now outpacing the U.S. stocks, S&P.
GameStop still pushing now, currently at 143.
Oh wait, I have a trivia question for y'all, but let me make sure the answer is correct before I. Yeah. Okay.
That would be nice.
As of yesterday, we finally have a second sector that is green year to date. Energy's been the big winner year to date, but as of yesterday, we have another one that is green. Can anyone guess what the second green sector year to date is as of yesterday's close?
I do not know.
Give me materials.
Not a bad guess, but no.
Industrials.
Also, that's a slightly better guess, but still no.
That would have been my guess.
All right, we got like 5 left.
What
Yeah,
was
you
the
got
question again?
financials left.
The question was, as of yesterday's close, there was a second sector green year to date. Energy is the big winner for the year so far, but there was another one that's in the only 2 sectors are green this year. Energy and what? It's not. Oh wait, Dan got it. Dan
Is it-
unlock. Yes,
Financials.
the
There you go.
banks.
The banks.
Financials.
It is the banks.
Yeah, I've been watching to see what was up the most lately. In the last in this week, it's consumer cyclicals, and then it's tech. So I've been looking for those for potentially shorts. That's why I'm on here on Tesla. We'll see what happens here, guys.
Does Neil feel left out?
Yeah, he probably does. He can join.
Wait, what's going on?
Who doesn't love a 6-man box? AMC, by the way, nice breakout over 20.
I needed to get a little weird in here, man. Where's Neil?
Neil and Chris, if you all want to join, let me know. We can drop you guys the link.
Yeah, please.
We are going to only run for probably about 15 more minutes, and then we're going to bring on our next guest from Schaeffer's, Brian Feroldi, right?
All right, guys. So the SPY is looking weak here a little bit towards the open. It's made about 3 or 4 bottoms, now making multiple bottoms there at the 445 level. Let's see what happens in the SPY here.
Tony's our next guest, not Brian.
Spencer.
Tony.
Your
Tony.
mic is hot, Spencer. Unless you're actually meaning
No,
to say all this.
okay. I'm correcting myself. Tony, I said the wrong thing. Brian is after Tony, but Tony Venosa.
Gold looking good here, guys. GOLD, if you want to take a look at that, I do think that's a good trade setup there. Want to take a look at that? That chart is looking good there. I would look for it to reject here below 2442s. If it comes back up through the VWAP, that's going to look really good.
OXY on those options is flirting around VWAP. I'm down about 15%. So if you're uncomfortable with this and the size you took, go ahead and get out for 15% loss.
All right, guys, looking good here in Tesla now. Couple rejections to get back towards my level, 1,005. You just won't even get back up there. I'm at 1,003. You could see each time it got up there, it rejected to get back above there. Final rejection right now at 104.92s. So we don't want to see it get back above that 1,005. Let's just see Tesla just completely stair step down now.
Way to
Let's
go,
see what
Diane.
GME
Already
does.
at your target for the day.
Congratulations. That is
Oh,
awesome.
well, I look away for 3 seconds and GameStop flirts with the VWAP. So
Well, I'm going to need you to stop looking away. Damn.
no, this is my problem. All right. I've said all along, my VWAP is my stop.
All right.
Spency.
OXY, real quick. So OXY 10-minute candle closed below VWAP. I'm going to go ahead and get out here. I took a 20% loss on OXY. It's all use, Luke.
All right, Spency, swing trade idea. GameStop, AMC, obviously hot past 3 sessions or so.
Mhm.
What about grabbing some of these other 2020 meme stocks that haven't moved yet? Like I'm looking at BBBY, swing trade idea.
BBBY down for the day, 3%. And then what's the other one?
BlackBerry,
KOS.
costs already moved. That's what's informing this. So I saw costs start moving. That's where I'm like, okay, maybe we try to swing some of these other ones.
If you want to take a look at, it's been coming on up, had huge volume yesterday. NEGG.
Yep, that's another one of them.
Got you, Luke. Look at that volume yesterday.
Yeah.
Yeah.
Stress.
Up and
When you guys see a volume from a stock that normally trades on the day, only 237,000 shares, and then it goes from one day to the next to 3.9 million. That is more than 3 times the volume. That's what we call relative volume, and we always look for that as day traders.
all right, that's that. That was fun.
You already got out?
Yeah, man. Got through my view up. We're done.
Did you take profits at 144 at all or anywhere near it?
No.
All right, guys. Normally, I would at least take some profit here in Tesla now. I'm already up a significant amount, but I'm going to look for a home run. I'm going to go for the home run, guys. I'm going to go for the diamond hands here. Let's go. I feel like I got it on point. Let's see what happens to Tesla today.
As Mitch was saying about relative volume, FEMY, that was part of the trade here for me. So we were long at 222. There was a big spot there. They ended up flushing it a little bit. Now they cleared it out here, and it's popping here on volume. I look to take out 230 here. We'll probably close this. And like Mitch was saying, volume today, hundreds of times greater than it was yesterday. So let's see if we can take out 230. 230 gone, 232 now, 233, 234, 235. All right, we'll stop it right there. And that's a nice little trade to start the morning off here. We'll see if this sets up again, FEMY. So I'm basically just going to flip back 2,000 share lots here on FEMY, and we look to take those spots out. Long as the volume stays green, we're going to be in good shape.
Nice trade, man. Nice trade there. I'm long AMC at 1969. You can see it on my chart there. I'm going to take some here on E-Trade as well.
Wait, I just want to be clear about my GameStop trade. I did not make a profit on that. It was a slight loss. It was a 1% loss. But I had my stop. It was the VWAP. We got through it, and that was that. No sense in crying over missed profits. I had a plan. I stuck to it.
Take the money and get out.
All right, looking right now, right here, just grabbed it. Getting in GOLD. I talked about this trade before I got in there. Big thing here, guys, is you're seeing a 5-minute symmetrical triangle. You're seeing a 1-minute bullish pattern also. Multi-time frames pointing towards the upside here. Taking GOLD, Barrick Gold. I love gold.
I love gold. All right. Neil says, I suck.
What'd I get my entry? 50s.
Whatever.
You know what? I think Spencer needs an account at the trading school. What do you think, Spencer?
Oh, one of the things I'll say about GOLD.
Not a bad idea. You know what? You're like the third person to say that to me this week. So
If you sign up, Spencer, I can get you a laptop.
I know a guy that can get you a promo code if you want, Spencer.
Yeah.
thanks.
No worries, buddy.
Man,
I'm gonna take a shot
Wow. I just noticed
here.
Adobe off the open. Holy cow. Adobe took a bath.
Hey, what are the nickel stocks? Nickel is going crazy again.
Today it's zinc, I think.
no, I had a list of nickel actually. Hang on a sec. Let me see if I still have that for you, Luke.
So stocks in metals and minerals moving today. I have TMC.
No, I combined it into a metals one.
You know what's been
PLM.
doing really good lately, guys? Lithium. If you guys are missing the lithium move, it's really good actually. That's why I like lit right now. But if you take a look at LAC yesterday, that was a really good move. Looking for that to continue. The MP's having a good day today. PLL is another one you can take a look at. They're doing pretty decent lately.
MP is a great market or like geopolitical uncertainty stock as well.
Yeah, but until the inflationary trade comes off, I think it's definitely a good upside look. And it's a SPAC at what? What price? $50, guys. A lot of people say that there's no SPACs that are up. MP's a SPAC.
MP has double top right around 52 too. I think if you take that out, you might actually be able to run on that.
All right, let's see if we could take out the high here in GOLD. That would be a move through 24.55. What are we looking for? Targets on the upside. So if you see there's multiple resistance here, next level for resistance would be up to 25. So we're looking for a 50-cent breakout here, risking only 8 cents. All right, Tesla coming back towards the 1,000. Needs to reject from the 1,005 mark, guys. I'm sticking into this. I'm sticking to my guns here. We'll see what happens on Tesla.
Apple with a nice green candle headed towards 170s. Would love for Apple to come back towards 169s, and I can go and grab some 170 calls on that side.
So a good thing to call out for the Apple move and what's going on in a lot right now is you see the SPY. What happens right now? Remember when I told you guys it was bottoming out there at the 445 levels, 445.80s? It just quickly surged up to the VWAP. That's a lot of times what you got to kind of pay attention to. Always know where the overall market is, especially if you're trading a big market cap like Apple or Tesla or Google. If you don't pay attention to those indexes, you might not even catch the first momentum.
Luke, you mentioned the metals. You mentioned nickel, right? So I pulled up the SLV because that's the closest thing that I could think of off the top of my head. It's not really moving too much today. So
it's silver.
Yeah. General Mills popped off the open. They had earnings. Adobe dropped. They had earnings. Adobe now down 7% today.
Yeah, I was looking at Adobe.
What you gonna do, Spy? What you gonna do?
Adobe might be a trade in a little bit.
Let's go to a daily chart.
It's not right now. But Spencer, don't you want JJN instead of SOV for nickel?
That's a better one. I was just at top of my head. I didn't know yet. Yeah, it's not as liquid. What's the volume today? It's a little bit. It's light every day. But yeah, JJN is a better proxy for the nickel if you don't have access to nickel futures, which most people don't.
What do you guys think of Fastly?
What is that, FSLY?
Yeah.
It went fast down.
What do I think of Fastly? Well, it is like the infrastructure of the internet.
Right, it's the thing behind the thing trade.
Yeah. Remember that one day Fastly went down? What day was that? I think that was that then? I think that was this day, May of last year. Fastly went, like, it was down one day. Massive outages, internet outages, and the stock went way down on that. So I don't know. What do I think of it? I don't understand the business at all, so I don't want to speak to that. But the chart kind of speaks for itself, I think.
Yeah, right. I think this has pretty good bounce potential. Honestly, I think that this might be a great swing if things turn around.
All right, guys. So for my trade to work here, I'm going to look for the SPY to take out the low now, the 445.80 level. Let's look for that to break down here. If the SPY breaks through that, I could see that a bunch of just kind of breaking down here. It's 10 o'clock. This is normally when we start getting the big breakdowns. I'm going to look for it to start weighing in here.
Just keeping an eye on the news flow, not seeing anything really.
I think Bullard comes on later today.
Yeah, there's a bunch. I mean, Powell already spoke.
There it is, you guys. You guys see my middle chart here? You see how I've been watching this? This was the rejection. This is when I started talking about it. Look how these last two candles have gone really fast towards that 445.80s. So looking good in GOLD. That's my trade on the right hand side, trading that off the 5-minute This is a symmetrical triangle breakout. Then we're trading Tesla here for a double rejection, triple rejection off that top there. We'll see what happens here. So you see how the SPY collects a huge wick down there? Those were people buying up the dip there. Let's see if it flushed through that level and kind of crushes those buys.
I'm going to add some shares to AMC here. My stop loss is going to be 1873. Tesla trying to bounce above VWAP. And you've got SPY testing VWAP here as well. If SPY closes a 10-minute candle above 447, I wouldn't mind taking some calls and have it possibly test the previous close, which is 449.59.
AMC, I got 1939 as VWAP. You push through that, this thing might pop again. We already have a pretty decent range today. Here we go. VWAP coming.
Yes, sir. Come on.
Careful with GOLD here.
Come on.
All right, took some AMC with you boys.
Sweet.
You guys getting ballsy. Getting ballsy. Let's see what you got, man.
Right now we've got an average of
We're
1937.
Right at VWAP, but it looks like it's getting rejected. We need it to build above to keep going.
I gotta admit, I don't think we're hiding today. I'm short in Tesla. You guys are long AMC. No hiding on this stream.
Not at all.
I mean, shorting Tesla is such a dangerous game. But as soon as he said that, I'm like, all right, good luck.
I was surprised he didn't take profits. I'm trying to go long.
I
but
could
went
have.
for the
All
SPY.
right. I could have taken like $70 off, but I mean, $70 wasn't gonna be a monster trade today. I was looking for a big boy.
Was there a moment for you guys where you're like, yeah, I don't think I can short Tesla ever? Was there?
Yes,
did you ever have?
yes.
I had that moment. Too. I'm interested to hear what yours is. I can start. Mine was
Right.
when we were watching them fire and land reusable rockets, and he landed a reusable rocket on a barge in the middle of the ocean. I was like, yeah, I don't think I'm going to short this guy ever.
Guys, that's SpaceX. That's not Tesla.
Same
Right.
Yeah, but who's it
Same
ran
guy
by?
running the company.
It's like, come on.
I mean, Ryan, to answer your question, the whole stock split trade thing
All
was
right, huge level now, guys. That 1005 level. Look how we rejected off there. I'm just pointing it out because if we get back above that, they'll want to get out immediately, and then you guys be like, "Well, you guys didn't tell me." But that level is the important level now.
Luke, I'd love to hear your moment in time where you're like, I'm not going to short this anymore.
My moment in time for not shorting Tesla is I talked to Ross Gerber 2 times when Tesla was below $1,000. And both times he said anybody who's not buying Tesla below $1,000 is an idiot. And I thought, like, that's just, there's no thesis here. This doesn't make sense. Sure enough, buy the dip in Tesla. It works. Like, all right, I guess that I just gotta not.
Well,
bet
that
against
it
this
actually does. If you look at the monthly chart, long term, I think that's where you buy Tesla. If you use the monthly chart since 2020, you've gotten huge support and rips towards the upside. An amazing risk to reward towards the upside in Tesla on the monthly chart.
I closed AMC here, by the way. If it sets up again, I'll take it again.
All right, guys. So we're getting towards that level. We're going to test here. The big thing for us is to reject, not hold above. Here, I kind of just got
look
out in GOLD, guys.
And look at this link that Neil just put in the chat as well.
that
Something
out,
new we're
Spencer.
trying, trading school. Benzinga trading school, $7 for 7 days. Literally no reason not to try it.
Oh wait, is that for me? Is that
Yes,
for
Those
me?
Spencer,
trading
that's for
schools
you.
are awesome, by the
All
way.
right, damn. Get on that.
We should actually have that be your promo code.
Oh, that's funny.
I want to be better than Spencer.
It's a little bit long for a promo code.
Yeah.
All right, guys.
I'll come up with a better one for you.
Therefore, it stinks. Okay. Do you want to mention our next speaker coming on in a couple of moments here? Tony Venosa, Senior Options Strategist at Schaeffer's Investment Research. So myself, Mitch, Ryan, Junaid, and
Luke.
Luke. Luke, I forgot you were here. Are going to hop off and let Tony do his thing.
Thanks, Ben.
All right, well, before you kick us out, I'm going to take a YOLO. We'll come back and see if I lost my shirt or not. I'm going to take a Tesla call, the 11 1100s got filled at 380. We'll see if this makes us money, or if Mitch makes fun of me tomorrow when we come back for trading.
Hey, we'll see what happens. I'll do that regardless, though. No worries, Zane.
He likes to fool around. He likes to goof around with people.
Oh man.
All right, guys. So watching this full Tesla, I have it drawn on it here for the rule of 3, guys. So I'm looking like I'm about to get the squeeze on, but there's no reason why I can't break it down technically here. There's 3 levels, 3 trends. It just held that 3rd support, could break above that 1006 level right now. And if we get towards that 1010, of course, immediate out there. But you guys can see it. That's why I love the rule of 3. I don't know if anyone could throw that up for a second there.
Sorry, I got you, man.
Don't worry, I just got squeezed.
We are gonna.
Sorry, man.
Yeah,
It's all good. I'm out. There you guys have it. At least for you bull traders that want to learn kind of a bullish pattern here. At least let's teach a pattern that I think works honestly awesome. I mean, I went against my own pattern here, and it's the rule of 3. When you get those 3 resistance tries, right? So you're going to look for a big drive out the gates. Let it create a high. Look for the VWAP to start holding. Once you get those 3 trends to hold, if your supports are holding, those 3 layers of supports, look for that one to hold on that pullback, and look how that cleanly that holds there. Then tests up towards that again. On the 4th try, I always look for the breakout, and I'm looking for also increasing volume on that breakout, and that's exactly what you get here. So that's the bulls taking control right there.
I'm going to scale out of the $1,100 calls. Still want to hold it for a possible test of around 1040 later today. I'm also going to try to front run SPY here. I'm going to grab the 447 calls. Got filled at $1.35, expiring today, because living life on the edge. Mama ain't raised no. You know what I mean?
that's what
I'm saying.
All right, we're gonna wrap, guys. Live trading with Benzinga. This show with these cast of characters goes live every single Monday, Tuesday, Wednesday, Thursday at 9 a.m. until 10:30 or 11 or whenever they feel like ending. So smash the like for Ryan, Zunaid, Mitch. Guys, thank you so much for hopping on today.
Absolutely.
And thanks for losing money. We appreciate it.
Hey, I made money today.
Ryan made money.
One more thing. If you want to join a trading community that goes all day, try out Benzinga Pro. If you haven't, why not yet? It's free. You can go try it right now. You can join our lovely community. We are doing this all day, every day, including the extended sessions.
Ryan going for that bonus. I love it.
And he makes it's free. Why not join?
Exactly. It costs nothing, Zunaid. And so
I agree with you.
See you guys tomorrow.
Pro.benzinga.com. See you guys
We
tomorrow.
charge Spencer for his subscription, though.
Yeah, I was wondering why he kept saying it's free, because I pay for it all these years. All right, Luke, are you ready to transition us to our next guest?
Yes, Spency. I'm gonna pull the agenda back up. We're doing our boot camp today, guys. We're picking a topic. We're diving deep. We just went through live trading. Next up, we are bringing on Tony from Schaeffer's. Spencer, you want to give us a little bit of a preview for what we can expect today? Oh, we lost Spencer. All right. I'll give us a little bit of a preview of what we can expect today.
I'm here, Luke. I apologize. I didn't realize you asked me a question. I didn't realize you were talking to me. I thought you were talking to a different Spencer.
Just talking to everybody.
Okay. So you want to preview the rest of the day? We got, I mean, the agenda is up there on the screen. We're talking. Here's the thing, though, right? Benzinga knows a lot of smart people. And it dawned on us that we should probably get these people on for longer than like 5, 10, 15-minute segments at one of our shows, right? Let's like actually get these people together on a stream, do some like long-form education. That's really what today is about, right? Long-form education. So Tony's going to be on for what, like half hour, 40 minutes here. And then every guest from here on out is going to be on for like an hour. So,
and I'm going to take that one step further. The whole idea of the boot camp is, again, we're doing a full day of education. Is that there are tons of webinars out there. There's tons of videos to watch. There's tons of things to read, and they all live in their own little ecosystem. They're 30 minutes long, 60 minutes long, etc. That's not enough to really get deep. The whole idea is we want to take you from zero to hero throughout the course of the day, and so that's why we string together this amazing group of educators so we can get deep and get to that expert level.
For sure.
So without further ado, I am going to bring Tony onto the boot camp stream. Tony, what is going on, man? How you doing?
Good. How you doing? Can you hear me all right?
I can hear you. A-okay.
Excellent.
Awesome. Did you have some fun watching our live trading?
I did. Interesting. You guys are good guys.
We have some fun with it. But Tony, I will step out of the spotlight, let you take over. And if you wouldn't mind, could you just give us a little bit of background on yourself first things first?
Absolutely. So good morning. My name is Tony Venosa. I'm a trader with Schaeffer's Investment Research out of Cincinnati, Ohio. I've been with Schaeffer's for the past 12 years and have over 2 decades of trading experience. Schaeffer's Investment Research has been around for over 40 years, founded by Bernie Schaeffer. We offer real-time option trading services to investors, as well as print and media educational offerings, including daily, weekly, and monthly newsletters. I'm excited to spend the next 30 minutes giving you a brief introduction on how I use expectational analysis to add an edge over other market participants. What does it mean to trade with an edge? What I want to convey to you today is the importance of having an edge, which is having a slight advantage over other market players. You must develop and capitalize on your advantages because sooner or later the crowd will catch on and the edge will disappear. At Schaeffer's, whenever we enter a trade, we must answer the question, why now? Why should this stock move in the direction you're anticipating, and why should it move now? It sounds simple enough, but it's extremely important to ask yourself this question whenever you execute a new trade. And you should have an honest answer, or you have no business entering the trade in the first place. Also, you should ask yourself, what are 1 or 2 things that you know that others don't? It doesn't have to be complex or illegal, just something that most market players are not observing or taking notice in a particular stock. We are trying to avoid spots where other people will be inclined to enter or exit. We want to identify entry spots where the crowd is unlikely to join us. And finally, are you using quantified data? At Schaeffer's, we employ quantitative analysts whose job is to provide us daily with numerous screens and models based on backtests of various types of technical and sentiment data that provide us with potential edges. Today, I'm going to show you some of the ways we answer these questions when we issue trades. And by the end of my talk, you will benefit by learning some of the edges we use to find winning trades. The single most important takeaway I want you to remember is you must have an edge to consistently profit in the markets. Not only because it'll lead to profitability, but it'll also build the confidence you'll need to succeed. Our methodology at Schaeffer's is a 3-tiered approach to analyzing the markets, which Bernie Schaeffer aptly named expectational analysis, which we believe gives us a leg up on the competition. We use a combination of fundamental analysis, technical analysis, and investor sentiment to uncover trading opportunities the rest of the crowd is missing. Fundamental analysis is the segment most people are familiar with. It involves valuing companies based on future earnings growth and revenues. Many buy and hold investors may use such metrics as price to earnings ratios to determine whether a company is undervalued. I will briefly discuss some of the short-term indicators we use to drive our decisions for option trades. Technical analysis has become more and more popular over the years and essentially the study of past price action and trading volume. It can include such things as price level support resistance, volume, momentum, overbought, oversold indicators, breadth, price patterns, as well as quantitative systems based on backtesting of buy and sell signals. Sentiment is the third piece of the puzzle that we think is not as widely used as the other 2, but has been gaining in popularity over the years. Sentiment analysis is the study of qualitative and quantitative indicators in an attempt to gauge how bullish or bearish the consensus opinion is on a given stock, sector, or market. It is the moods, beliefs, and feelings of the crowds. These emotions and feelings can be affected by a variety of things. The most accurate indicators reflect what a group of investors are actually doing as opposed to what they are feeling or saying. At Schaeffer's, we take a contrarian approach to sentiment analysis by seeking out situations where price runs counter to a security's price action. So let's first discuss some of the ways we use fundamental analysis. When doing short-term trading, we are not looking at traditional discounted cash flow or dividend discount models for projected 5 or 10-year valuations. We are looking for catalysts that can move the stock in a short time period, and understanding where the company will be in a decade from now doesn't give us an edge in our typical time frame of 1 week to 6 months.
And Tony, can I hop in with a question really quick?
Yeah.
So you're talking about your time frame, 1 week to 6 months.
Yeah.
How are you choosing that time frame? Like, is that a decision you're making before you head into the trade? Is it something, as the trade develops, how do you?
It's based on the diverse products that we offer our subscribers. So we have products that cater to really short-term options trading from anywhere from 1 day to 5 days, or longer-term trades from anywhere from 3 to 5 months.
Okay, got it. Awesome. I appreciate it. And now you're going to get into some of those catalysts, it looks like. Is that right?
Yes, correct.
All right, let's hear them.
A stock buyback is a way for a company to return capital to its shareholders. The other more common way is for a company to issue dividends, which represent a percentage of the company's earnings paid out in either stock or cash. We are looking for buybacks of 10% or more, which is significant and could be perceived as a strong buy. During the past 15 years, it has become standard operating procedure for many companies to buy back their shares. A company repurchases their shares in the marketplace, thus reducing the number of outstanding shares available, and will effectively increase the company's earnings per shares. Obviously, this is just one key aspect and should not be viewed as the sole reason for jumping into a stock. The fundamental implications of a stock buyback are merely one more thing to consider when picking stocks. This is a partial list of some of the top buyback announcements of the latter part of 2021, ranked by percentage of outstanding shares set for repurchase. I weed out some of the lesser liquid names so we can actively trade them for our subscribers. As you can see, there are some big winners here, and there are also some big losers. So you cannot just blindly buy based on the buyback announcement alone. It is not a timing tool. You will need additional tools to find a more precise entry spot that ensures a solid risk-reward situation. The first thing I do is create a watch list of the major buyback announcements for stocking purposes. This chart shows the buyback announcement for Crown Holdings, ticker CCK, which announced a 23% buyback plan last December, which equated to a $6 billion purchase. Shares have been showing solid relative strength so far this year, up more than 20% as of March 5th. This is also a partial list of the current top buyback announcements so far in 2022. These names are actively followed by me in a watch list specific to buybacks. Not all buybacks will result in solid up moves, hence my reason for not being a standalone tool. This chart shows the buyback announcement for HCA Healthcare, which announced an 11% buyback plan near the end of January of this year, which equated to $8 billion. Like Crown Holdings, HCA shares have been showing solid relative strength in 2022, bucking the corrective trend in the general market so far. Insider transactions are legal transactions conducted by insiders, usually officers, directors, or CEOs, who buy and sell stock in their own companies. They must report their shares to the SEC within 2 business days. Knowledge of an insider buying or selling a large number of shares can be valuable information to an investor. SEC rules prevent insiders from trading company stock within any 6-month period. So if an insider is buying their company's stock, an investor can reasonably assume the company's fundamentals are in decent shape. Studies show that insider buying and selling is a meaningful predictor of future returns, which is why it makes sense to follow such transactions. A 2019 paper titled Indirect Insider Trading shows that trades made in indirect accounts are more profitable than direct trades in their own accounts. An indirect account is one where the insider has control, such as a family, trust, retirement, and foundation accounts. This is a direct quote from this paper. Indirect trades better predict earnings surprises and large price changes and are associated with opportunistic insiders who make profitable trades before earnings announcements or have short investment horizon. Insiders are less likely to trade through indirect accounts following periods of intense regulatory scrutiny. This is a list I'm currently following of indirect purchases by insiders. Again, this list is limited to some of the more liquid names we trade at Schaeffer's.
And Tony, sorry, let me hop in really quick with one that I'm long. RKT Rocket, that was another one that had one of those big insider announcements just yesterday afternoon, maybe. And so that's another. If you have liquid names up, that's one that I've had my eyes on. Similar sort of trend. I believe they have that stock buyback active right now as well.
Rocket did?
Yep.
Okay. Anyway, so on February 23rd, one of the directors of Dillard's purchased $4.6 million worth of stock in an indirect account. This chart shows the price action through March 8th. Shares continue to hold up quite well despite the broader market selling pressure. Here's a list of indirect sales by insiders. This list is slightly longer than the purchase list, which makes sense due to the broader market's weakness during the first quarter of 2022. On February 28th, Michael O'Sullivan, general counsel of Snap, sold nearly $500,000 worth of Snap shares. On March 3rd, I recommended to subscribers to purchase the Snap April 36 strike put for $3.70. 3 days later, we sold half the position for 100% profit. Earnings season is every January, April, July, and October. Playing options ahead of the firm's earnings report is risky, though it can certainly result in large profits if the directional move is predicted correctly. Following the news release, the unwinding of extreme sentiment toward the shares, whether bullish or bearish, could contribute to a prolonged directional move. Initiating a trade after the earnings report can be just as profitable as a pre-event play while reducing some of the risk. On my charts, I plot the earnings reaction day's closing price as a horizontal line extending through to the beginning of the next earnings period. The following Disney chart is an example of how I plot the earnings reaction closes on the chart, which I feel act as significant hidden support and resistance levels, as well as inflection points that often get retested, offering excellent entry and exit points. Here's the daily chart of Disney. When the red and green horizontal lines begin, it depicts the earning days for Disney. When price action trades above the latest earnings day, the line is green. And when the price action trades below, it turns red. What I want to show you is how price tends to respect these levels around earnings reactions. As we can see on the far left-hand side of the chart is the August 2020 earnings upside gap, which was represented by the green horizontal line. Shares came back on 2 occasions in September and October to retest this level. And finally, in November, shares closed the August gap before the next earnings in November, which resulted in an upside breakaway gap. Another pattern I want to show you is the first 3 earnings periods of 2021, which are contained in the yellow circle. Shares oscillated around each level, going really nowhere for much of 2021, and in hindsight, can be viewed as a major distribution period until November earnings report, which caused a sharp breakaway gap lower from the tight consolidation zone created during the first 10 months of the year. I believe there are numerous patterns and insights to gain by observing earnings reaction days and how shares can often revisit these levels throughout the quarter. Let's quickly move on to technical analysis. I'm going to now briefly discuss an aspect of technical analysis that I think is unique and not discussed frequently. Blind levels are levels you won't see on most charting platforms, and it does take some extra effort to create these, but I assure you it is well worth it. These levels show a potential for support or resistance that most traders are unaware of because most may be looking for your typical price level support or resistance. There's nothing wrong with this type of analysis. In fact, I use it also. But I would like to find levels to show me potential entries and exits with the objective of avoiding crowded trades and also answering the question, why now? The optimal trades to make are the ones where multiple levels come together, thus strengthening the case for support or resistance. Our quantitative analysts run screens every morning to aid us with this type of analysis.
And Tony, can I hop in with a question real quick?
Sure.
You mentioned crowded trades. Can you just define that for us a little bit more?
A crowded trade
why you
is
don't like them?
Basically a trade where it's a popular area where it's where most people think they should get in, like a bull flag breakout or something. It's pretty obvious to any chart reader 101, you know.
Yep, I get it. So you're going more under the radar. That's where there's more alpha, more money to be made.
Correct.
Awesome.
We believe paying attention to a company's market capitalization level can reveal important levels not found on a typical price chart. It amazes us how market cap round levels can often act as magnets while also serving as support and resistance levels. Here's a market cap chart of Microsoft. Microsoft hit the round number $1 trillion market cap level for the first time in April of 2019. It was quickly rejected until a few months later when it successfully overcame this key level. Shares held above this level until late fall, where shares rallied into the first part of 2020. A pandemic-induced sell-off sent shares back to retest this level in the spring of 2020. Flash forward a year later to April of 2021, as shares tried but failed to hit the $2 trillion market cap level. Round number market cap levels are a great way to find potentially hidden support or resistance levels and can also be used as targets. Year-to-date return levels, specifically the 0, plus or minus 10, 20, 50, and 100% year-to-date levels, are also extremely important to observe, as they will often serve as support and resistance. This is an example of our year-to-date screen from March 8th, which our quantitative analysts route to us each morning. It shows stocks that are trading near significant year-to-date levels, which we believe have a tendency to act as support or resistance. This is a 60-minute chart of fertilizer producer Mosaic since the beginning of 2022. You can see on the chart how shares respect these year-to-date levels quite well. Shares made an initial rally to begin the year, but stalled at the plus 10% year-to-date level shown in turquoise. Near the end of January, shares overran the 0% year-to-date level, but quickly rebounded and held as support. Shares rallied in February, but found the plus 20% year-to-date level shown in gold to be formidable resistance. In late February, shares broke out after the fifth test of the 20% level. On March 8th, Mosaic was trading near the 50% year-to-date level shown in green, which made it onto the year-to-date screen. This level served as a roadblock for shares until a strong up move sent shares soaring through this recent consolidation just 2 days ago. I can't overemphasize an awareness of unique levels on a price chart. It's an extremely important attribute of any successful trader. A stock's IPO or initial public offering price and the respective multiples are also important to observe. Perhaps because significant institutional sponsorship holds shares with a cost basis of its original IPO price. We see multiples act as targets for these institutions to take profits. Here's another screen sent to us each morning. It shows stocks trading near its IPO price and multiples of the IPO price. These levels, not typically shown on charting programs, have an uncanny ability to act as magnets. This chart is of Chinese car maker Li Auto, ticker LI. On March 8th, this stock appeared on our screen as it was trading 1% below the $23 level.
And Tony, real quick, like when you're looking at these IPO multiples, this is super interesting. I don't think I've heard this one before. You're not just looking at recent IPOs. It looks like you're looking at, like I think I saw Visa, or Verizon, or one of those.
I would say stocks that have had IPOs in the past 4 to 5 years.
Okay.
And the more recent ones, yes.
Okay. Awesome. This is a neat concept.
On March 8th, this stock appeared on our screen as it was trading 1% below the $23 level, which is 2 times its IPO price. Looking back over the history of Lee, we can see many instances where shares respected these multiple IPO levels. On the left-hand side, in late November of 2020, shares made a climactic high just above the $46 level, which is 4 times its IPO price. And since June of last year, shares have been contained between the 2 times IPO price and the 3 times the IPO price, both acting as strong support and resistance. Okay, let's move on to odd moving averages and quantified data. At Schaeffer's, we follow several moving averages where some are popular and others not followed as much. We find stocks will respect certain moving averages. Specifically, we follow the 40, 80, 160, 200, 320 unit moving averages on the monthly, weekly, daily, and 60-minute time frames. Each stock has its own unique way of attaching significance to one or some of these moving averages. Some stocks, while in uptrends, like to experience deep pullbacks to longer moving averages, while others prefer shallow pullbacks to shorter moving averages. With the help of Schaeffer's quantitative analysts, we have access to daily screens that help narrow our focus. This is a sample of a screen from March 7th, which shows stocks that have pulled back to their 40-day moving averages and their respective returns and win rates for 5-day and 21-day periods. This is a chart of biotech company BioCryst, ticker BCRX, which pulled back to its 40-day moving average, shown in red, on March 7th. During the past 3 years, BioCryst pulled back to the 40-day moving average on 4 separate occasions. The average 5-day return was 4.5% with a 75% win rate. The average 21-day return was 7.5% with a 67% win rate. Obviously, the sample size is small, so I do not endorse it as statistically significant, but it is a good starting point for finding stocks that are pulling back to not widely follow moving averages. I encourage you all to experiment with some of these unpopular moving averages that may provide some valuable insights. Let's discuss the final piece of expectational analysis, sentiment analysis. This was a quote in Humphrey Neal's book, The Art of Contrary Thinking, which I think sums up the approach we take on sentiment. At Schaeffer's, we take a contrarian approach to sentiment analysis by seeking out situations where the prevailing sentiment runs counter to a security's price action. I'm going to quickly run over a few sentiment indicators that I personally use in my analysis. Short interest is one of my favorite go-to indicators for sentiment. It measures the level of investor pessimism by the number of shares sold short on a particular stock. There are 2 ways we measure the level of short interest. The first way is as a percentage of a stock's total float, which is the total number of shares of a company available for trading. A reading of 10% or more is viewed as heavy pessimism. The second way is called the short interest ratio, which is the total number of shares sold short divided by the stock's average daily volume. The ratio represents a rough estimate of how many days it would take investors to buy back all their shorted shares at the stock's average daily trading volume. From a contrarian viewpoint, we see this pessimism as bullish for the stock if it is in an uptrend. Because a short seller has unlimited risk, the pressure to cover will build as shares continue to march higher. There is a flip side to this analysis. Elevated short interest can be viewed as bearish in the context of a downtrending stock. We consider the bears to be in control of the stock and continued downward momentum give the shorts little reason to exit their winning trades. Here's another screen that we receive every 2 weeks after the newly released short interest data is made public. This screen attempts to find stocks with high short squeeze potential due to the large losses on the bear side. This screen was sent to us on January 14th of this year. As you can see, there are multiple energy names near the top of the list. Fast forward 6 weeks from January, and we witnessed some spectacular moves in these same energy names.
And sorry, Tony, let me hop in for a second. When you're looking at losses on the short side, is there like a certain percentage that it starts to become interesting for you? Like is, a 10% loss in the shorts, is that interesting? Is it 50%? Is it 100%?
We had the list ranked from the highest losses all the way down, but yes, the higher is obviously the better. So, but yeah, it goes all the way down to just break even basically. So we can go through each one and decide if there's other factors or drivers that we can look at to get into a trade.
Awesome. All right. Thank you, sir. Appreciate it.
So, in fact, our founder, Bernie Schaeffer, recommended to subscribers on January 24th to purchase the Peabody Energy, ticker BTU, April 10 strike call. Our research had determined that Peabody Energy had a 45% increase in short interest during the past year, and the average price of entry for the increased short position was $6.55. As of January 14th, Peabody closed at $12.47, estimating that the bears were sitting on a 90% loss on their position. Bernie recommended a profit target of 200% on the call, which was achieved 14 days later on February 10th. Another real money sentiment indicator in our toolbox is the buy to open put call ratio, which we feel can reflect degrees of optimism or pessimism in a stock or index. We calculate the put call ratio by simply taking the number of puts bought to open on the day and divide that by the number of calls bought to open on that day also. We can calculate these on individual stocks, indices, or the overall market. The theory is that near market lows, the put call ratio will be high, usually greater than 1, reflecting more puts being traded relative to call options, thus reflecting pessimism on the stock. When this ratio is near or at an extreme, it can mark a bottom. Conversely, an extreme low in the put call ratio can reflect strong optimism in the name, which could signal a potential top. Thus, the put call ratio is mostly viewed as a contrarian indicator when it reaches extreme highs or lows. This screen displays stocks that have a 10-day buy to open call put ratio greater than 1, and it ranks in the 90th percentile of its own annual range. This means a large number of calls are being purchased relative to puts, which is usually a sign of extreme optimism among option players, and from a contrarian point of view implies bearishness. But as you can see in the last column, based on back tests, some stocks actually outperform when call purchases outweigh put purchases. The highlighted ticker is Western Digital, ticker WDC, which on February 29th showed its 10-day buy to open call put ratio at 9.27, ranking in the 94th percentile of its annual range. According to our back test, Western Digital shares declined 1.84% on average over a 21-day period. This is significantly less than the 21-day average return during all other times, which was positive at 1.95%. That day, we issued an alert to purchase WDC puts, which did go on to drop in the following week. This trade still remains open today. That's all I got for you today. I hope everybody watching me were able to get at least one nugget of insight that you can adopt in your own trading. If you'd like to visit us at www.schaeffersresearch.com, it'll be great. Thank you so much and have a great day.
Awesome. Tony, appreciate you hopping on with us.
Thank you so much for having me. I appreciate it.
Absolutely. All right, everyone. Let's do a couple check-ins on the market. I'm going to throw my screen back up here. I know it's a little bit small. We got a lot that we're looking at. A lot of questions flowing through about the meme stocks earlier this morning. We'll use GameStop as the proxy, or maybe we'll even just pull AMC2. This is a 2-day chart, 5-minute candles. We are hanging out right around even. The hopes and dreams that we were going to be ripping to highs and ripping straight up have not played out yet thus far. We pull up AMC. It's the same sort of thing. Chinese stocks using Alibaba as the proxy, still strong, still outpacing the S&P 500 after that early morning dump. And that's what I have for you guys. There's our quick little market update. Other names that you want us to check out, drop them in the chat. We'll keep an eye on them throughout the day. Again, there was the China trade was one of them that we saw a lot of folks chatting about. Meme stocks, of course, given these past 3 trading sessions, were another one. And I'm going to do one more thing. Boom, check it out. On the screen, we have our agenda for the day. We are doing something a little bit different today than our normal live programming. We are running our boot camp. That is where we are taking a day where we want to have one topic. We want to set up some education linearly so we can really dig deep into something. If you have questions that come up or ideas that come up when we're hearing from one educator, maybe it's applicable to the next person that we have or something along those lines, throw them in the chat. I'm reading every single chat message that comes in. Nobody gets ignored. If you don't believe me, I see that Quantum in the chat says that he's going to YOLO some December 490 spy calls. Okay. So I'm reading every single one. That is my job, to be the voice of the chat, to be the voice of the people. And again, if you have stocks that you care about, if you have stocks you want us to take a look at throughout the course of the day, throw them in there. We will check them out. We'll pull up one more ticker, YOU. Umar in the chat, he's been throwing this one in since pre-market, like maybe since let's call it 8:45 a.m. We didn't talk about it, and he's absolutely nailed it. When we started seeing this stock earlier this morning, it was $23. Now it's 25.5. So congrats on that you call. That's why the chat is important. But all right, guys, without further ado, I want to bring Brian Feroldi onto the screen with us. Brian, how are you doing today, sir?
Morning, Luke. How are you?
Doing well, doing well. That's a cool background you have. You're somewhere sunny. Where are you coming to us from?
Lovely Rhode Island. I don't know if that counts as sunny, but it's a good day today.
All right. Well, I'm looking out my windows here in Detroit, Michigan. We are dark, we are rainy, and it's still probably somewhere around 35 degrees. So it looks good at least.
You got better background lighting than I do, though.
All right, I'll take that. All right, Brian, I will let you take it away, sir.
Sure. Hi, everyone. Thanks for having me. My name is Brian Feroldi. I've been investing in the stock market for just about 20 years. And the topic that I was asked to present on is called Picking a Hot Sector. Boy, did I take a lot of artistic license with that. My personal investing style is long-term buy and hold. I try and look for great companies. I try and own great companies for long periods of time and have them do the heavy lifting. So that's where a lot of my talk is going to be focused on today. But I have plenty of information here about finding great companies, great stocks, owning great stocks, and why you should go after that. So let's begin. So let's start with the question that I think should be on people's minds when they are, if you're here to figure out what is the hot sector. To me, when you're thinking about picking a hot sector or a hot stock, the real question that you're trying to answer is how can I make money in the stock market? That's why people are interested in finding hot stocks in hot sectors. They're looking to make money in the stock market. Now, there are a number of ways to invest in the stock market. As I said, my style is long-term buy and hold focused. So that's how I answer the question, is how can I make money in the stock market? But let's back up from even that question there. Beyond how can I make money in the stock market, the question behind that question is this: how can the stock market help me to achieve my financial goals, right? That's why people invest. We're looking to put money into the market so that we can achieve our real world financial goals. Could be buy a house, take a vacation, retire, etc. So let's start there. What the heck are your financial goals? This is a step that I see so many people just skip when they try and get into the stock market. They just go right to, tell me what stock to buy, tell me what sector to invest in. I want to just infinitely multiply my capital today, never asking themselves, what the heck am I investing for? So I think we should back up for a second and talk about this for a quick second. This is an investor policy statement. This is a practice that I think everybody that's going to be investing in the market should go through with their self. Write down rules for yourself. What are you investing for? How are you going to achieve your goals, etc. So here's my investor policy as it stands today. So what I'm after, the reason I'm investing in the stock market is I'm after financial independence. I want to work on my own terms. I want to live exactly how I want to live. I don't want to ever have to answer to anybody else. And I want to work on what I want with who I want for as long as I want. And I want to be able to walk away at any time without having any negative consequences for my family's lifestyle. So that's what I'm after. I'm after financial independence. How do I get there? Primarily, I'm focused on long-term growth. I'm going to invest in stocks, bonds, cash, real estate, even more recently, a little bit of crypto. So that's how I'm going to achieve financial independence, is by investing for long-term growth. Okay, what's my time horizon? My time horizon is measured in decades. I have a long-term time horizon. I'm after financial independence in the long term, and I can be patient as I take the journey to get there. Okay. Another question important to ask yourself: do you have any short-term money needs? For me, the answer is no, but you might be saving up for a wedding or a car or a house or a vacation or to fund schooling or something like that. If you have short-term money needs, you need to put that into your investor policy statement and be able to focus on that before you focus on your longer-term money needs. Another thing to ask yourself is, what's your risk profile? Mine is, I would say, moderate. I can handle a moderate amount of risk. And I define risk as different than volatility. So my volatility profile is high. Because I'm investing for the long term, because I don't have any short-term money needs, I can handle a lot of volatility in my portfolio. All right, so that's what I think people should start with: an investor policy statement. Really think through what you're investing for, what your goals are. Now, let's talk more about the how, the how we're going to grow our money. Well, I just absolutely love this long-term chart that was created by Jeremy Siegel in the wonderful book Stocks for the Long Run. He looked at investment in various asset classes over essentially the history of the United States. And this chart shows clear as day, if you want to grow your wealth, the place that you want your long-term capital historically has been the stocks. So if you invested $1 in a variety of asset classes in 1802 and held that dollar to 2012, $1 became $700,000 if invested in the stock market. And that's after accounting for inflation. Those are real returns. You can see that bonds, bills, okay places to have your capital. Gold, not a great place, and the U.S. dollar has been a disaster place to just keep your capital. And these numbers are from 2012. Fast forward to today, those stocks are worth a few $1 million, and the U.S. dollar, especially with inflation, is worth even less. So because of this, this informed my personal lifetime asset allocation strategy. So I'm currently 10 years away plus from needing any of my capital to fulfill my financial needs. So because of that, I want 90% plus of my capital in stocks, 0 bonds, and the remaining 10% split between cash or real estate investment trusts, maybe even a little bit of crypto. And I'm going to be reinvesting all of my dividends. As I get closer to needing retirement or financial independence, that's when I would gradually start to shift my asset allocation to become more conservative over time. All right. Well, thank you for indulging me there. The rest of my talk is going to be focused on this, which is what I think people are here for: stocks. Let's talk about investing.
You say
in
that,
stocks.
but this is gold. I mean, this is great.
Thank you. I'm happy to go over as much of this as you want, but I really want to give people what they came for, which is talking about stocks and investing in the stock market. So the rest of my talk is going to be focused on this: finding, buying, and owning multi-baggers. That's what I'm after with my equity capital, my stock capital. I'm looking for investments that I can take $1 and turn that dollar into $5, $10, $20, $50, $100. Multi-baggers. This is what I am after. Now, why do multi-baggers matter? Why shouldn't we just settle for quick 5, 10, 20% gains? Why do they matter? Well, my friend Ian Castle had a wonderful tweet that I just love that talks about this. He says, it's humbling, inspiring, and even a bit scary when you realize that one great investment can make your year, decade, and even career. One great investment can make your career. There's no better example of this than this guy here. If you don't know who this is, this guy's name is Benjamin Graham. He wrote one of the best books on investing ever. This is widely considered to be the father, the inventor of value investing. He was Warren Buffett's teacher at Wharton, and he, over his lifetime, owned dozens, hundreds, maybe even thousands of stocks. He was looking for cheap stocks that could become less cheap later, and he was trying to buy something for less than it was worth and sell it for what it was worth later. Well, what most people don't know about Ben Graham, even if they know about him, is that Ben Graham's best investment ever was in a company called Geico. Geico. So in 1948, Ben Graham broke so many of his own investing rules when he discovered Geico. He just fell in love with Geico, the business. So he bought 50% of Geico in 1948, 50% of the company, spending $712,000 to do so. Now, that was about a quarter of his partnership's capital at the time. That was way more than he put into any other stock, but he was so in love with Geico, the company, that he decided to break his rules and do so. So how did that work out? Well, in 1948, that $712,000 grew to $400 million by 1972. He made more money off of his Geico investment than every other investment that he made combined by a factor of many. Literally, Geico, his investment in Geico, made Benjamin Graham's career and was responsible for essentially all of his outperformance over time.
That's crazy.
Yep. Isn't that nuts?
Yeah.
That's
when you first put it up, I read it as like 4 million. I'm thinking 700K to 4 million. Nope.
400 million in 1972.
Yeah, that's nuts.
It's nuts. Now, here's another investor you might be more familiar with in recent times. If you don't know who this is Masayoshi-san, the founder of SoftBank, making the greatest deal in modern business history. He is with Jack Ma, the founder of Alibaba, and Masayoshi-san spent $20 million to buy 30% of Alibaba in 1999. 30%. Now, that investment was one of the greatest investments ever. That investment is currently up 5,000-fold from that number. 30% of Alibaba is currently worth $100 billion. And Masayoshi-san and SoftBank have made some stinker investments since then. WeWork is a shining example of how much capital he poured into that business and lost. But it doesn't matter. It doesn't matter because he made this investment in Alibaba, and he has done so unbelievably well for his shareholders over time. But another example of a manager very much making their entire career on one superstar investments. Now, are these flukes? In some ways, they're flukes. But believe it or not, this is how investing works. I love this study by a company called Blackstar Funds. So they looked at the collective returns of stocks on the U.S. stock market over a 23-year period, 1983 to 2006. And what they found was that the bottom 75% of stocks over that time period had a collective return of zero. Zero. The 75% of stocks collectively returned zero. Conversely, 25% of stocks, so a minority of stocks, were literally responsible for 100% of the gain of all U.S. stocks over that time period. So if you didn't get that 25% of stocks in your portfolio, your collective returns were zero or even negative. Another study by JP Morgan and FactSet over a 34-year period found something similar. So they looked at the median, the returns of stocks when compared to the Russell 3000, which is a very popular index with thousands of companies. And what they found was that the median company had a negative return when compared to the index. The median company underperformed the index. However, about 7% of stocks, 7%, were so huge winners, were such extreme winners that they were responsible for basically all of the gains of the index. So it's these multi-baggers, it's these companies that go up and just defy gravity that drive all of the stock market's returns over time. Now, drilling down to that a little bit further, since this is a focus on sectors, I have good news. Mega winners, those mega winners, can be found in basically every sector. of the market. However, they're not evenly distributed. They're not evenly concentrated. What you'll notice is that consumer staples, about 17% of consumer staples, are mega winners, are multi-baggers. Conversely, only about 5% of energy companies are multi-baggers. So not all sectors are created equally. If you're going to be going hunting, I think it's best to look in sectors that have a higher concentration of mega winners, consumer staples, healthcare, for example, consumer services, and avoid those that don't have a high concentration. So utilities and energy. Now, another way of looking at this, a more detailed look, was over a 4-year period. McKinsey studied what sectors deliver outsized returns to investors. Now, this is over only a 4-year period, so keep that in mind. But what this study found was that some industries were gold mines for investors: software, tobacco, aerospace and defense, media. These companies delivered huge excess returns to investors. Conversely, utilities, construction, airlines, metals and minings, these were terrible places for capital. So for myself, when I'm thinking about what sectors I want to invest in, I think along this lines. I think about how awesome is the industry that I'm going to be looking at. So for me personally, I like to invest in the software as a service industry. I like to invest in payment companies, platforms, medical devices, consumer staples. This is where I have the majority of my investments. Conversely, I largely avoid airlines, oil and gas companies, industrials. And while automakers is on there, I consider that to be legacy automakers. Funny enough, while I'm not interested in the auto sector, my number one investment and my biggest winner of all time is Tesla, and an auto company of sorts. All right, so what is it? Now that we know I'm going after multi-baggers and we have a couple of sectors figured out, it's also important to figure out, well, what the heck is it? What makes a company a multi-bagger? What is the thing that drives long-term multi-bagger returns? This great study by BCG Analysis and Morgan Stanley showed that over a 1-year period, the thing that drives outperformance is this. It's the multiple. It's the valuation that you pay, right? Over a 1-year time period, valuation is the biggest factor to doing well. If you buy a stock that trades for 15 times earnings and that stock goes to 25 times earnings, that's what matters in the short term. The valuation that you pay. Multiple expansion, you make money. Multiple contraction, you lose money. However, if you zoom out and go over longer periods of time, 3 years, 5 years, and 10 years, over 10-year periods, my investing time horizon, this is what matters. It's changes in sales and profits that account for nearly 90% of a stock's return. And look at the multiple. It shrinks down to just 5% of a stock's what drives shareholder returns. So because of this, I'm focused on finding companies that I think can substantially increase their sales and their profits over a 10+ year time horizon. That's what I'm after. That's what I think delivers multi-bagger returns for investors. And if you look back at the biggest winners of the last 20 or 30 years, that's exactly what we've seen, right? Everybody knows these companies have been mega winners, right? Great places to put your capital. But these companies are right up there with them. Look at this, like United Health Group, Old Dominion Freight Line, Market Access, Tractor Supply Co., Monster Beverage. The companies from a wide range of sectors have delivered enormous returns for investors. And when I say enormous, I mean it. Take any of those stocks and any of them, and they have been tremendous winners. All you need to get was one of those in your portfolio, hold it for a period of 10 or 20 years, and your financial needs are essentially met. But you know what those companies also have in common? These are some of the biggest winners ever over the last 20 years. And here's the pain that they put their investors through during their huge bull runs. All of these companies, without exception, put their shareholders through immense periods of short-term pain. So if you, like me, over the last year or so, have felt a lot of pain from investing in high growth companies, just know that that's what happens. This is the price that we have to pay as common stock investors for sustained, the chance to earn sustained life-changing returns. It's occasional periods of massive amounts of pain. And it never feels good when this happens to a stock that I hold, but it's a part of the process. It's a part of the process, which is why at the front, when I talked about the investor's policy statement, I said, what are your short-term needs? Because if you have to deal with this and you're dealing with this with your wedding fund or your car fund or your down payment, you're not going to do well. You have to be willing to tolerate this if you're going to be an individual stock investor for the long term. All right, now let's talk a little bit more about the traits. Wonderful book on multi-baggers. I want to point out it's called 100 Baggers by a guy named Christopher Meyer. He did a study of all of the companies that delivered at least 100x return to their investors. And he found some traits that these companies had in common. First off, they tended to be higher quality businesses, high quality businesses. Now, what does that mean? That means the underlying economics of the business were favorable. That tends to mean they had recurring revenue. They had stable and expanding margins. They had recession-resistant demand. They generated earnings and free cash flow. They had a strong balance sheet. They had a competitive advantage. So they tended to be higher quality businesses. Second, they tended to have high quality management team. What does that mean? A lot of them were run by their founder. So the person that started the business. They tended to have high levels of inside ownership. So management team thought like owners, acted like owners because they were owners. They had a history of using capital effectively to grow and reinvest in the business. And they were good stewards of capital. So they thought long-term about the long-term needs of shareholders. Three, they were growing fast. The companies were rapidly expanding, rapidly adding sales to their companies. And they were able to do so. They were keep all these things going for an extended period of time. Now, that last part is really, really important because plenty of companies can grow fast over a 1-year period, 2-year, 3-year period. But it's the ones that grow at an above average rate for 5, 10, 20 years that really deliver the returns for investors. Now, what allows a company to grow at an above average rate for a long period of time? Warren Buffett said it best. The key to assessing how much an industry is going to affect society, the key to investing is focusing on a company's competitive advantage and, above all, the durability of that competitive advantage, the moat. Why does this matter? Really simply, if a company's out there growing its profits, we live in a capitalistic society. Competitors are eventually going to take notice and say, I want some of that. And they're going to lower prices, offer a competing product, do whatever they can to steal that company's profits. If you don't have a moat that protects your profits are going down. So this is why Buffett is so focused on finding companies with a competitive advantage so that you can protect your profits from the forces of competition in a capitalistic world. So what are moats? Well, let's talk about what are not moats first. These are mistaken moats. These are companies that look like they have a competitive advantage but don't. So what is a not a moat? Just because a product is popular doesn't mean it's a moat. The Sony Walkman, great product, very, very popular. Didn't provide Sony with a moat. 2, market share is not a moat. Just because you have a high amount of market share in an industry doesn't mean that is your moat. Rewind the clock, 30, 40 years, 50 years? General Motors owned the U.S. auto market. No longer. Its market share has eroded. So market share is not a moat. Boom times. This one is particularly tricky. Boom times, when everybody in your industry is doing well because demand is so high. That's not a moat. Just because a company's revenue is growing doesn't mean that it's automatically got a moat. It could just be riding a temporary wave. And then fourth, management is not a moat. There have been some great CEOs out there, but a management team isn't itself a moat because a management team can leave. It's the underlying characteristics of a business that are really the moat. So what are the moats? Moats are things like a network effect. The more people that join a company or use a company's product, the more connected they are to others. eBay, classic example. Facebook, classic example, right? You want to be on Facebook or another social network because that's where all your friends are. That's a network effect. 2, switching costs. It's onerous for you as the consumer to switch away from that company's product. Ask yourself, when's the last time you changed banks? When's the last time you changed brokers? It's a pain. It's a pain in the butt to do that, right? It's a real big hassle. Because of that, we don't tend to change those things very much. Those are switching costs. 3, low-cost production. You can sell something on the market at a lower cost than your competitors. Costco's immense buying power gives it a competitive advantage over other retailers. Same for Walmart. 4, intangible assets like a brand. You have a strong brand that people want to buy from. Apple. People want to buy Apple's products because of the brand name. Tiffany's, Coca-Cola, those are strong brands. Another is a regulatory license like Moody's. Moody's has a license to rate bonds that I can't go out and start my own bond rating agency. The final one is counter positioning. This one requires a little bit of explanation. This is when you have a differentiated business model that would cause pain to your competitors. My favorite example of this is Netflix versus Blockbuster. In the beginning, Netflix and Blockbuster both sold DVDs. Netflix did so by subscription. Blockbuster did so by charging people late fees. So Netflix's business model gave it counter positioning versus Blockbuster and is a big reason why Netflix steamrolled Blockbuster. Okay. I just threw a whole bunch of that at you. So let's talk about my process for finding stocks and getting them in my portfolio.
And Brian, I just got to hop in and say this. You definitely have some fans in the chat.
Oh, cool. Thank you.
You're the man with the plan. That was my favorite comment.
Thank you. By the way, I'm throwing a whole bunch of information out there. So if I'm going too fast or anything like that, just please let me know. But let's start with my broad process for filling my portfolio. So step 1, find stocks. Step 2, screen them for quality. Step 3, buy my favorites. That's my process for filling my portfolio with companies that interest me. So step 1, finding stocks. It's so easy to find stocks nowadays. It used to be much harder. It's so easy nowadays. And there's so many ways to do so. Here are some ideas. 1, megatrends, right? There are so many technologies that are emerging, so many sectors that are emerging that just offer enormous growth potential. Here's a little table that I created of some of the megatrends that are out there. Connected fitness, cloud computing, cannabis, iBuying, robotic surgery, space tourism, telepresence, the metaverse, etc. There are so many emerging industries out there that these can be great places to look for investment ideas. Quick way to do so is to take one and go to a website called stockcard.io, put it right into the theme section. I just typed in robots, and here are some robotic companies that came up. Another one to do so is to use FinViz, right? You can search by sector, you can search by industry, and you can get a whole list of stocks that meet whatever theme or idea that you're looking for. So that's way one. Start with a megatrend and screen for it. Idea number 2, look at exchange-traded funds. Find exchange-traded funds that are going after a sector or a theme that you're interested in, and look at their holdings. Here are a couple of fund ETFs out there that I think are worth scraping for ideas. Take these funds, type in the fund name and then holdings, and you'll get the holdings of them. This can be a great place to come up with an idea list. Another one, similar idea, is to go to Whale Wisdom. Whale Wisdom is a site that tracks big funds and what stocks they're buying and selling. Here are a couple of fund managers that I personally hold in high regard. And you can take one, type it into Whale Wisdom, and you get all the recent buys and sells. So let's take a look at this one, Dorsey Asset Management. Pat Dorsey wrote the wonderful book, The Little Book That Builds Wealth. This is all about competitive advantage. Wonderful, wonderful book. And he now runs a fund. So here's a look at his most recent fund. He's been buying Wix like crazy. His number 2 holding is Smart Sheets, Facebook, PayPal, Poshmark. Never heard of them, but he just added a new position there. Stock to research. Dorsey likes it. That's a darn good sign. Number 4, IPOs. And this could be new companies that are coming public. And this could be IPO. It could be a direct listing. It could be a SPAC. Although, man, have those been a train wreck for investors over the last years. But websites like IPOscoop.com just have a list of all the recent companies that are coming public. If it's a healthcare company, a technology company, payments company, I'll usually give it a quick look and just see if that could interest me at all. Twitter, another place to get ideas. You follow people on Twitter. They share what stocks that they are owning. Great place to look for ideas. And then finally, everyday life. Look at your own credit card statements. What are you buying? What are you buying with your capital? What are your friends talking about, right? If you're really interested in a new product, a new service, check to see if the company's publicly traded. That is just some of the ways that you can get ideas for investments, right? It's so easy these days to get ideas. What's much harder is, all right, we have these stocks. How the heck do we screen them for quality, right? How do we know which ones are worth buying and which are not? Well, broadly speaking, my investing style is looking for a couple of things. First, I want high growth. Second, I want a huge opportunity, so the ability to do so for a long period of time. And third, I want low risk. I don't want to take a lot of business risk. It's asking for a lot, but I think you can actually invest this way. How do we do that? Well, the first thing I did was I asked myself, what characteristics in a business or in a stock do I find appealing? So I just made a big list. All the things that I'm looking for in an investment. I like free cash flow. I like it to have already beaten the market. I like a wide moat. I like a strong balance sheet. I like recurring revenue. I like companies that have pricing power. They're profitable. Their demand is recession-proof, etc. Made a big list. All the things that I'm interested in. Made another list. What things do I not want to see in an investment? I don't like accounting problems. I don't like when a company grows by acquiring other businesses. I don't like a business model that relies on one-time sales. I like recurring sales. I don't like it when there's an ugly balance sheet or the company is dependent on an outside force like oil prices or gold prices or interest rates, etc. Big list of things that I don't like. Then I made a simple checklist for myself. Okay, I started by putting the things that I want into a couple broad categories, and I gave myself 100 points to allocate to these categories. So here's what I came up with. I allocated 100 points based on the criteria that I was interested in, and here's how I allocated them. Conversely, I did the exact same thing with the bad things, the things that I'm not looking for, right? So I subtract points based on if a company has those things I'm not looking for. Then I run a company top to bottom through this list, and out comes a number. And that number tells me how interested in I should be in investing in it, right? So if it's an 80 or above, man, that's a company that matches my investing style. If it's a 70 or below, why bother? There are other companies out there that are a better fit for me. And I've done this now hundreds of times. And I have lots of companies that I've identified that score very well on my investing checklist. So I have a big list of names that meet my criteria, and I just buy my favorites. And when I'm thinking about the overall design of my portfolio, here's how I've set that up. So my portfolio, my stock investing portfolio is set up like this. So about 40% of my investing portfolio goes into high quality, low risk, medium growth companies. So Amazon, Starbucks, Google, that's where a big chunk of my capital is in, right? High quality, low business risk, a moderate amount of growth. Beyond that, I want another 40% in high quality, medium risk. So I'm willing to accept a little bit more risk, but I want even higher growth. So that would be CrowdStrike, Datadog, DocuSign, etc. And boy, have those companies been wildly volatile. And then with a tiny bit of my portfolio, about 20%, I'm willing to take some speculative risk. So this would be Bitcoin, Ethereum, some companies out there that Perhaps they're pre-revenue, perhaps they're nowhere close to profitability. I'm willing to take some risk knowing that I could strike out and just get a zero on those companies. But if I buy, just so happen to get a company that works out, the returns will be satisfactory for me. So I'm looking for, now when I'm looking to buy any given company at any given time, I'm looking for the best combination of business quality, according to my checklist, times the highest long-term potential, times the best valuation at any given time. Now, this one requires some special talking about because this is an art in and of itself. Valuation. Broadly speaking, okay, getting great companies into your portfolio is infinitely more important than buying them at great valuations. If you bought Apple at any time over the past 20 years, you've done well, no matter what valuation you paid. Same for Amazon, same for Netflix, same for Google, same for United Health Group. Getting those mega winners into your portfolio is more important than buying them at the perfect valuation. So because of that, I think of valuation on a kind of sliding scale. If I think a company has 10x potential, I'm going to do my best to ignore the valuation. I'm not going to let valuation keep a company out of my portfolio that I think has 10x return potential. Conversely, if a company only has potential to deliver market returns, I'm really going to focus on valuation. Now, that's going to be a major part of my buying criteria. So going back to my portfolio makeup, this category here, I really emphasize valuation. If I'm buying more Amazon or Starbucks, I want to get a really good valuation. For this one here, I'm trying to maximize business quality. So I'm less focused on valuation, more focused on quality business. And for this one here, I'm really focused on the long-term potential, not on valuation. So it's a combination of those things. All right, I have a couple of key takeaways for you because, man, did I just dump a lot of information at you. One, start with an investor policy statement, right? What do you want? How are you going to get it? What's your time horizon? Any short-term money needs? Risk? Volatility? What can you handle? Two, create a lifetime asset allocation strategy based on your investor policy statement. Three, for the stocks in particular, a minority of stocks drive the vast majority of the market's returns. If you're going to pick individual stocks like I do, you really want to focus on companies that are going to grow their sales and profits for a long period of time. Grow your sales and profits for a long period of time. My process is find them, screen them, buy my favorites. And if you're going to go through that process and get these mega winners in your portfolio, you can be darn sure they're going to put you through pain. Darn sure they're going to put you through pain. But that pain is worth it. And you can strike out a whole bunch because all of the losers that you'll ever buy doesn't matter as long as you get one big winner in your portfolio. If you can buy the next Geico, the next Alibaba, the next Apple, the next Amazon, all the losers you buy along the way won't matter so long as you get that one big winner in your portfolio. And this is important. Don't sell it early. If you find the next Amazon, don't sell it early. That's really hard. That's really hard not to do. But if you're going to invest the way that I do, this is unbelievably important. You have to be willing to sit through periods of extended pain, and if you're going to do that, if you're going to buy the next Amazon, it's not going to help you if you sell it early. Thank you. I hope that was loosely tolerable. If you want to connect with me, the best places to do so are on YouTube. At my YouTube channel, where we teach people how to go through my investing checklist that I just talked about, or follow me on Twitter.
Awesome. Brian, very much appreciated. The don't sell early. That's the one that gets me. Like, I always just get caught up in this, hey, am I being irrationally optimistic that I believe that my thesis still stands and just holding this loser? Or should I take the money and run? It's a killer.
Yeah. Investing is hard. Investing in general is hard. Investing in individual stocks is an order of magnitude harder. And what you never know, remember that graph I showed before, most companies destroy value. Right? If you're just picking stocks randomly, the odds are high that you've picked a company that's going to lose money permanently.
Mhm.
That's what the odds are against. However, it's that minority of companies that account for absolutely everything. So when I'm trying to figure out, ask myself, is this company, the stock's down, right? Is this a bad stock or is it a temporary problem? I always go to the business. I look at the business results and say, is revenue growing? Margins improving? Customers, new customers coming? Is it a repeat purchase business? If the answer there is yes, I'm going to stick it out and just hold. If the company is fundamentally deteriorating, Peloton, for example, different story. I would say thesis busted. I was wrong, and move on.
Okay, and let me ask you this one. So let's say stock price is dwindling, but the fundamentals of the business remain strong. You're seeing revenue growth, you're seeing margin expansion, etc. Are you adding to your position?
Yes.
Are you doubling down? Okay, you're not just holding where you are.
Yep, and my buying strategy is broadly to add over periods of time at what are called better and better value points. So let's say I find a company, I'm really, really interested in it, it scores well on my checklist, and I just take an initial position in it. I'm not going to sweat the valuation too much if I just want to be a shareholder. So I'll buy it whatever the market price is. Now, at the time of the purchase, I'm going to write down the valuation that I paid. So the price to sales ratio, the price to gross profit, the price to free cash flow, the price to earnings, whatever metrics are available. I'm going to write those down, and then I'm going to watch the company, right? Is the business getting stronger? Is the reasons I bought it intact? If so, I'll be happy to add to that position later at hopefully a better valuation. So let's say I bought a company at 20 times sales the first time. My goal for my next purchase is to get it at 18 times sales or 17 times sales. So that can happen because sales increased, but the stock didn't, or sales increased and the stock went down, or sales increased so much that they increased faster than the stock did. That's not always possible. Some companies are doing so well and their stocks are just taking off that you just have to buy more of them at a worse valuation, like Shopify, for example. Their growth was so extreme and the stock went up so much. That was the one I added to on the way up. But broadly speaking, the ideal scenario is I find a company, I buy it, the stock goes down and the business gets better. That's like the best case scenario.
Yeah, absolutely. And that takes me back to where you started with your 10 plus year chart. You know, like where I imagine that plays into you being able to do that.
Yes.
You know, you have 10 plus years from when you're going to need that capital. So the falling stock price and being able to double down and load into it is a-okay. The best case scenario.
Yep, that's so important. I mean, it's so common for investors to skip right over that investor policy statement, right? All they want to know is, well, what stock's going up 1,000% tomorrow, right? Great, I'd like to know that too. I know of no way to reliably find that thing. So because of that, I know that over long periods of time, the stocks will eventually follow the underlying business performance, right? Why is Amazon up 20,000%? Because its business is 20,000 times bigger than it was when it IPO'd. Same for Apple, same for Microsoft, etc. All the big winners their businesses are dramatically bigger today than they were 20 years ago. That's what I'm focused on finding. And I just know the price that I have to pay as an investor to buy that growth is, I'm going to be wrong a lot first. Second, I'm going to have to go through these immense periods of pain where the stock prices are going down, even though the underlying businesses are good. That's the price that we have to pay as individual shareholders.
Yep. And Brian, question out of the chat, and I know you've already been with us for a while, so it's totally okay to say no. But the question out of the chat is, can you run through one stock to show us how you look at it? You know, what data points you're pulling out for that stock? Just make it super tangible like that.
Sure. It would be too long to do that for just one company. Do you have a stock in mind?
Let's go to the chat. some of the ones out there. Affirm, I see. SoFi, I see.
SoFi is a pretty complex business, so that one might be a little bit hard. But I can literally the whole point of my YouTube channel is doing start to finish stock research on companies. But I'm happy to do a quick sampling here.
All right. So the request just went out to the chat. I'll read them off as they come in and tell me if one seems interesting. There's AMD, there's TME, Fisker, and they're just going to keep trickling. Other ones from this morning that we got: Baba, Facebook, GME, DD.
Yeah. So many of those are really complex businesses, and they would take longer than I could do in a short period of time. But I could do Facebook, for example. I think I need to get permissions to share my screen.
Alrighty. Producer Aaron Thomas, do you know how to do that?
You should be able to share it from the bottom tab where it says share.
I'm trying that, and I'm doing that, and it says Chrome has lost permission to capture your screen.
Oh.
So seems like there's something going wrong with
that is
mine.
weird.
But if you can, I would just let's start with Facebook, for example.
Yeah,
Luke,
what do you?
wanna,
I can share
your
it
chart
too
up.
if
Sure.
you have something you want me to pull up.
So I would go to Google.
Okay.
And I would type in FB, Investor Relations.
All right. We're starting there.
Okay. I would go to Facebook's Investor Relations. And if if the company was like brand new to me, right, I knew nothing about it. Facebook, Meta, I know a lot about. I would be looking for an investor presentation, something that gives me the gist of the company. And if not, I would go to the annual report, so the 10K. So that I would go to the financial section. At the very top there.
Okay, there
very
we go.
top
Got
financials, and then I would do annual reports.
There's quarterly. Oh, there they are.
Right next to quarterly. Yep, if it's top.
Perfect.
Oh, yep. So I would pull up the 10K. I'd get the PDF of the 10K. I would scroll down to the section that says business, and I would start reading.
Okay.
There you go. That's how I start. When I'm reading the business description, I'm asking myself, what does the company do? Does it likely have tailwinds behind it? Does it have recurring revenue? Do I think it has a competitive advantage? Does it have optionality? So the ability to roll out new products, new services, and I would start there. Then I would go to the risk section, see what major risks are facing the business. Does it have customer concentration? Does it have a history of losses? Does it have any other industry-specific risks that I need to know about? Then I'm going to go to financial statements. I'm going to look at, is revenue growing? Is margin stables? What does the balance sheet look like? Is it free cash flow positive? Once I did that, I would go to the DEF 14A, which is the proxy statement. I'm going to see how much of stock do insiders own, who owns it. I'm going to check out the Glassdoor ratings and find out, do employees like working there? Is it a good place? Is a good place to work? And then I'm going to check out the long-term stock charts. Is this a company that's beaten the market or lost to the market? Do they have a history of beating Wall Street's estimates or losing to Wall Street's estimates, et cetera? So
when you're looking at the chart, how long are you typically looking?
Click max.
Okay, all the way.
Yep. And then can you compare that to the S&P 500?
Not easily, unfortunately.
Okay. So it's up. I don't know. Even after the recent decline, it came public at 39, currently 216. So it's a six-bagger since 2012. That's a market beater, right? So that attracts me. I want to find companies that have already beaten the market. That tells me that there's a really good chance they're in that. They have a higher likelihood of being in that minority of stocks that delivers multi-bagger returns because they've already done something that Wall Street is recognizing. Conversely, if a stock has dramatically underperformed the index over a multi-year period, I typically like at least 5 years of data. That's an indication that the market is saying, nope, this stock is likely to be in the majority of stocks, which are value destroyers. So that's one check that I do. So broadly speaking, I would rather buy a stock that's already beaten the market than one that's lost to the market.
Okay, and then after the chart, I think you mentioned you want to look at the financials, EPS and revenue.
Yep.
Is that right?
I always income statement. I look at the income statement. I want to see revenue. So look at Facebook's revenue. So is that
This is quarterly.
So if you go annually.
Yep.
Yeah. So look. So what in 2018 it was 55 billion, then 70, then 85, then 117. I don't know about you. I think that's trending in the right direction. Look at their profits: 22 to 19 to 29 to 33, 39.
39. Yep.
Trending in the right direction. So the company's history suggests the business is doing something right. It's growing. It's growing its profits. It's growing its cash flow. I know Facebook's balance sheet is in great shape. Now, obviously, Facebook's stock has taken a tremendous hit over the last couple of months. I should know. I'm a Facebook shareholder, so I would investigate that. Well, okay, well, why has this stock been a train wreck? Well, it's largely because membership is declining, especially in the U.S. That's a cause for concern. Could that indicate that the thesis for this stock is busted? Requires more research, right? Is this a temporary thing or is this a permanent thing? Especially with companies like Facebook. The last 2 years have been so weird, right? 2020, so much growth got pulled forward into 2020. And 2021, 2022, we've seen a reversal of that, right? People were forced to stay inside. Now they're finally going back outside. So companies like Pinterest, Meta, Snap, all these companies that benefited are now seeing the kind of flip side of that. And the question we have to ask ourselves is the thesis busted? Is the business permanently impaired? Or is this a short-term thing? With Facebook, I'm inclined to say short-term thing. I think the company is still set up for long-term success, but I could be wrong.
Okay. All right. So that's how you do it. You started off at the investor relations site. You took us through either the investor presentation if you have it,
Yep.
if not the 10K.
Both. Ideally,
Okay.
the investor presentation is like a shortcut for figuring out what you want, but I still always look at the 10K.
Okay. Always do the 10K.
Or the S1 if it's a new public company.
Okay. Then you're going to the chart.
Yep.
Then you are looking at the income statement.
Yep.
All right.
Balance sheet, cash flow statement. All the while, that checklist, I'm filling in that checklist as I go, top to bottom, every single time. I'm trying to figure out, is this company a match for my investing style? And at the end, I get a number that indicates, yes, I should be interested in this stock. No, I shouldn't.
There we go. Awesome. Brian, I appreciate you taking the extra time to walk us through a final example. Any last thoughts for us?
No, thanks so much for being here. I'd just say if anything of what I said interests you, you can check me out on my my YouTube channel. And if you're new to investing, I recently wrote a book that's designed to help people that are literally know nothing about the stock market kind of figure out what a stock is, why it goes up, why companies have value, etc. So that'll be launching in early April.
Awesome. We will check that out, Brian. Appreciate the time.
Thanks, Luke.
Take care. All right, guys. How about that one? Brian made some fans in the chat. That was pretty clear. Throw the ones in there if that was the presentation of the day thus far. Twos if something topped it, and I'm curious what all you think topped it. Maybe it was the live trading. Maybe it was Schaeffer's, but I mean that was seriously awesome. I believe that's the first time that Brian's been on one of our boot camps. We're 24-ish boot camps in. And I think that we may have found a recurring guest, or at least a guest we're going to ask for. We get turned down sometimes, not by everyone, but sometimes, and we'll definitely ask. What's up, Spency?
He's been on Benzinga Live before, but never to that extent. So, yeah, that was great. Also want some feedback from the chat. How did you feel about the live trading segment today? I know we do that every day or Monday through Thursday, but we had obviously a few more people here. We had, Luke was there. I'm not always there myself. Should we bring on more variety on that show? Or are you content with Mitch, Zunade, Ryan?
The Mitch, Zunade, Ryan combo is pretty good.
It's a pretty good combo. It works. But I'd be curious to get some feedback.
Anyway. All right. That's a good point.
Yeah.
Checking in on a handful of stocks, as we're going to do throughout the course of the day. Clover, I saw some talk in the chat. Spencer, that's one that we should have grabbed this morning. I picked the wrong one. Okay, we have GME, right? Of course, has been hot the last several sessions, hanging out today. AMC, same thing. I was looking for other stocks that were a part of that wave when I saw COS moving. COS was another one of those meme stocks that got some movement this morning. I picked Newegg, not looking great for me. CLOV, Clover Health was a stock. It wasn't necessarily one of those like crazy meme stocks as much as it was around the same period of time. It was a short squeeze candidate. It was absolutely a retail favorite. If we zoom out to the 2-year chart, yeah, look at this. Woo! That's a big green candle.
Yeah.
All right. Go ahead.
It's a day where a lot of stocks with the highest short interest are trading higher, but the market, broadly speaking, is down. So I don't know what you make of that. The same inverse correlation, right? Market goes up, energy goes down, is happening today, or vice versa, right? Because energy's up, and the market is down.
Yeah. And Chinese stocks sold off into the open, way outperforming the market the rest of the day.
Holy cow! This is remarkable, utterly remarkable.
What is?
This whole rally in Chinese. So, like, I like looking at KWeb, but you can look at Baba or Baidu or whatever you want. Alibaba just went from 73 to what? It went up $50 in what's today's day 7, a week and a half. Holy cow!
Yeah, look at this.
It's utterly remarkable.
Well, who pitched you this stock last Thursday, Spencer?
I remember that. And
last Thursday, so one of the two of us pitched this stock to the other one.
Man, I don't know, guys. It's
all right. Here, I'll do my quick Baba pitch. All right, Baba. If you look at it on just a pure valuation standpoint, it's an incredibly cheap stock. Right, trading at 5 times EV to EBITDA. We say the S&P 500 average is somewhere 13, 14, 15, somewhere in there. Revenue growth, right? It's an incredibly cheap stock. Why has the stock gotten hammered? You have major regulatory concern, right? Could Alibaba get delisted? There's a world in which that happens. I think it's likely. But there's a world in which it happens.
Not right now, probably. Not right now. Not after what unless that would be the ultimate rug pull. Because the government
that would be the ultimate.
That would be the ultimate rug pull. Because the government just came out a week and a half ago and said it's cool. Guys, we support our stock market. Don't worry about delisting. It's all good, man. Yeah, Intel is moving because the CEO of NVIDIA just said that they would explore Intel as a foundry. So Intel is popping off that. Intel just got to 49.45 just now as we speak. Yeah.
There's a pop. Wow.
Yeah. Anyway. All right. Who's next, Luke, on the agenda?
All right. Let's pull the agenda back up.
Yeah.
We have going from chapter 3 to chapter 4. Technical analysis 101. Okay. Whole point of the day today, right? Let's imagine in your head a chart of the S&P 500. Okay. Imagine a 1-year chart with daily candles. Get that picture. We have seen some chop. It has not been the days of old where you could just latch on to any stock, let it ride, and you were going to make money. Okay, we've had some sell-off. We've had some chop. We need to see some sort of we need to sharpen our skill set. So we're doing diving deep today. That's the whole point of the boot camp today is we want to dive deeper. That's why we had Brian on, and that's why we have one of my favorite speakers up next, Gianni Poce. Gianni is going to be taking us through the technical side of things, right? So Brian got us started fundamental. Gianni's about to take us technical and really give us, hey, here's the deep dive. When markets are rough like this is what I need to see in order to pull the trigger. Gianni is a swing trader. So for any of you that are looking for a little bit faster of action, stay tuned. Gianni is about to be up with us. Does that sound good, Spence?
I see him here right now. Should we just bring him on? Oh, look. There he is.
Best background of the day, too.
I'll say that. Into existence.
What was that, Luke?
Best background of the day. I always love your background.
Thank you. How are we all doing today?
Good, man. How are you doing?
Not bad. It's getting another cold spell here in Michigan, but it was nice a couple weeks ago.
How are your trades looking today?
Pretty good. The inflation trade is still working. It's something you and I have talked about for quite some time, and another good day on that part of the market, but we're going to talk about it today as well. Want to see some participation broaden into tech and some of the risk on sectors, and there's some preliminary signs that's coming through. So we'll talk about that today as well.
Yeah, and Spencer, I gotta call this out too. Gianni has nailed the inflation trade for 3 weeks in a row. He's been throwing me the swing trade symbols 3 weeks in a row for these inflation names, and they just hit.
Like what?
Hit.
Like what?
We had CCJ was one of them. You had, I think, Barrett Gold was one of them in there. Do you remember the other ones? You had the paper company last week.
Resolute Force. The big one has been Peabody Energy, BTU.
Yep, there you go. You had that one as well.
Yeah.
All right,
US Steel, Freeport McMoran, Cliffs, all those have been doing very well.
Awesome.
Well, we have you for an hour, Gianni. You ready?
I got a lot of charts for you. Hope you're all ready.
All right. In chat, I am the voice of you. I will be watching it. You have questions, throw them in the chat.
Very good. And as always, Luke, feel free to interrupt me with questions. Always important to ask in terms of context for what we're talking about. So the discussion we're going to have today is Technical Analysis 101. Again, Luke introduced me. My name is Gianni Poce. I've been in the digital trading pit, so to speak, for about a decade now. I'm the breakout strategist and editor of Benzinga's breakout series, but I'm also the president and analyst at www.themercator.com. So we have quite a few ways to share our research here, but that's not why you are here. You are here to learn what technical analysis is. So let me jockey my screen here a little bit. So technical analysis, the purest definition I could find, it's a multifaceted discipline. So it's more than just identifying price trends and patterns on charts. You can look at momentum and volume, support and resistance. So we're going to touch on all those today. But we're going to go through 3 parts of technical analysis today. The first is trend analysis, and then we're going to look at support and resistance, and then we'll look at various chart patterns from real-world examples that have all happened in the last 3 months, basically. Luke touched on some of those stocks already. And then we'll visit volume very briefly. Unfortunately, we probably won't have time to get into momentum indicators. But as you can see, multifaceted discipline. But we want to start with the simple stuff today, which is trend following, support and resistance, and chart patterns. But above all, there's a difference between being an analyst and a trader. Technical analysis is a tool that you use in both. But as traders, we need to be professional risk managers. And through my decade of trading in the digital trading pits, I found that technical analysis is the best way to manage risk effectively. And you do that by placing stop losses strategically, timing your entries based off of technicals and price patterns and breaks of support and resistance, so to speak. And so there is no other way to read price as effectively as technical analysis. So with that being said, let's go ahead and begin with the first part of today's 3-part series on technical analysis. We're going to begin with trend analysis. I had a quote that was unfinished on the previous slide. It said, "The trend is your friend." You've probably heard that before, but I took the liberty to add a second part to this phrase. The trend is your friend until the trend ends. Because we know that trends are a great way to make money, but nothing lasts forever. The law of nature is cycles, just like the seasons. Markets go through seasons too. Markets are inherently cyclical. And we've learned, we've had a real world example, again, in the last few months about trends and how they work. So there are 2 types of main trends to trade with. You have uptrends. Uptrends are characterized by higher highs and higher lows. I will show you an example of uptrends on the next 2 slides. Then we have a case of a downtrend. I'll show you that as well on the 2 slides after the next 2. Downtrends are characterized by lower highs and lower lows. Then there's something in between we call chop or a trendless market. Sometimes you'll have a lower high and then a higher low. Those are some of the most difficult to trade, but we're not going to focus on that today. We want to look at clean setups and great ways to either go long or go short. But another principle I want to touch on as it pertains to trend analysis is a very key theory, so to speak. It's the fact that longer term trends are more powerful than shorter term trends. So a trend that has been in effect for decades or months or weeks is going to almost always overpower a trend that has been in effect for a couple days, or even like on the hourly chart, for example. So obviously the trends change, until the trend ends. The trend's your friend until the trend ends. And obviously it changes on the smaller time interval first. So we'll look at some examples starting now. We are looking at a monthly chart of the Dow Jones Industrial Average. This chart is going back to 2005, and you can see here that the Dow is very clearly in an uptrend. So with the exception of the financial crisis of 2009, we keep seeing higher highs and higher lows. If you look at my laser pointer here, every subsequent high is higher than the previous high, and every subsequent low is higher than the previous low. Then we had the COVID crash of 2020. That took out the low of 2018. It was December 2018 that we had a pretty sharp sell-off. But if you compare the March 2020 low to the low of 2015 and 2016, for example, that is a higher low, okay? So longer term trend, that low fortified the long-term trend. But then once we broke above the highs from late 2019 or early 2020, the long-term trend was revalidated, and we can see that stocks are in a bullish trend. We see higher highs and higher lows. But everyone here knows that this year has been pretty turbulent to start. So were there any signs from a pure trend following standpoint that markets were in trouble? Well, we're looking at a daily chart of the Dow here, going back till about the beginning of June. And you can see that we were making higher highs and higher lows, okay? And so, we kept making higher highs, higher lows. There were signs. We talked about it. I talked about it on Money Mitch's show, Story Investors. We talked about it in our chat room here with Benzinga that, there were signs coming into 2022 that something was wrong in the stock market. We saw the NASDAQ make a high. I believe it was in November, but then we saw the S&P and Dow continue higher into the beginning of the year. So we made the new all-time high in the Dow in January, but then we fell back lower. We rallied back up, and then in the middle of the month, we formed what appeared to be a lower high. And that wasn't the biggest sell signal yet, but once we started to break below this low of mid-December, that was a sign that something was seriously wrong. And so if you would have gotten out then, you would have missed, quite a bit of the downside. But then once we broke below the low from late November, early December, in late January, that was a sign that the short-term uptrend was violated. We then rallied back up into a short covering rally into the beginning of February and formed a lower high. That was a bad sign. So if you didn't get out here, you had a signal to get out there as well, because you formed a lower high after forming a lower low. We had a short-term downtrend. So if you would have exited there, you would have missed this whole second leg of lower of the market. But now, as I briefly alluded to at the beginning of this talk, was that there are some preliminary signs that the conditions of the market are improving. You see here that we had another lower high form at the end of February, beginning of March, but we just took out that high. We have our first case of a higher high, and depending on whether you use intraday or closing price lows to determine what constitutes a higher high or higher low or lower low or lower high, one could make a case that we formed a higher low at the midpoint of March. So we have a higher low that formed in mid-March, and now we have a higher high. So from a pure trend following standpoint, the integrity of the downtrend that was established basically by the end of January is no longer intact. It really could be a case of a choppy market, but if you want to be aggressive like I am right now, I think we have a good chance that we're in a short-term uptrend as well. And remember what I said a couple slides ago, the longer-term trends almost always outperform or overpower the short-term trends until the trend ends, right? So what about a bear trend? Let's take a look at a long-term bear trend. We're looking at a monthly chart of the 10-year Treasury yield. It's no secret that bonds have been going up for about 40 years. In other words, interest rates have been going down since they peaked in 1981. When interest rates go down, bond prices go up. When interest rates go up, bond prices go down. So interest rates peaked in 1981 have been forming lower lows and lower highs ever since. You can see that on this chart if you follow my laser pointer, making lower lows and lower highs. The all-time low in interest rates happened in 2020. Depending on what chart you look at, whether you're looking at the yield plotted on a chart, or if you're looking at the bond price itself, we basically had a low in March or April. Some bond prices made their highs in August, September, but that's beside the point. What's interesting here is we had a really powerful rally in yields that unfolded in the back half of 2020, and then we dropped back down and formed what appears to be a higher low in mid-2021. We then ripped back higher and we created a higher high. So one can make a case that we have a short-term uptrend in bonds. What I'm really keen on seeing happen is if we take out this high in the 10-year treasury yield from 2018, one can make a case that the long-term bear market in interest rates is over. And that's going to carry some significant repercussions for the market at large. Okay. And not to get into it too much, but that's why we've seen tech underperform year to date. That's why the inflation trade has been doing so well. Interest rates are a function of three factors. You have one being inflation, two being demand for money. The more people that want money, the more that a bank is able to charge you for having access to that money. And three is risk premium. When risks are higher, when liquidity is lower, which is what we're seeing now, they tend to manifest via higher interest rates. Okay, so the Fed's taken away the punch bowl. QE is over. They're raising short-term rates finally. Okay, but now they're talking about doing quantitative tightening, which in theory is going to raise interest rates, because if they're selling their bonds or letting them mature and roll off their balance sheet, that's lowering, or they're basically selling, right? So if you're selling bonds, interest rates are going up if everyone's rushing to the exits. So, and here's an example of a short-term 10-year treasury yield chart, higher highs and higher lows, right? I think you all get the idea by now. Okay, so you could see how the long-term trend in the 10-year yield was down. But now we have a case of a short-term uptrend that's basically been in effect, going back here real quick, arguably since this higher low that formed in mid-2021. And this daily chart here goes back to right around that point. Basically, once this low here formed, higher highs and higher lows. Interest rates are in an uptrend. So I think you get the idea. And when it comes to trend following, that's very important. You want to trade with the trend as much as you can. The trend is your friend. Like I said, I'm going to keep saying that because I want it to be concrete in your mind. When I first started trading, I would always try to trade against the trend. Let the institutions, the people with deep pockets, as individual traders and investors, we don't have the buying power to move the price of a security. But your Fidelity Growth Fund or your Vanguard Total Stock Market Index, for example, they have billions of dollars at their disposal. When they buy a stock, it's going to move. When, Tom Smith from Illinois buys a stock, for a couple grand, you're not moving the prices of the security. So let the institutions do the heavy lifting, trade with the trend. They're going to lead to big moves in the price of a security. Okay, another concept I want to talk to you about today is support and resistance. This is the second of the three things we want to talk about. The third being chart patterns, which is my favorite thing to talk about. So the first thing we talked about was trend analysis. Now I'm going to look at support and resistance, but I'm saving the most time for chart patterns. So what is the definition of support and resistance? Support is a price zone, not a hard level or a hard price, a price zone where prices, when the decline pauses or slows down due to higher demand or buying interest from the market. Resistance is a price zone where rallies pause or slow down due to lower demand or increased selling from the market. These next 2 points are very important. When support breaks, it becomes resistance. When resistance breaks, it becomes support. And similar to the concept I shared with you in terms of the duration of the trends, the longer term trends overpowering the short term trends, longer term levels or zones of support and resistance are more important than short-term levels of support or resistance. So if you identify a support or resistance zone on a monthly chart or a weekly chart, that's going to be more significant with respect to the direction of a security than a support or resistance zone observed on a 2-hour or a 15-minute chart. All right. So let's take a look at an example of support and resistance. We're looking at a weekly chart of the NASDAQ. So again, these are zones instead of hard lines. That's why I have 2 lines to represent them. You see that the NASDAQ bounced off this, 12,200, 12,800 support zone a couple times. That happened in early 2021, and then it happened a couple times here recently as well. So we can see how buyers are stepping up to the plate and showing demand for shares of the NASDAQ when prices decline down to the $12,200, $12,800 area. Now, when it comes to resistance, we see how we've seen sellers enter the picture in the NASDAQ between 14,200, 14,600 a couple times here in early 2021 and then mid 2021. But then I want to reintroduce the concept I just shared with you. When resistance breaks, it becomes support. So then we broke above that, retested it in mid 2021, retested it in late 2021, rallied up to an all-time high, but then we broke back below it. Once we were back below that former resistance turned support and then support turned resistance again, you see how the NASDAQ couldn't get back above that area. Then we dropped lower. Okay, so now we're coming up onto that big test in NASDAQ. Can NASDAQ reclaim the 14,200, 14,000, $500-$600 zone? If it's successful, I think we're going to have another run at all-time highs sooner than most would believe. That's a good thing, right? Still a lot of bearish people out there. A lot of shorts got caught flat-footed during last week's torrid rally. Okay, we'll talk about some other evidence that suggests that to be the case as well. Let's look at another example of support and resistance zones, this time with Bitcoin, okay? So here too, when support breaks, it becomes resistance. When resistance breaks, it becomes support. So this $45,000, $48,000 area of what was support became resistance in Bitcoin. And then we see support zone now between 36, 38,000. So, we broke below that 46, 45, $48,000 area. We saw prices congest in there before. We saw it congest at the end of 2021 as well. And then we saw prices rejected by those zones a couple times already this year. We've also seen this support zone between 36, 38,000 hold a couple times very nicely this year and in previous instances in the middle of last year. So basically, I'm neutral on Bitcoin right now. I don't like the trend that we've seen since we rolled over last year. We talked about lower lows and lower highs, right? We see that in Bitcoin. One can make a case we formed a higher low here. We've yet to see a higher high. So the trend is mixed. In other words, I am neutral on Bitcoin. I am bullish of Bitcoin if it's above 45, 48,000, but I'm very bearish Bitcoin if it's below 36, 38,000. So that's how you can incorporate trend analysis with support and resistance levels, right? What is the trend? Is it up or down? What are these support and resistance zones? Are we above key support? Are we below key resistance? Those types of questions are what you need to ask yourself as a trader and investor. I like to say a lot of times market analysis is more important. It's more important to ask the right questions than having the right answers, because we don't know. There are no certainties in this market, right? All we have are probabilities. And so what we have to do as traders and investors is skew those probabilities in our favor as much as we can. All right, now for my bread and butter. I love chart patterns. It really is probably the most important thing for a trader, and I highly encourage you to learn these chart patterns when you get the opportunity to do so, because regardless of what market you trade, whether it's stocks, Forex, crypto, futures, options, whatever you might like to trade, these chart patterns are visible and applicable across all different markets. And in fact, they've been observed for hundreds of years. There are charts of individual stocks going back to the early 20th century, the late 19th century, and they still display these type of chart patterns. And why is that the case? Well, that's because human nature has never really changed. Obviously we have different cultures and different countries and so on and so forth, but at its very core, we are all human, and therefore our behaviors are largely able to be quantified to an extent, and that tends to manifest via price and, by extension, price patterns. So basically what I'm saying is human behavior can manifest via certain patterns on a security. That sounds crazy, but like I said earlier, the law of nature is cycles, and humans have a tendency, for whatever reason, to buy the high and sell the low, and that leads to the creation and manifestation of patterns. So I like to categorize price patterns according to three different areas. We have continuation patterns, we have momentum patterns, and we have reversal patterns. Okay, so we're going to look at examples of all of these on the subsequent slides. But before we do so, let's introduce what some of these patterns are. When it comes to continuation patterns, and before I share these, you're going to notice some overlap between some of these patterns. And we're not going to look at an example of every single one, but I am showing you examples that have all occurred in the last 3 months, basically. So it always helps to not just share the theory, but show the practicality of these chart patterns. So back to the continuation patterns. We have what I call the family of triangles. We have the ascending triangle, we have the descending triangle, and the symmetrical triangle. We then have the rectangle pattern, which I like to overlap and include it as well in the momentum patterns, which I will share on the next slide. We then have the ascending and descending price channels, which for whatever reason have been working very well year to date. And it's really interesting, depending on the market environment you're in, you tend to observe various patterns at different frequencies than others. So for whatever reason, like I said, I've been seeing a lot of price channels unfold lately, and that's been good because they're continuation patterns, which means they tend to resolve in the direction of the underlying trend. And we know from looking at the long-term Dow chart that stocks have been in a long-term uptrend. We then have the momentum patterns. Okay, the saucer pattern. I love this one, and in fact, it's given me some of the biggest gains. Given us some of the biggest gains year to date have come from the saucer pattern. Broadening wedge, I like this one very much too, because not a lot of traders seem to use it. It's kind of one of those secret sauce things. If not a lot of people are using it, it seems to work better. Then we have the cup and handle. This pattern was made famous by a renowned trader and investor, William J. O'Neill. He also founded Investor Business Daily. Very good trader, very good analyst, and this is a fantastic momentum pattern as well. You'll like the story behind the example I'm going to show on this cup and handle pattern as well. Bull flag. As a trader, you really should salivate when you see a bull flag, because these are some of the most powerful patterns in all of technical analysis, and they lead to some of the strongest gains in the shortest periods of time. And then on the bearish side, we have the bear flag as well. But for all intents and purposes, we're basically going to be focusing on the long side today. And then I'm not going to spend any more time in the rectangle pattern. Reversal patterns. We have the head and shoulders, which is what you see when an uptrend is turning into a downtrend. The example we're going to look at today is an inverted head and shoulders pattern. Turned out to be a pretty good trade that we're still in. And then we have the rounding tops and the rounding bottoms. Those look like saucer patterns, just for context. So to save time, we're not going to look at an example of that today. We're just going to look at the saucer pattern. We have also wedge patterns, rising or falling wedges. The example we'll look at today is a falling wedge. And then double or triple tops or bottoms. Those are basically instances where stocks bounce off support in the case of a double or a triple bottom, or bounce off resistance in the case of a double or a triple top. So those are, we're not going to look at those today, but we basically saw examples of those on the previous slides. All right, let's begin with the ascending triangle price pattern. So what we are looking at here is a weekly chart of Univar Inc. This is a fertilizer company, and that's been a really hot sector as of late. And a big reason behind that is that a lot of our fertilizer products come from downstream products of natural gas and petroleum. So not a lot of people know that, but when petroleum prices go up, it makes fertilizer prices more expensive as well. So what we identified on this Univar weekly chart is an ascending triangle. So this is characterized by an upper horizontal resistance zone. Okay, we just draw it with one line to keep it nice and clean. And then an upward sloping lower trend line. And what we see here is that the trading range becomes narrower and narrower. The volatility tends to compress before it expands. Conversely, volatility tends to compress after it expands. So a lot of times these patterns are showing that the trading range is narrowing, which basically tells us that it's going to expand at some point. So if you recall from a couple slides ago, these triangle patterns are continuation patterns, which means they tend to resolve in the direction of the underlying trend. Well, we're looking at a weekly chart here, but basically after this low at the COVID crash of 2020, we started seeing higher highs and higher lows, right? So when we identify a continuation pattern, we say, okay, chances are this is going to resolve up to the upside because we've identified an uptrend. So the catalyst is to get long is on a break above the upper horizontal trend line. So we got long this one just a little bit ago, and this is one that we own right now. So it's breaking out, looks good, and would like to see it continue higher. Another example of a continuation pattern is a rectangle. Recall these can also be momentum patterns. So we're looking at a daily chart of Antero Resources. This is a energy stock as well. So since this is a continuation pattern, let's begin with the trend analysis. What do we see? Higher highs and higher lows, right? Higher highs and higher lows. A rectangle is characterized by an upper horizontal trend line acting as resistance and a lower horizontal trend line acting as support. So we did get a little bit ahead of ourselves on this stock, but we really like the setup, and we talked about how energy's been doing so well. We got long a little bit early. We had a good risk reward ratio. Basically, we got long here. We said if it breaks below this low in mid January, we would get out, and turned out, fortunately for us, that we were right. So we're still in this stock now. All of these charts, by the way, were updated as of yesterday's close, and it's up again today. So Antero Resources looking pretty good. We have a nice gain on this one, and it keeps making higher highs and higher lows. I especially love this higher low that was formed earlier this month because it serves to fortify the existing uptrend. And my memory is failing me a little bit here, but I do think we just took out this high from earlier in this month as well. So again, continuing to fortify the existing uptrend. Next is an ascending channel. We are looking at a daily chart of CF Industries. And this is another fertilizer stock. So again, that you see that theme. This is part of the inflation trade. This is what's been working year to date. And just to digress very briefly, during the 2010s, it really was a decade of deflation for many commodities and commodity-related stocks. They really underperformed. And so what we saw in its stead was tech and growth stocks outperform the most. And they've grown to be such a large component of the equity indices, which is really important to keep in the back of your mind, because during this latest sell-off, which saw the NASDAQ drop about 20%, we saw tech and growth lead the market lower, but the inflation trade and so many of these energies and materials and mining stocks held up very well and actually produced positive returns. So that shows the advantage of knowing the trend and knowing support and resistance zones and knowing these price patterns, because they help you make calculated bets, so to speak, to gauge the risk reward ratio in your favor. So I talked about how we've been seeing a lot of channels, ascending and descending channels here on CF Industries. Recall these are continuation patterns, these channels. So we see higher highs and higher lows, right? And so we saw a higher low form in the beginning of or by mid-January. So we said, okay, let's get long, and if it breaks, makes a lower low, we'll get out. So the ascending channel is characterized by an upward sloping upper trend line and also an upward sloping lower trend line. And so with these channels, if you observe an ascending channel in an uptrend, right, so long as the prices continue to rise within the ascending channel, it's bullish, right? You're making higher highs and higher lows. But there are instances where it starts to break above the channel. And that's what we saw unfold here in CF Industries. And what that says is that the previous rate of ascent, basically between September and February, CF Industries was experiencing a nice, calm bull trend, but then it started to accelerate. So this continuation pattern, once we broke above this upper trend line of the ascending channel, told us that, hey, you know, this rate of ascent is accelerating. This is something that, you know, we should be glad to own. And we are glad that we do, because it keeps making new highs. So CF Industries, textbook example of an ascending channel pattern resolving to the upside. Next is the descending channel. We're looking at a daily chart of US steel here. And so descending channels are peculiar, because how we like to use these is we like to use them in the context of the longer term trend. So US steel is in a longer term, I would say an intermediate term bull trend. You don't see it on this daily chart here, but you can see this daily chart. You know, you were making some lower lows and lower highs, but I would characterize these as corrective declines. And so, you know, you have an a downward sloping upper trend line and a downward sloping lower trend line. The big signal that we saw from the bullish case that something was about to start working for the bulls was this higher low here at the end of February. So we said, okay, well, let's wait for a break above resistance. And that happened at the end of February. We got long US steel as soon as we got above this upper trend line of the channel. And, you know, it's accelerated to the upside. But again, this is part of the inflation trade. Almost all of these stocks that I'm sharing with you have to do with the inflation trade. And again, these are real world examples that we've shared with the Benzinga breakout series. All right. I told you the saucer has been the best pattern year to date. There's some other ones that have been very rewarding, but again, I don't want to just repeat the same pattern for you. I want to give you a nice array, so to speak, of different chart patterns. So we're looking at a saucer pattern here. This is Peabody Energy. This one has been very rewarding. And you know, recall what I said earlier. These look just like rounding bottoms as well. And if you're looking at an inverted saucer or rounding top, it would just be this flat, this pattern flipped upside down. So the regular saucer or the rounding bottom pattern is characterized by an upper horizontal trend line acting as resistance. You can see how prices were rejected in this, you know, $13 to $13.50 area a couple times, you know, rejected here. It was a former support level that broke back here. And then the lower portion of the pattern is a parabola or a U-shaped type of drawing. And you see again here how the trading range gets narrower and narrower as you get to the right side of the pattern. So as you progress forward in time, the trading range gets narrower. And then the catalyst to get long is a break above the upper horizontal trend line acting as resistance. And we did that, and it's basically just taken off. And so it's well, like I said yesterday, these are from yesterday's close, but BTU did make, I think it took out Monday's high. It was up this morning, unless the market reversed on me since we started here. The inflation trade was working pretty well. But I will say this as another quick digression here, because, you know, I want to provide context to what's really going on in this market right now. Monday was an inflation trade day. That's where it outperformed. But yesterday, I really liked what I saw. You know, we saw a lot of the tech stocks and consumer discretionary names actually outperform. So that type of broad participation is what I want to see coming out of a potential important market low. Because recall what I said just a moment ago, tech and consumer discretionary and growth have grown to be such a large component of the equity indices. It's really important to see them outperform, or not necessarily outperform, but it's important to see them perform well if we're going to see a recovery in the equity indices. So yeah, BTU, the catalyst to get long on the saucer pattern is a break above this upper horizontal trend line. All right, cup and handle. We're looking at a daily chart of Occidental Petroleum. This was actually a call that we provided for traders in our chat room, and it worked out very well. So it's basically two saucer patterns put together, but the cup portion of the cup and handle is bigger than the handle portion. So you have an upper horizontal trend line acting as resistance. The catalyst to get long is, again, a break above the upper horizontal trend line. But you see here that the trading range is getting narrower and narrower through time. So we got long on a break above this upper horizontal trend line, and, you know, we made a new high, made a higher low, and that was all good to see. But then in the beginning of March, I'm curious if it was happening right around. So we're looking at volume. I'm circling the volume bars right around here. Reports came out in early to mid-March that Warren Buffett in Berkshire Hathaway opened a pretty significant position in Occidental Petroleum. But through our knowledge of trend following and support and resistance zones and chart patterns, we actually got in before that announcement was made. So we basically got in at the end of January, and about 6 weeks later, the reports came out that Warren Buffett and Berkshire Hathaway opened a position in Occidental Petroleum. So that's been very rewarding as well. So, I mean, it's hard to say, when he actually did. I'm sure he's been accumulating through time, but, they have to make those disclosures periodically. But when you see these types of volume surges here on the rising prices, remember what I said. Let the institutions do the heavy lifting. All you have to know is how to position yourself according to the trend, according to support and resistance, according to price patterns, and let the big dogs with the deep pockets push the price of a stock higher. So it's all about positioning and risk reward. Okay. So yeah, Occidental Petroleum, it's been working out pretty well. And that's because we broke out from this cup and handle. Okay. Again, the catalyst to get long is the break above the upper horizontal trend line. Broadening wedge. I love this pattern because not a lot of people use it. So here we have the stock, I should introduce that first, right? Steel Dynamics, another inflation trade stock. This is a steel company. Okay, we're looking at a weekly chart of Steel Dynamics. Upper horizontal trend line acting as resistance. But then in this case, we have a downward sloping lower trend line. So this is a little bit different than the previous chart patterns we shared. In this case, it's more of a situation where volatility is starting to expand before you actually break out. And the way I would characterize or describe this is that you're seeing a capitulation from the bulls. They're throwing in the towel. And they're saying, you know what, I'm done. Or it could be a case of, the shorts finally realizing that the trend is no longer down on this chart. So it basically leads to a springboard type of price action. But I still prefer to wait. I decided to take the liberty to change the spelling of patience for traders. It's actually spelled PAY-TIENCE. Okay, I mean, that's just for the chat room's sake, but you get the idea. So once we break above the upper horizontal trend line, that's our catalyst to get long on this pattern. Patience pays. Okay, so we get long STLD, and we're up nicely on this one too. And again, it's just all about following the trend and minding the support and resistance levels and identifying and acting and executing upon breaks from these price patterns. All right, we are now looking at a daily chart of Turquoise Hill Resources. So this is probably not something that will be around much longer because reports came out that Rio Tinto decided to buy this company out. I do believe it is a Canadian mine. It was a Canadian mining company, that is. But recall when I was introducing the different types of price patterns that I had shared that, when you see a bull flag, it's something to get pretty excited about. And here's why, because, what happens is you have the establishment of a flagpole, and these flagpoles can really form over the course of, 1 to 3 days. They happen really quick, but basically you have a surge higher in price. If you see gaps, like breakaway gaps associated with that, it's an even stronger signal in my experience. But then you have a sideways digestion of those gains. So the prices start to flag or consolidate. And the reason I like these bull flags so much is you tend to see prices consolidate for short periods of time. A lot of times it's, you'll see a resolution within 2 to 6 weeks, but if momentum is especially strong, you'll see resolutions happen even faster. And that's what happened on Turquoise Hill here. So the catalyst to get long, again, is a break above this upper horizontal trend line of the flag portion of the pattern. So we broke out. It wasn't as much of a parabolic rise as I normally like to see following a break from the bull flag. So in all honesty, not really the best example, but it is what it is. That's the thing, is you have these theoretical applications of these price patterns, but the market has its own agenda, and that needs to be respected. And you respect it by managing your risk effectively. And, we're not going to have time to talk about the best way to manage risk today, but that is something I strongly encourage all traders to spend a significant amount of time studying and learning and eventually applying, because I know that in my own trading journey, that's basically what kept me from being a profitable trader for the longest time. Do you want to be right or do you want to make money? If I told you you could be right as little as 1 out of 4 times and still be a profitable trader, are those odds that you would take to the bank all day, every day? Because I know that I would. Anyways, that's my risk management digression, which is always very important when we're talking about trading. So we get long here and it's up. I didn't really like this higher low, but I said, we're still up on this position. Our gain has been modest. We can, give it a little bit more time. And then reports came out that Rio Tinto bought it out. And I think the share price acquisition was around $26. So we sent out an alert. We said, let's sell this. And what happened afterwards is kind of unusual. You don't really see this happen very much after acquisitions are announced, but it does happen sometimes. Prices continued higher. So it was a little frustrating. But the point I'm trying to make is that you don't need to catch the exact low to buy or the exact high to sell to make good profits, right? There's plenty of meat in between. There's plenty of meat on the piece of meat, so to speak. You don't need to eat the bone too, right? The bone is kind of the waste unless you're making like bone broth or something like that, right? But there's plenty of meat on the bone. And basically, as long as you can capitalize on that portion, you can have good risk reward entries and exits. And that's exactly what happened on Turquoise Hill Resources with this bull flag pattern here. All right, we're going to dabble in a couple of reversal patterns as well. Only have 2 examples of these for you today because, again, my specialty is trading with the trend. So, I have to really like a setup, or I like to use these reversal patterns as like counter trend moves. So for example, we're looking at a weekly chart of Pan American Silver. This is a silver mining stock. We can see how the longer term trend is up, higher highs and higher lows. But we saw this falling wedge pattern, which is characterized by a downward sloping upper trend line and a downward sloping lower trend line. But the caveat here is that the apex of the pattern is getting tighter and tighter as you progress through time. But you can see how this was a basically year to 2 year, let's call it 18 months corrective decline in the face of a longer term uptrend. So again, context and time frames are everything when it comes to trading. And so I like to use these reversal patterns in the context of the broader picture, because like I introduced at the beginning of this talk, we want to trade with the trend as much as we can. The trend is your friend until the trend ends, right? So if we're analyzing the stock within the context of a longer term uptrend, and we identify a reversal pattern in the context of a shorter term downtrend, we can have grounds to get long. And so the catalyst to get long on this falling wedge is a break above this upper trend line, which we did. And we have a nice entry, and so we're going to see how this unfolds. One of the jokes I had, and I shared it with Luke at the last boot camp coming into this year, was the possibility of pet rocks outperforming digital rocks. The pet rocks being precious metals, the digital rocks being crypto. I love crypto. I love the whole concept of it. But we talked about how, from a trend following standpoint, when we were looking at support and resistance zones of Bitcoin, that it has some technical issues, and precious metals have been a better place to hide out. We'll see if that changes as we progress through the year, but that's been a really good theme for Q1, and that's been precious metals outperforming.
And I said this at the top, Gianni.
Yeah.
You have nailed these trades recently.
Yeah, that's
for everybody's context, I edit one of Gianni's weekly newsletters, so I am intimate with every trade, all of his missed commas, all of his typos.
Yeah,
a few in there every week. Okay, and yeah, he's nailed these ones.
Yeah, that's been good, but it was months in the making. So the precious metals sector was not something you wanted to be a part of, basically for all of 2021, right? But like we said, the law of nature of cycles and markets are basically an extension of human activity, and humans are an extension of nature, right? There's a season there's a season for every market sector. So I think the macroeconomic environment is evolving in a manner that is bullish for precious metals, but that's not what I'm sharing this slide for. It's to show you the falling wedge pattern in Pan American Silver. All right, and then we have the inverted head and shoulders pattern. We're looking at a weekly chart of Baker Hughes. So one of the things I didn't put on a chart here, but it does tie into other themes that I shared earlier in this discussion, was that, I said the longer term trend overpowers the short term trend most of the time. And then the breaks of longer term support and resistance levels are more significant than breaks of shorter term support and resistance levels. And so when it comes to price patterns, we can take that a step further and add additional context to the duration of these patterns. So the saying goes, and again, I didn't come up with it, but it's important to keep in the back of your mind. It goes, the bigger the base, the higher the space. The bigger the top, the bigger the drop. So in other words, when you see these price patterns forming over larger or longer periods of time, it usually means a big move or a big reversal is on the horizon. So I share that to provide further context for this weekly chart of Baker Hughes, because what we have here is an inverted head and shoulders pattern. An irregular head and shoulders pattern would just be this pattern flipped upside down or right side up, so to speak. So what we have is an upper horizontal trend line acting as resistance, otherwise known as the neckline in these head and shoulders pattern. We then have a left shoulder, which is kind of like a saucer or what you would, similar to what you would see in a cup and handle type of shape, or a parabola. You have a head, okay, and then you have a right shoulder. But I'm going to share a little secret with you that I've picked up over the years, and I doubt that I'm the first one to notice it. These patterns tend to be more powerful when the low of the right shoulder is higher than the low of the left shoulder, and that's in the case of the inverted head and shoulders pattern. When you are looking at a regular head and shoulders pattern, so if we were to flip this upside down and we're looking for a reversal of a bullish trend, you would want to see the right shoulder high being lower than the left shoulder high. But again, bigger the base, the higher the space. In this case, you see how we basically broke out. We confirmed the end of a multi-year bear market in this stock, because we know that energy was probably the worst place to be throughout the 2010s. And I think a lot of the rally that we're seeing in this sector is a result of underinvestment for years in the sector. I mean, from a practical standpoint, there's nothing wrong, with wind power or solar power. The question is reliability. And then, you have to factor in, there were some heavy storms that hit parts of the South in the United States today. You see these solar panels just being ravaged by tornadoes or hurricanes, so I think a practical hybrid solution where, we rely on solar and wind power and, alternative forms of energy when we can, but then when the rubber hits the road, you need to understand that it is still convenient to use conventional energy. But the reason I go off into that diatribe is that, we had a generational historic low unfold in energy in April of 2020, where crude oil experienced what I call hyperdeflation. I didn't know that could exist, but apparently it does. When the price of oil in the nearby futures contract fell into negative territory. Granted, it was the last day that nearby contract was trading, but again, just goes to show that I think the last 2 years have taught us that really anything can happen. But coming out of that low, we saw a big recovery in a lot of these energy stocks, but we did see some uptrends established in a lot of these energy names. So like in BKR here, this higher low here was a really good sign. And then we made the higher high. But if you're looking at a 10-year chart of this stock, you could still say, hey, we're still making lower lows and lower highs in the longer term picture. But then when you incorporate your knowledge of price patterns into your analysis of these stocks, you say, well, okay, we're in a 10-year long downtrend, let's say, in Baker Hughes. But, we've cleared some important resistance levels. Those now become support, and we're coming up against a very important resistance level right around this, $24 to $26 zone. And now we see an inverted head and shoulders pattern. Well, that's going to say, I think this long-term bear trend in energy stocks is pretty much over. So the catalyst to get long on these energy stocks, but in this case, BKR, whenever you observe these inverted head and shoulders, is on a break above this upper horizontal trend line or the neckline. And that's what we did. We shared this stock, and it's just taken off and keeps making higher highs. So it's looking pretty bullish on this front as well. So that's all I had for the chart patterns. I do want to talk about volume very briefly. So basically, volume is trading volume represents the number of shares traded within a given time period. Stocks rise when there's more buyers than sellers, and stocks fall when there are more sellers than buyers. And it's more there's an art in learning. What is this, a cumulative price action, or is this distribution unfolding? And there's also a way to like look at capitulation, because like I said, there's a tendency for humans to sell the most at the low and then buy the most at the high. So let's look at an example of the S&P 500 and tie it all together based off of everything we talked about today. So let's start with the trend of analysis, right? So we know that stocks are in a long-term uptrend, higher highs and higher lows. Let's then look at support and resistance levels. So we saw what now is a resistance level. It was support for a period of 2021 between 4,550 and 4,600. We broke below that support zone, which now becomes resistance. Okay, and then we've identified another support zone, basically between 4,000, 4,200, and we see how prices have hung out in this area a couple times before. That ended up holding spectacularly during this last decline. But we did share before that, we left the door open for additional downside basically up until last week. And you need to stay open-minded. You need to stay flexible, stay nimble in these markets, because their inherent nature is mutable. It's always changing, right? So I can be bearish, when we close at a new low here, which would have been, 2.5 weeks ago. But once we, gapped up, it would have been last Tuesday, and then, soared through the Fed meeting, through the rate hike. We did talk about we mentioned it before, how the rate hike could turn into a case of buy the rumor, sell the news. That's all priced in, everyone. The Fed has been very transparent, saying we're going to raise interest rates this year. So what do you think, that people aren't acting off of that type of rhetoric? They are. So it's priced in. But if that support zone of 4,000, 4,200 would have broken, we identified another support zone in the $3,800, $3,900 area. But we springboarded off of this. And I want to point out, look at the volume bars down here. We had 3 weeks in a row of abnormally high volume. The first 2 were on selling. And I would surmise that last week was on buying and short covering. So as we had that rally, that really strong rally, a lot of shorts were forced to exit their positions, which creates a short squeeze. We also engulfed 4 weeks worth of price action. It really doesn't get much more bullish than that. So let's also tie in a price pattern. We talked about the descending channel, right? Continuation pattern in the context of the longer term uptrend. We just broke above the upper trend line of this descending channel. So if this is a continuation pattern, and we know that the longer term trend is up, does this lead to a continuation of the trend? Probably, but we need further confirmation, right? So basically, you can make an argument that stocks are neutral right now, leaning bullish. So let's say we're neutral, leaning bullish. The weight of the evidence suggests, from a risk management standpoint, it's more prudent to be bullish right now. But we need confirmation via a close above 4,550, 4,600. If that happens, look out above. That's all I got to say. Stocks do tend to do well in rising interest rate environments, historically speaking. It's when you get later into the cycle that starts to change. So the big thing to keep in mind with this Fed, monetary tightening cycle is that they just took away the punch bowl, right? Which means liquidity is lower. Just because liquidity is lower doesn't mean you're in a bear market. It just means you see wider price swings. Volatility works 2 ways. It's not just to the downside. It works to the upside as well. So you're going to see wider swings to the downside, wider swings to the upside, so long as the Fed is engaging in a monetary tightening cycle, which makes it all the much more important to know how to read the trend, to know how to read support and resistance, to know how to read chart patterns. Okay. With the advent of 24/7 markets, especially when it comes to crypto, I would argue that it's becoming more and more of a basic tenet of financial literacy to know how to read markets. Gone are the days where there are no future markets and the Dow Jones, or these stocks trade for 6 hours a day. Those days are gone. Futures markets trade 24 hours with the exception of, a couple periods of, it being closed for settlement, for an hour at a time or so. So you need to know how to read price. You need to know how to read these charts. And on the daily chart, on the S&P 500, tying it all together. So to keep this chart as clean as I could for you, we hit another level of short-term. Well, let's start with the trend analysis. So we talked about how stocks had a short-term downtrend to start this year, but I really like how we made a higher low in the middle of this month, and then we took out this high from earlier in the month. So one can make a case that we created a short-term uptrend. We also took out this high here, but you see the importance of this high right around the $4,550, $4,600 area. So if we take that out, I think it's off to the races. So we had a resistance zone in the 44.55, 44.75 area. We took out, so now that becomes support. So I do lean bullish as long as we're above this former resistance turn support area. And now I want to see this $4,550, $4,600 level exceeded. If so, like I said, look out above. The shorts are going to be crying. And, the sentiment is still pretty bearish, if you would ask me. And so there's going to be a lot of short covering. And stocks tend to rally most when people are most skeptical of what's unfolding. So, and then we have the falling wedge pattern here too. So again, the catalyst is to get long on a break above the upper trend line of this pattern, as we discussed in that Pan American Silver example. So that is all I had for today. But the fact of the matter is I can only share so much in this allotted period of time. So great way to stay in touch and keep learning. I am not a fan of the word expert. I prefer to view myself as a perpetual student of the market. I've been humbled enough times, especially early in my trading career, where I like to view myself as a student and the market is the teacher. So there are multiple free online resources to continue your education as a trader and as an analyst. In terms of books, you have the Edwards and McGee, you have the John Murphys, you have the Ray Merrimans of the world. Those are all very good to continue your education. And then if you like what we shared today, I would encourage you to check out our Benzinga breakout series, because I like to say we want you to earn while you learn. We are giving you the total breakdown of how we scan and select for trades, and then giving you actionable trade ideas. So that's all I had for today. I don't know if we have any time for questions, but maybe we can take a couple.
Yeah. What about looking at some live charts? You got a couple minutes for that?
Yeah, I would have to. Well, can we look it up on your screen, Luke?
Sure, but I'm not going to have what you want, but we'll try it.
Yeah, that's okay. I should be able to read it still.
Alrighty. How about Chewy? First one. I'm guessing you want 1 year chart with daily candles.
Yeah. So with Chewy, let's start. Let's review what we talked about in this lesson today. What is the trend on this over the last year or so? I would say it's lower. We're making lower lows and lower highs. However, the rally off of the low a couple weeks back does provide cause for optimism, especially if we can take out. Can you zoom in a little bit more? What's that high from? It would have been like end of March or so. That most recent high.
March, 54.50. Let's call it.
Yeah. So let's say Chewy gets back above 55. We would have the first case of a higher high, which from a pure trend following standpoint would give you the catalyst to get back long. So yeah, that's how I would approach Chewy.
Okay. All right. So you'd wait for that 54.50, and then you're letting it ride.
Yep.
All right. BTBT. That's the next one I see in the chat.
Oh, this was a meme stock.
This was sort of. It was a crypto stock. It was a crypto stock.
Okay. Yeah. So the big thing here is the trend, right? The trend is your friend. I would say I trade with the trend like 95% of the time, unless I'm going for a very short term. I make the joke, I'm only a day trader when I'm wrong. So most of the time I'm trying to trade with the trend. And even as a swing trader, if I'm swing trading, against the trend. It might only be for a couple days, but here too, the trend is down. So I would wait for it to get back above that high from earlier in the year, which is around what, like $5, Luke?
Yeah, something around there. Let's see.
Yeah.
High,
So I would actually,
it's 6.
Okay, so above $6, I would be aggressively long BT, because we know that these crypto stocks can really run, and so that history should be respected.
Okay, and then what's give me one that you like right now. What one that you're long and strong right now? Let's pull it up live.
One that I want to get long soon, or one that I just got long?
You pick.
Okay, let's look at another energy stock, CPE, Callon Petroleum.
Oh Jesus, can't type.
Okay, so let's zoom out a little bit, just a little bit more.
I'm gonna go to weekly candles. Here's weeklies.
Beautiful.
Is that okay?
Beautiful. Yeah, beautiful. Okay, so trend, higher highs and higher lows. That checks box number 1, right?
Mm-hmm.
Are we near a level of resistance if we want to get long? Yes, we see how you can zoom in a little more if you don't mind, Luke. I think we're around
more zoom.
Yeah. Okay. So we're around like $58, $60 that we can identify that as a level of resistance, right? Now for the chart pattern, I see a cup and handle there. You see how there's like a U-shaped parabola on the left side of the screen there, and then we have a handle portion on the right side of the screen there. So I see a pretty strong uptrend. I see prices pressing up against resistance, and I see a cup handle. So we satisfy all of those factors there. Now I'm guessing, I don't know off the top of my head, but Luke, is there a way? All the old timers told you about CPE.
Yeah, I love that one.
Yeah, I like that. Is there a way by chance to look at short interest on this stock? Because I have a gut feeling that this is a stock ripe for a short squeeze.
Got it right here. Benzinga Pro, 16%.
16. Okay, so that's not too high, but there definitely is a short interest at play in this stock. I know we typically like to see that a little bit higher, but I will say this: if we break above $58, $60, those short sellers, if they are managing risk prudently, are probably going to be covering those shorts, which
okay.
add further fuel to that rally. So that's one that I have on the radar today.
All right, that's an interesting one. And then you never do yourself justice, so I'm gonna do you justice for you. How's that?
Sure.
Okay. All right, guys. I've been working with Gianni for a number of years now. Like I mentioned, I edit one of his weekly newsletters. And the guy's been red hot this year. There's no doubt about it. If you like what Gianni's doing, if you thought this was interesting, you want to learn from him, and I'll give you the caveat, you want to get all of his entries and all of his exits, right? So it's not just like, hey, we're talking like we are today, but you want to make this tactical. You want to take it with you. You want to get the entries and the exits. We have a crazy boot camp promo. Yes, Gianni has a live trading room. I don't think he's seen that 85%. I hadn't before about an hour ago. But it brings it down to $900 a year, and there's a 30-day money back guarantee. Okay, so if you want to hang out with Gianni all day, you want to get his exits, you want to get his entries, maybe flip flop that order. You want to get his entries and then you want to get his exits. You want to ask him questions. You want to do webinars, that sort of thing. There's no reason not to give it a try. I'll paste the link in the chat. Because again, there is a 30-day, no questions asked, money back policy there. So we get a ton of people who come in, they'll try it out. They'll say, hey, this is a little too active for me, or maybe this isn't active enough for me. My life changed. I can't trade as much as I was hoping to. Hey, no problem. That's cool. We just want to keep people in the Benzinga family. We want to keep them happy. We want to add value. That's why we do these boot camps. The coupon code, I'm going to put that in the chat too. BC March, Boot Camp March. Benzinga, Charlie, the word March. Okay, you are going to want to make sure you apply that. That's how you're going to get that 85% off. And again, it's no reason not to give it a go. Gianni's ratios that he's looking for are 1 to 4, right? If he wants a stock to run 40%, he's going to cut his losses at 10%. Yeah. You don't need to be right often in order to at least break even. And again, he's been red hot this year. So check it out, guys. Link is in the chat, and it's for our special boot campers only.
Sweet. Thanks, Luke.
Cool. Awesome, sir. Appreciate the time as always. And again, I think you have one of the best backgrounds out there. It's so
Thank you.
wholesome, you know?
Yeah. Well, it's a pleasure as always to be with you. So thanks for having me.
Absolutely, man. All right. I see Spencer Israel hanging out in the background. I don't know if he's popping back up for us. I want to do hot stocks check alert. What's up, Spency?
Do you want me to pop on? We have our next guest here.
I always want you to pop on, Spencer.
Okay. All right. I'm here.
Spencer is my best friend.
That's not true.
You're my best friend. It doesn't mean I'm your best friend.
Okay.
All right. Our meme stop rally is holding up. Nothing crazily interesting from the last time that we checked in. Let's throw a quick spy check. A couple red candles here. We're looking at, I believe these are 5-minute candles we have up. Yeah, 5-minute candles, 2 days right here that we're looking at. So we're getting a dump in the past. Let's call it 15 minutes or so. And then the other one we had our eyes on, the Chinese stocks were outperforming. And it looks like those are starting to pull back a little bit too. Anything else crazy that's happened in the world in the past hour, 2 hours news-wise, Spence?
No, not really. I mean, a lot of Fed speak today. They're all out in full force. I mean, Powell was out this morning. But I, like you, Luke, am keeping a close eye on the GameStop/AMC trade and the cannabis trade to a little bit lesser extent, like Tilray, which is giving back a decent chunk of its gains from after hours. So that's what I'm watching today.
Wait, Spencer, let me ask you this. I love that the meme stops are back. That was so fun. Like 2 years ago, that was a blast. A year ago?
1 year ago. Time flies. And it was more fun. It definitely was fun.
It was so much fun.
No,
from like a news reporting standpoint, like we do all day, it was a blast.
Agreed.
So I'm thrilled.
So, well, I don't know if back is whatever. They're back trending, which I guess is better than not. But who do we have next?
We have Anne-Marie Baiynd.
Yes.
Favorite of yours, favorite of mine, favorite of the crowd. Check it out. I've got the agenda up on the screen. This is our March boot camp. 23 months in, almost a 2-year anniversary of doing these boot camps. Anne-Marie has graced us with her presence so many times. We're so honored to have here. And if you're just joining us or you're new to the boot camps, the idea is to do a deep dive, right? There's tons of education out there that's in 30-minute bites, 60-minute bites. We take the whole day. We say, let's take 1 day a month. Let's set aside the time and let's really dig in and try to learn some things here, right? Pull out the notepad, write down the notes. Let's dive in with our speakers. So I am going to pull the agenda off the screen. I'm going to pass it over to Anne-Marie. Welcome to another boot camp. We're happy to have you.
I am so excited to be here. You can hear me, right?
Yes.
Great. Excited to be here. We're going to talk a little bit about price targets and how to set them in particular environments. And so what I sort of wanted to do is, no problem at all, Spence, just so you know. What I want to do is sort of pick something up and go, all right, why are we looking at a chart, and why would we want to trade it? And then where might we be going? Those are the things that I think are thanks for all that great love out there. I appreciate it. It's great. I love being here. I love sharing things. What we're looking at right now is SPY. And so what I want to show you is why we really look at something like a VWAP, right? And if we take a look at something like SPY, I'm going to slip over to the future space, which I love very much. I trade it a ton, but it's going to give you the same kind of motion. And there are two things that you want to look at every day when you're an intraday trader. You want to look at two things. You want to look at what's the opening tick at 9:30 in the morning, and where is the VWAP? On top of that, what is the slope of that VWAP? So let's pick one of these memes. Can we do that? Luke, give me one. Give me a meme. Okay, I'll pick one. AMC. All right. So I want to double check that we've got. Let me see if I can pull it up on TOS. Sometimes TOS can be a little bit squirrely when I'm sitting in the Motive Wave platform, like right here, AMC. All right. Okay, so we've had the memes, and they're very big. I want to show you what. See this little price action right here that you see popping up and down? This is something called a depth of market. It tells you where the orders are going in and out. And that's a great thing to look at the more developed that you get as a trader. But we're going to look at something really simple. I'm going to take all of these studies out, and we're just going to look at something that says, oops, I definitely do not want to take the VWAP out. We're going to leave the VWAP alone because we want to look at the VWAP. But we want to look at where the opening tick on the day is, and where the VWAP is, and what the slope of that VWAP is. And so it's going to tell you two things. And I'm going to write them down very quickly so that you can see them and take these as notes. All right. And we're going to do this live, real time. Do the setup very quickly, and we'll talk about what's going on in the chart, whether it's going to fade, whether it's going to lift, whether it's going to move. And we're going to watch me to see how right I am, right? I love these sorts of things where I'm got my feet to the fire. And so this is it. So a couple of things you want to look at are, the first thing is, number one, what's the opening tick? And that means what was the first price that came out of the gates? And then you want to ask, let's do that again. You want to ask, what's the opening tick? And then you want to ask, what's the VWAP? And then you want to ask, where is price in relation to the VWAP and the opening tick? Something very important that a lot of traders think about is, hey, where am I relative to trend? And a good trader is always going to think about those things. So I'm going to copy and paste this because it's going to be easier for me to write into after the fact. So number 3 is going to be, what's the slope of the information? So why do we want to know this? Why do you always want to look at your backdrop? You want to look at the backdrop. What's the slope of that VWAP? You want to look at the backdrop because the backdrop is going to tell you what the power of move that you're actually looking at. My anal retentedness is now going to want to square these up. So what we are looking at clearly here is something that came into the morning. It was below the VWAP, but at the close of the prior day, it moved down and then it started to hold. So as a trader, when you come into the day, you're going to want to notice that for yourself. You're going to say, okay, here I am coming into motion. I'm going to get rid of anything that is noisy for us right now. All we're going to care about is the VWAP. And what you might see that what I actually have here is a confidence interval. It's kind of like a Bollinger Band using the VWAP as the middle. And so here's what you're going to see. Look what happened. As you came in to the open of the day, there's 9:30. It opens here. It drops all the way down, but it holds the close of that prior day once it starts moving up into this region. Let's see where the close actually sat. That's 5 o'clock. We're looking at 4 o'clock right here. That's where we had the close of the prior day. It came right into it, and then you started the move. So one of the big things today, my commentary was, how do we set price targets? So this earring keeps sounding off on my mic, so I'm going to take that off. So as we're looking at that, the one thing we want to look at when we are preparing to enter a trade is, are things sitting in my favor? If you are sitting above the VWAP and above the opening tick, you want to think about long trades, and you want to think about long trades into the prior highs, right? And so that's going to give you your first target. What's the prior high? That's the pre-market high. I have that posted right here. At the point that you get to that area, you have a decision to make. Now, a lot of us that love these high flyers, we like to go for broke. And so the reason that it's called go for broke is because you can actually go broke doing that. Go for broke, normally everybody goes, oh yeah. But go for broke actually means go, but you could go broke. So just so long as you remember that, you're in good shape. So here's what I want you to think about. Now, this is a 30-minute chart. Notice you don't need a 5-minute, you don't need a 2-minute, you don't need a 1-minute. You need the opening tick, and you need the VWAP. And you also need that VWAP to carry slope. So now we're going to delete all the momentum information because we don't even need it. I'm going to show you just how looking at price can tell you what you need to do about raising your stop and continuing in motion. Okay? All right. So here we are. We know this is how we get in. We watch for the opening tick. We wait until it gets above the VWAP. Once it closes above the VWAP, Bob's your uncle. So that gives you the 930. You want to let that candle close, right, to see where you go. You want a low to present. And as soon as you get above the VWAP, you can trade that VWAP, but you know the low is all the way down here. And if you do that, that becomes your risk. Make sense? You're looking at a chart that says, hey, I got my low here. Let's go now to a smaller time frame so you can see it open up. If you're like, there's no way I'm trading a 30-minute candlestick when I'm trading a meme stock, that's perfectly fine. The goal is you want to trade above the VWAP, but realize the low made on that opening pressure event is going to define your stop. All right? So here we go. Let's look at this. We're going to write it here. Defines the stop. Okay, so what defines the stop? The low action. Hello, that's not how you spell that word. Into the opening tick. All right? So why do people like the opening tick so much? I don't know, but very big money looks at that opening tick and they define these ranges. And we do know that if we hold the close of the prior day, we're going to have ourselves some bounce action. All right. So still high, still doing really great. If I thought we were going to stop, I would have been talking to you about that. So far, so good. The question is how to raise the stop and what is the next target? Well, this is a not a Bollinger Band. This is a confidence interval band, which is the same thing as a Bollinger Band, but what it actually does is map the VWAP versus a moving average. Okay? So what we want to do when we start doing this is, one, identify your risk. So when you identify stop, it defines your risk. And then you want to say, okay, I want to get in when I'm above my opening tick and above my VWAP, but my VWAP also needs to be upward. So here you can look at this and you can go, oh, here's my opening tick. I'm above my VWAP here, and I'm above my opening tick, but look at the size of the risk, right? The risk is all the way down here. Let's see when it actually gets made. Let's see when that risk event actually occurs. The risk event occurs in the first 10 minutes of the trading formation. So note to self, if you're looking for low action on something bullish, watch those first few moments and they'll define it, right? And that's exactly what it did. So notice, however, that even if you say, hey, listen, I want it to be above the VWAP and above the opening tick, what you really want to manage is risk. That's the most important thing, because if you lose, you're not going to be able to come back and trade another day if you lose enough times with a lot of risk on the horizon. Okay? So far, we're sitting in between these two formations. We're about 3 standard deviations, no, 2.5 standard deviations away from the VWAP. So that's getting kind of stretched. My thought is when you get up here into these 2 standard deviations away, it's time to take a little bit of profit. Okay, so big spike up. You'll notice that it's fading. The question is, okay, Anne-Marie, I have a position. I don't want to go down, but I want to stay and be involved for a little bit more. Well, you're going to look at old resistance, new support. That's going to be the prior high wick and then this low formation here. So what you want to do is now look at a stop being around 20. Okay? I don't really like trading on 5-minute charts. I'm going to go up to the 15 because that's just a lot cleaner to me. You'll notice I can see the same price point, right? That's the overnight high of yesterday. That's where the traders are likely to come in and chop around. Notice, see this big green action right here? That's buyers all setting up, right? It's buyers that are saying, yeah, I hear you, but I'm going to try and get it here, and I'm going to look for this area as a potential warning zone to take care of things. My thought is you get into this type of formation in the VWAP, it's time to take some profit. Notice every time it gets up and through these, you want to do that. Now, just about every platform does that. Let me show you how it looks in Motive Wave, because I love Motive Wave. This one is 1.2 standard deviations away, and this one is 2.3 standard deviations away. That's where it is right now. And the one very far up is 3.7, which is really far. Okay? Now, meme stocks have a tendency to do this. So your thought would be, hey, I'm going to trim some gains, but as long as I stay above my 1 standard deviation, I'm still okay for more upward formations. Every time we come into this 2, it's going to give us a place to take profit, right? Now you'll say, wait a second, every time, Anne-Marie, I'm looking at yesterday's motion and it really runs all the way up. Here's the thing. Notice what happens every time it gets into this number. I am going to change the color there so that you can see. And you can use this. It really, again, available on just about every platform. I'm going to make it super thick so that you can see how it looks. As it pops into the region, people will sell off and take profit. As it comes into the 1 area, they're going to try and stabilize the gains. But just about every time it comes in there, it's going to give you that formation. Now, that's going to be the same whether you are on 30-minute, a 15-minute, a 5-minute. Bollinger Bands are not like that because they will change relative to the time frame. We will not have a change because the VWAP is constant across all time frames. That's what makes it an absolutely fantastic, what's the word I'm looking for? Indicator. There we are. It's a fantastic indicator in grand fashion in terms of seeing what a chart is doing. My thought is, no matter what, I know it looks awesome. Take some profit when it gets here. When it gets back down to 1, the 1 standard deviation, watch it stabilize. If it holds the floor, you've got yourself a shot to add to the position. This is a lovely way to trade. It's very organized, but what you have to do is sit on your hands and wait for the price to come in, right? Here it's coming in right into this edge. What do we want to see it do? Well, we want to see it hold the zone. See how people came right into that region and they bounced. Now they're going to bounce there because this is where their candlestick action is sitting. But the floor for the support zone is really about $20.65 now. So when we look at that, we can go, oh, I see they're holding. Now let's say you've had this meme stock all day and you're going, wow, I wonder where it's going to go. And I said, hey, take some profit. And so you decided you're going to take half your profit. Listen, a lot of new traders, they have an all or none idea about trading in the market. I want to tell you that trading around a position is what a good portfolio manager does with attention to risk. Okay, so learning how to go in 50% and then add maybe at a support zone if you jump in too early. Yes, that's cost averaging down, but if all your moving averages are moving up, then cost averaging down works. Cost averaging down does not work if all your moving averages are going down, because that just means you're looking for another lower level. But if they're all moving up, you're in great shape. Okay, so that being said, this comes right into this line and bounces. So what is that line? It's 1.2 standard deviations from the VWAP. The VWAP sloping up. We have a big volatility expansion. Price action's great. If you want to add to the position, you can say, hey, I'm going to come in anywhere around 21, but I know that if I lose 2060 or 2050, I might come all the way back into that VWAP, right? Because notice, see, here's what happens. This expands well outside of this formation, right? Well outside this edge, just really breaks up. And then it loses all its steam. So if you're thinking to yourself, ooh, I get to short at the top of these bands, if you're playing the game, that's not really what you're looking at. One, because it's a meme. And the only place to short a meme is at a last high that has a blow off top, and then you always get it at support. Okay, so it's a little bit past lunchtime and traders are sort of, sloshing around. So you can see price action holding here to the upside. So here is what the formation is going to look like. And then we're going to step into another something that's moving. And let me take a look at what my scanners are telling me that's moving, and we'll hop to that in a certain space. All right, great. All right, so we're looking at this. Everything says stay long. Your stop can be moved up to, 2040 if you want to go all the way back here. But my thought is if it comes all the way back here, it's going to dip down into the VWAP. There's just not enough ledge holding. I say if it loses, 2062, let me put on my glasses. If it loses 2062, then it's probably time to leave that sitting in the space. Otherwise, we're going to rise up into 2203, and then we're just going to walk between these two bands, right? That's going to be the price setting formation there. Another way to do this, if you're so inclined, looking for intraday motion, is to put a Fibonacci in the environment. And so you might go to pre-market high and opening market low, just any kind of wave that you see there. And it's going to show you your price extension. This is the 1618 price extension. So isn't that clever? That's normally a place that price action will collapse, right? It'll have a retest of the 100. It'll go to the 127.2, and then it'll hop up to 1618. So if all goes well, we're looking at 2264. You can see sellers up there, right? Using a depth of market formation. If you don't have depth of market, that's an absolutely fantastic tool if you know what you're looking for. So notice they're going to buy here at the base, and they're going to play in between this channel as it moves up if all goes well. And so we're going to put also an alert here that tells us if it comes down that far. Oh, for heaven's sakes, I'm such a dope. All right, let's try it again. We'll put an alert here. Crosses below. Yeah, gotcha. All right, so now we're looking for that. And then we want to see what the breakout action looks like. Remember, breakout action in these kinds of formations are going to give us wicks. You never want to chase those because they will collapse on you, no doubt about it. Where they collapse is always an interesting thing. But the next profit zone, if the market does any kind of bouncing, maybe not. Let's do crosses above. And here we go, all the way up here. All right, so that's the next place. This is a little bit before the stop, and it's going to rotate to the north. Okay, let's try another one. Does anyone have does anyone have any examples that they want to look for? I can't see my YouTube screen, so if not, maybe one of the folks can show me in the private chat what might be going on, and I'll take it from there. Otherwise, let's take something like, oh, this looks quite green. You want to take something really green or something really red? What shall we do? Really green or really red? Let's do Adobe's really red. Yeah, Adobe's really red. Baba. All right. We'll go on. Let's try Zoom. Make sure I'm pulling up the right thing. We'll go to Zoom. Okay. Have a peek. Got a lot of study action here in Zoom. Love the 4-hour formations. I know a lot of people don't use those, but I sure do love them. They are absolutely fantastic to help me see what's going on intraday from a bigger kind of range. All right. So now, if we take a look, we're not going to do that. If we take a look at Zoom, Zoom actually looks like it's recovering fairly well, right? Let's go to the 30-minute and see what the day looks like. Let's go over the things that we learned. 1, where's the opening tick? 2, where's the VWAP? 3, what's the slope? And am I above or below it? Remember, if we are above the VWAP and above the opening tick, the price action is going to be upward into the prior highs. Now, what might those be? Pre-market high, prior day's high. Notice what happened here. Just shy of the pre-market high, this chart started to give it up. So let's take a look at a Fibonacci and see if we can see that we had ourselves a little bit of a prediction. All right, so interestingly enough, this is our 88.7. Yeah, that's very interesting. It just came into this heavy congestion into the overnight and just decided it was not going any further. Notice, if I lose this channel, this is why the VWAP is it's fantastic to study. If you look at this channel, you can see that for a time it trades from the bottom to the top, from the bottom, not quite the top, and then it starts to break, gives me a new high, but it breaks and closes under this. Once it closes under this, it's very likely to come in to the VWAP. Now, we ask ourselves the same question. Is this above the opening tick? Yes. Is it above the VWAP? Yes. What is the slope of the VWAP? Well, it's up. So watch how it breaks the VWAP, right? It comes down into this area of 117. I'm going to put a guide there. And then it holds. You know what? I am going to see if this will manage the YouTube feed. And I'm going to see what the chatter is so I can get some live stuff, because I want everyone to see this live action motion. All right. Let's pull it up. Aha, here we go. Ta-da. All right. So I'm going to turn the volume off. Yeah. And then oh, there I am. And then I'm going to say, aha, NIO. Love it. Love it. Love it. Let's go here. Oh, I want to tell you, if you're looking at this, remember, the risk on a long is always going to be the low made when it breaks down under the opening tick. So if you say to yourself, oh, I'm above the opening tick, I'm above the VWAP, what you have to think to yourself is, all right, my stop is all the way down here. My stop is all the way down here. So do I want to take this trade and see the bounce? And if so, with that kind of risk, do I want to make sure that my size is smaller, or do I just want to wait to see it resolve above that VWAP again? That's my philosophy. Let it get out of here. If it's got room to run, great. Let it get out of here. Let it come back. Let it stop into the next candlestick. All right. So let's have a look. Somebody wants to see NIO. Let's see if I can find that. All right. Taking a look at the price action here, this is kind of sideways, right? This isn't a great trading day here for this one. I would say, let's go to the 30-minute. Again, what do we want to do? Where's the VWAP? For heaven's sakes. Delete. Where's the VWAP? Where's my opening tick? Right? So Here's the opening tick. Here's the VWAP. Look at the low that was made coming into the morning event. That's the risk for any kind of long, okay? If you are coming downward into the VWAP, yeah, this is a 30-minute, okay? So taking a look at 30-minute on NIO right now. So again, you can see there's a lot of activity here. A lot of activity here. What are the traders trying to do? Right? They're going to come back and test this VWAP. Sure as the day is long, right? They're going to come back and try and test this VWAP. That was the prior day's close that I just got rid of. This here is the volume point of control for the prior day. The volume point of control is all the way down here for this chart. So if you're saying to yourself, where's NIO going? Well, it's going down here. How can you be sure, Anne-Marie? Well, I'm not sure of anything. Probabilistically speaking, once you start trending above your moving average and you hold your opening tick, you're going to trade in between band 1 and band 2 of your VWAP, right? If you lose band 1 of your VWAP, you're going to come in directly into the VWAP. That is just what's going to happen. So, here's the thing. Anything could happen. That's the scary part of the market, right? Anything could happen. Anything at all. So your thought should be, well, what's most likely to happen? And can I position there knowing what is most likely to happen? And so that's what we're doing. Now, NIO had a very nice morning. But if we take a look at what's going on with this chart and we say to ourselves, what's going on with this VWAP? This VWAP's essentially flat. So notice, do you see this green spike up over here in the corner? Again, this is depth of market. It's a fantastic tool. But what it's telling you is where the buyers and sellers sitting. Notice we're coming into the VWAP. See all the big greens and the reds, right? This is going to be the stop for some people. This is going to be the short for some people. And this is going to be, hey, I'm going to buy the VWAP. Some people. Where is the risk? Well, the risk is all the way down here. Now, you could say, Anne-Marie, really, statistically, where's the risk? Statistically, the risk is going to be at the 1 standard deviation in general. But if you have an upward slope and you're above your VWAP, you're going to see traders try and buy this line in the sand. So if you said to yourself, hey, I'm buying this line in the sand, I'm doing it, right? Now you know, okay, what's my risk? That means where are you going to cut and run? You see this? This is a volume profile. And it tells you where the majority of positioning is, right here. So it's sitting right here in this lump. Could it be that price will come back to this edge? Yes. What do I like to do in things like this, right? Let's say it's coming into the 30. I'm on my 30 minute, excuse me. Let's say it's coming into the VWAP and I think to myself, hey, there's AMC coming all the way back down. That's great, right? We'll go look there in a second. That's the support zone. That should tell you, hey, I probably ought to get out of Dodge. So that in itself is telling us something about what the broad action in the market participants are all about. Okay, so here we are looking at this space, and it's come right back down, and it's holding the edge. So your thought is, do I want to buy here? Do I want to sell here? Well, I suggest you do nothing here until you figure out what the traders are doing. So let's figure it out. Let's go to the 5 minute and look at them battle around the VWAP. Obviously, you can see they're trying to buy it, right? Your thought should be, well, if I buy it, where's my stop? And you want to really obey that stop. And to me, maybe 2150 gives you a little bit of room. But my thought is, why open yourself to risk here unless it's very small and you plan to take a bigger position a little lower because you anticipate a return to strength, right? My thought is, if it comes in on this downward motion, you want to let it bounce and let it recover. What's it need to recover? 2183. Right now, this doesn't look very good because if it loses this, it's going to go to this one, and then it's going to go to this one, right? Right now, the range expansion on a 5-minute formation is showing this edge really all the way down here. So I would not buy that VWAP sitting here just because I think to myself, hey, this is going up. You don't ever want to do that. Why? Well, if you say, hey, I'm buying the VWAP, what you're doing is you're trying to predict where the traders are going to settle out and bounce from. Instead, you should look at the past and say, what did they definitively do and what price did they do it at? So we can see, hey, listen, that's the opening tick. It's very important. You're going to see a lot of buyers. There they are, right there. They're sitting up. And so when you see this formation, you're going to say, oh, I know the opening tick is important. We held that opening tick. I'm going to see how the traders behave at that opening tick right now. If you take a wild gamble and go, hey, I'm buying it here, what is the slope of this arm? That's negative. So the only reason you'd be buying this would because you're thinking it's going to trend back into the mean. And indeed, doesn't look like it's going to at all, right? I mean, not yet. It's just hanging on. If you say to yourself, hey, I want to short this, what do you think about? First of all, number one, where am I relative to the opening tick? Well, I'm battling it right now. Things have been upward. The slope of my bands are up to flat. Traders are going to try and come in and bounce here. If I take a short here, it means that I am ignoring the fact that in the recent past, this was support. I'm ignoring that for whatever, you could ignore it for whatever reason you choose. Instead, I would say, let the traders have their thing here. It's a motion that says they should bounce. If they bounce and they cannot get above this 2210 area, then yes, we've got ourselves some good price action that says I'm going to fade. What do you notice about my approach to the chart? It's always take a look at the landscape, define the relative trend. When it's sideways, you will have no edge. You will not have an edge if you are looking at just sideways action. It means that nobody has power to move. And the only way you can move the market with that kind of power is if you have a tremendous amount of size. And most of us don't. So we wait for everyone else to do what it is that they have to do. Okay? So we wait. Sometimes waiting is the hardest part of being inside of a trade, right? Let's let the power of the market tell us where it's going, and then we can establish our position and have a low level of risk. Right now, if I go short or if I go long, it's going to be a coin toss for either direction. And you don't want it to be a coin toss on an intraday perspective, right? You could go for a coin toss at a deep support zone, but at the end of the day, are we in a very big spot? Some would argue, yes, I'm at the opening tick. And if I don't hold that, and if I don't bounce above my VWAP, I'm headed lower. You know what? That's usually true. But at the first pass, they are going to try and get above the VWAP. It's about failing that test that allows you to go short. Okay, so let's anticipate the short trade, because you go, nope, I don't care, it's going down. Let's say that's your bias. Your stop is all the way up here. I don't know if you love that stop. I don't love it intraday if I'm carrying good size. I want to take a short where everybody else has been short. I want to take a long where old resistance becomes support and I have a managed risk. So here I say, you know what? I'm going to take a long and I'm going to watch it bounce, because I know the majority of traders are going to say, here I am at the opening tick. I'm really close to the VWAP. Let's try and bounce this baby. And so here it comes. Let's say you've taken the trade. Let's say you want a tight stop. Literally, you could put it 20, 30 cents underneath that opening tick. What this example shows you is how incredibly powerful that opening tick and the VWAP in combination are to watch. Because if we've been above the VWAP and the open of the VWAP is lower than the current VWAP, it means that price action is still trending to the north, right? And so this little motion here tells us what? It tells us, hey, we've got to get up over this line. 21, it doesn't matter if I have my glasses on, if I have my glasses off, I can't see it. I'm going blind. 21.88, right? So here we are at 75. It's trying to do its thing. 21.88 is where we're going to go, right? If you think of yourself, 21.88, I want to go to 27. Realistically, when you trade in these kinds of formations, here's what I want to have you understand. The takeaway is that if you run on small time frames, you must look at small levels to bring you back into motion. The bigger the time frames, the more relevant the bigger price points are going to be in your favor. Now notice this. See the opening tick? It never changes through the price formations. The VWAP never changes through the different price formations, 30-minute, 15-minute, 5-minute, whatever. But this tells you where price action is going to go. Well, I'm going to go into the last candlestick that was the low here, and I'm going to take some profit, right? That's where they're trying to get to. Once they get there, they're going to say, okay, now I'm going to go here to where that 30-minute candlestick opened, and I'm going to try and reverse that. What is the slope of relative trend for the last 1, 2, 3, 4 candlesticks? It's downward. So who's going to be sitting here at this wick? Sellers. Take a look. They're sitting there at the wick. Can they be overpowered? Yes, because there are likely to be more buyers when the VWAP is close by, especially since the opening tick of the VWAP is lower than the current VWAP, and that means price is trending to the north, right? At this juncture, you can look at this and go, ooh, here I am up here. If you say, Maria, I don't want to take any profit, right? I don't. I just want to sit in here and see if it moves up. You can move your stop to the low of this candle if you're looking at the 30-minute formation, right? Because the traders are literally walking up the 30-minute candle. That's what they're going to try to do. my takeaway for us, and I know I'm using the word takeaway a lot, but I want you to see what to do. I'll answer that question for you in just a second, sir. What I want you to take away is you get very good information if you look at indicators that do not change relative to time frames that you're staring down. So whether you're looking at a 5 or a 30 or an hourly or a 4-hour, the number is going to be the same. My opening tick will not change and my VWAP will not change. That gives you relative perspective. It becomes your gyroscope, right? The thing that keeps you even in the bubble when you're trading in the market. So you can look at something and go, man, why aren't they getting up over here? Because the last 3 candlesticks are downward. And coming into the low, this is motive wave. It's one of my absolute favorites. No, I don't make any money from showing motive wave. It's just my favorite. I love motive wave. But here it is. That's the low. So you know that when you see it come up here, that's the first thing they're going to try and do. What's my pre-market spike and is it the morning low? You can move your stop up here. If it can't get over here, it's not going to get up here. But if it can, which it should, it's going to step right back up into this space. This particular shaded formation gives you the probability that price action stays in this area is somewhere around 95%, legitimately, right? So you could look at that and go, holy cow, how can I trade there? You can trade there if you come down into this area and you start to bounce. You go, oh, well, I'm sitting in my confidence interval of about 95%. So I know at least it's going to try to come back into the VWAP. Notice there was a squeeze this morning, this candle, and this area opens up this tightening of the band, and then it expands. So what are we looking at now? Patience. I think we're looking at patience in the AMC also, and in, and in this one. So everybody buys it at the opening tick, and now they wait, right? Your stop, you can move it down here. What's the low of this candlestick? It is 21.58. All right, so let's see. Thank you very much for the commentary there. I appreciate it. Let's see. What other ones do we want to look at? Give me another one. Let's do it. Let's pick one. Give me something. All right.
And Maria, there's a question from the chat about what charting software you're using.
Oh, this is Motive Wave. Yeah, this is Motive Wave.
Okay.
Okay. I love Oxy. I do. I love Oxy. Occidental Petroleum. Let me see. OCCDENTAL. Thomas wants me to spell it out. All right, so we know where our stops are. We know, oh, wow. Okay, so we've got ourselves a little bit of a fade here. That's fine. Let's have a peek. Remember, the first thing is, what am I looking at? What in the world am I looking at? So what you're looking at is a stock that's had a pretty good bounce, right? Let's take a look at something like a weekly chart. Let's see what's going on here. It's been a while since I've looked at Occidental. Yeah, that's had a really big breakaway formation. That's a beast. This is a very big candlestick. Wow. Don't love it when candlesticks look like that, only because they're so far out of the range. Let's go back to the daily. I'm going to delete my price level studies. another thing that we can study about. A lot of people trying to buy this support. Why? It's the open of the prior day, right? You will define an edge for yourself in the market if you go to places where something really important resolved, right? So here, bounce higher, doesn't go over. Bounce higher, doesn't go over. At the second day that it does that, this thing gaps all the way down into the low of days past and then tries to hold it, but still can't do it again, right? So when you're looking at something like this, you have to think to yourself, okay, where are we? Well, we're in a little bit of a breakout space, right? I'm going to get rid of that. I'm going to get rid of this. And then I'm going to go to our 4-hour formation. It plugs it all back in. And we can see that, look at the opening tick, look at the VWAP. When this opened up today, what should we have done? Look for a short, right? Let's go to the 30-minute. How do we look for a short, right? Wow, that's a risky candle right there, right? So as it opens, we watch for what happens with the opening tick and the VWAP. It bounces. The VWAP's been up all morning. We're thinking to ourselves, woo, awesome, great. And then the price action lifts. Now, if you go to the 5-minute and you say to yourself, ooh, where's the trade there? Right? Where's my trade there? You can see upward VWAP, up above the opening tick. Where's it going to go? Remember, it moves in between these two bands. And this band on the 5-minute explodes and it goes where? To the very, very top of the second band. What happens when it gets there? It rotates over to, tell you again, that is 2.3 standard deviations away from the VWAP. Once it gets there, you take a little profit. If the chart continues to trend, it will trade in between these bands. If it doesn't, it's going to test the VWAP. If it loses the VWAP, it's going to test the other end. And all of a sudden, we lose the opening tick, right? So at the point that you lose the opening tick, means you close a 5-minute candlestick under there. Look at the slope. You're under the opening tick. What's the slope of the VWAP? It's down. So if the slope of the VWAP is down and you're under the opening tick, all your bounces are short. Okay, explain that first long downward wick. This one right here is what you mean. For this long downward wick, it's telling you that the chart is in a fade. You don't want to look for that. What you want to say is, can I look at the opening tick? Do not trade in the middle of a candlestick formation. If you're on the 5-minute, you wait until the close of the candle. Okay? If you're on a 30-minute, you wait until the close of the candlestick, right? Unless you are very established and you know exactly what it is that you want to do, you want to wait on the low of that candlestick. Okay? So if you're sitting on the low and that fades, you want to wait. And when it closes, ask yourself the question, where am I? Am I under the VWAP? Yes, but I'm above the opening tick. So if I'm above the opening tick and under the VWAP, a decision is getting made. And you'll notice it takes them 3 candlesticks to resolve. Listen, you can be the hero and say, close under the VWAP, I'm going short. But if you're here and you say that, it widens your risk. Okay? And it's all about risk. All about risk. So it takes them 3 candlesticks to resolve. And guess what's beautiful? After it resolves, Your opening tick becomes your ceiling. It becomes that stop once you break away from that low edge created by your first opening candlestick. All right. And so here it is. It moves all the way down. Always ask yourself the question, where am I? Under the VWAP, under the opening tick, in between these two bands is where a nice trend will follow. If you break out above the trend, two things are going to happen. You're going to test old support, and it could be new resistance, or you're going to run into the collision of the opening tick and the VWAP. All right? And so that really is what you are going to see. All right? So that is that's it for me. I think everybody is saying that 145 is the end of the road. Well, everybody, all the powers that be behind the scenes. Yeah.
The powers that be. 140
Yeah.
is the end of the road. Anne-Marie Baiynd, this is fantastic. The way you talk through charts is always simple and it makes sense. Born to be Free says, thank you. That was excellent, Anne-Marie. I concur.
My pleasure.
Quantum says you're speaking my language. I don't know if we got to this question. Oh yeah, it looks like you did from Black Mage. So, Anne-Marie, tell the people where they can find you.
You can find me on StockTwits. You can find me on Twitter. You can find me inside of the Benzinga Pro app. You can find me at thetradingbook.com.
Lots of places.
Yeah.
Anne-Marie, thank you for coming on the boot camp today. Have a great rest of your day and week, and keep on keeping on.
Thank you so much, Spencer.
All right.
Take care, everybody. Good luck
right.
trading today.
Good luck. That is it. All right, let's do this, guys. We have about 15, a little bit less minutes until our next guest, Ripster. So what we thought we would do between now and then is let's do some trivia. All right. If you've attended prior boot camps, you know that we've been doing these like Slido polls where we like bring them up periodically throughout the day, and you have questions and you got to scan the code, and it's complicated, right? Let's just do trivia the way we always do it, in one swoop, all at once. We'll do like 5 or 6 questions. What'll be where is she inside Benzinga Pro? Great question, David. Before we move on, before I finish with my my trivia explanation, you can find Anne-Marie. I'm correct in that you have an add-on, right, Anne-Marie? Is that's how it goes? I'm not sure if she can hear me. Maybe she can. She may have taken her headphones off right now. David, give me a second. All right.
She just chatted where she is.
Thank you. In the if you go into your chat widget, who asked this, David, if you go into your chat, there should be a. Let me check, make sure it's there. It's in the beta ideas section. So this is a newer feature for us. Actually, Anne-Marie, you want to come back on and say where you are?
Oh, yeah. Hang on.
Yeah.
Let me come back. Yeah, sure. Oh, yeah. You can find me on the beta ideas. And so where you find that is.
Oh, it's here. You know what? Here, I'll share my screen and I'll show people because it's easier that way. So perfect. I'm in Benzinga Pro right now. This is like, oh, you guys can't see. This is the homepage on Benzinga Pro. Okay. You go to on the left-hand side there, you go to the ideas section. See where my mouse is, go to ideas. And this is where Anne-Marie, look at that. Anne-Marie trades. It's right there. Check it out. All right.
Yeah. So I post ideas in there, and I answer questions in there. So awesome. Love it.
All right. Thanks, Anne-Marie.
You're welcome.
All right. So as I was saying, For today's trivia, we got a few questions. We're going to bring on some friends, some old, some new, and just do some stock market trivia and give away some swag. So it's the same way we always do it. Play along by clicking the number that you think the answer is in the chat. And whoever gets the most answers will win some free Benzinga swag. Let's bring on my friends. Let's bring on Aaron Bree with an old friend of the show. Or is he a new friend? I don't know. Whoa, who is that next to you? Who's that in my seat? Their mic is muted. Can we unmute their mics, guys? I mean, this is like basic production 101.
We're oh, can you hear us now?
I can.
Good.
Is that Neil?
What do you mean, old friend?
Yeah, who are you calling old, Spencer?
Me and AB were on YouTube like what? It wasn't more than like 4 or 5 months ago.
Just as long as it takes to go to the store for some milk, we're back.
To go get a pack of cigarettes.
Yeah.
I feel like I've never felt more like the third wheel in my life than I do right now.
Sorry.
Spencer, what's our trivia topic today? I'm really trying to win. Last time I got close to winning, but I got edged out by someone in the chat. So I'm here to avenge myself, to take my throne back in trivia. What's my topic today?
Are we on a team or are we
No, I'm going out for the win. Oh,
Okay.
you got to join. Okay, so here you got to
for
join
himself.
from YouTube from your phone.
Wait.
Why are you telling me now?
And you got to be logged.
Pressing questions. Did Neil ever get a new plant? Yogi wants to know.
Yeah, I got a lot of new plants, and
All right.
then I was away from home for about 2 weeks with my blind shut, and all of them died.
That's amazing.
I have to go plant
a
shopping. I have to
massacre.
go plant shopping at some point. So Neil, if you want to go sometime in the next couple of weeks, let me know.
Yeah, I'll shoot you a text.
right.
Okay, so I'm installing the YouTube app. And what?
Oh my god! All right, then you gotta log in. You gotta be
Enver,
logged.
Enver, are you ready? Enver, are you ready? Give me the thumbs up if you're ready.
Yep, I'm good.
He says it's good. All right, let's start the countdown.
We can be on a team.
Let's start the countdown. All right, and we've got about is it 6 or 7 questions that I made, just about the stock market. Nothing too fancy. About stocks that are up, stocks that are down. Nothing too crazy here, and play along in the chat. And whoever gets the most right, we'll find out at the end. We'll give you some Benzinga swag. Or maybe something more. Neil, it's YOUTUBE.
How do you spell that?
All right. Well, while Neil figures that out, I'm going to read the first question. If you're watching this morning, you already know the answer. This is a test to see who was paying attention. In addition to energy, there is only one sector in the S&P that is up for the year. First question. If you're watching this morning, you have to turn the volume down, man.
I got it.
Which is it? Is it technology, materials, industrials, or financials? 1 for technology, 2 for materials, 3 for industrials, 4 for financials.
The only one. Okay, I know
1,
the
2,
answer.
3, or 4.
All right, get smoked. We gave this answer away at the beginning of the
Oh,
podcast, if I'm not
shit.
mistaken.
All right. Oh, that'd be a great way to do trivia. All questions are callbacks to like tidbits of information shared in the boot camp. Really test who's paying attention.
We gave this away earlier.
Yeah, that's what Neil said. I wasn't here for it, so I got it wrong.
I just said that, and then he says it, and then you say Neil said that. But
No,
Guys,
Neil-
you gotta
Neil-
check your
Neil-
sector ETF charts.
Spencer, Neil
Every
came
day.
in and made a great point that if you were watching the boot camp earlier, you would have known that financials is the only sector leading the S&P 500.
with y'all. It was financials. Congratulations to whoever got that right.
Share that next time, Spencer, and you'll get closer to becoming the true Alex Trebek of Benzinga.
Oh, I see Oxy. I like that.
All right, what is the best performing stock in the S&P 500 in 2022? Is it 1, ExxonMobil? Is it 2, Occidental Petroleum? Is it 3, Kroger? Or 4, John Deere?
Full
Are all those
disclosure,
right?
I made these questions, so I'm not going to play.
Oh shoot, I gotta guess.
Okay.
Seeing some
I'm
4s.
I'm going Oxy here.
I kind of want to go Oxy as well.
Because I don't think it's
Buffett just
Exxon.
loaded it
Because
up.
Chevron's been like outperforming ExxonMobil, so I know it's not. Or
Exxon. Kroger is interesting, but it's probably not Kroger. Then John Deere. I'm unsure. I'm going Oxy.
John Deere's had a good year.
Has it? The best out of any?
It's gonna be.
Oh, let's go. All
right, we both got that right.
right, Neil, your turn. Your turn to read the next question.
All right.
Your best teacher voice.
What is the worst performing stock in the S&P 500 in 2022? Moderna, Facebook, Etsy, or EPAM?
EPAM. I don't even know what EPAM is.
How is it in the S&P 500?
It's in
Or
there.
is it?
What is it? Can you tell us what the company is?
If I go
That
into
you're allowed
Benzinga
to do.
Pro, go into my details.
I'd like to use a lifeline.
Is it like Palm Pilots? EPAM? That's what it sounds like.
An IT services company.
Pam. Okay. IT service. Okay. What is the worst performing stock? in
David Turner, don't
2022?
type FB in the chat. Type 2. You got to type the number that corresponds with the answer. Is how you will win points and potentially become named the Benzinga Trivia Champion.
Seeing a lot of 2s. Y'all must not like Facebook.
Are you on Facebook?
Am I long Facebook? No.
Yeah. What about you, Spencer?
I guess you could say I'm technically. Oh, it's EPAM? Are you freaking kidding me? All right. That was a tough one. A lot of people guess Facebook there.
I am not kidding you. Which of these stocks, there's only like 2 questions left, right? Which of these stocks is not in the Dow Jones Industrial Average? Tesla, Microsoft, Apple, or Alphabet?
I guess you could say I'm technically long Facebook, like via ETFs.
Yeah, same here, Neil. I own it. I mean, I'm on the spot.
But if I had a way to own those ETFs without Facebook, I would.
Me too. I would cut it out if I could.
Should we do that, Spencer? Make an ETF that's just like SPY minus FB?
Well, they're custom indexing. That is the thing for rich people, but not for us. Anyway, I'm seeing mostly 1s in the chat.
You can do it.
Spencer, are you saying I'm not?
Yeah, I don't like the way that you just
Assume
implied something about Aaron.
that I can't afford custom.
Well,
ETF.
he's still under the PDT rule, so like I'm just assuming. I'm using my.
Yeah, on the account he shows you.
Yeah.
All right, that's true. That's true. It is Tesla. Tesla's not in the Dow Jones. Congrats to most of you who got that.
All right. What is the most expensive stock on the New York Stock Exchange? Is it 1, Seaboard Corporation, 2, Booking Holdings, 3, Berkshire Hathaway, Class A shares, or 4, Amazon? This feels like a trick question, Spencer.
This is certainly not a trick question.
Okay.
I think everyone in chat has it right.
Do you know what Seaboard is? You never heard of it. It could be a crazy one. Amazon is doing a split, so you know that's expensive.
Oh, I mean, to your credit, Spencer, Seaboard stock is truly a 4,000. I mean, wow, I just Googled it and it's exactly 4,000.
That's a buy signal.
Like it's not.
I hit it.
It's interesting.
It was not a trick question. It was Berkshire Hathaway Class A. At this very moment, Berk A shares are $523,000, $654. That's the.
They have a commitment to never do a split.
Yes. This is the last question. Time flies. Which of these letters does not correspond with the stock symbol in the U.S.? Z, X, P, or A?
If you watch Benzinga live, you know the answer to this.
If you're watching like one random show 2 weeks ago.
That was not 2 weeks. Was it really? That long ago? Already?
See, mostly 3s.
Damn.
Bonus points if you could name the stocks of the remaining 3 tickers.
This one seems to have been easier than I thought. By the way, guys, our next guest is going to be Ripster today. I'm not sure if he's here yet.
Rippy 47.
It was P. P is not a stock. A is Agilent. X is what, guys?
U.S. Steel.
Z is.
Where's there?
Born to be free. Oh, Neil.
Or to be free?
Wait, no one got them all right?
Or to be free. Be honest. Were you looking it up? I know you're an honest man.
Berlin.
We know, yeah, Berlin. We know exactly who you are.
We're gonna dox you real quick.
I came second to Born to be Free. I'm proud that I came second to Berlin.
Damn. I got you. I got all you on the one question.
Maybe even up there?
I'm down there on the bottom right. I got 4 right. You got 5 right. So it looks bad on the scoreboard, but just know it was only one. It was that thing. I can't remember.
20% better.
What question?
So the tiebreaker is speed. I think the tiebreaker is speed. So that's why Born to be Free is up there. But Neil, you were very close.
Neil gets set up to answer all the questions.
Yeah, that's true.
He didn't even know what YouTube was.
It's true.
I'm not familiar.
All right. Well, that was fun. Born to be
What's
Free.
the prize that Berlin and I
Who's
get?
this guy advertising on our videos? Oh, Todd.
I don't know.
I'm gonna screenshot this so I can.
Don't ask me. I'm gonna get mad.
Remember to look into Todd later.
Neil, before we let you go, Born to be Free, just shoot me an email. Neil, before we let you go, do you have any final words of advice for us? Anything you want to tell us about your life these last?
Try flossing. I just started flossing around Christmas time. Haven't done it since I was early adolescence.
You know, about flossing, everyone always says it's really hard to quit smoking, right? People who smoke, they always say, "Oh, it's so hard to quit smoking." You don't know how hard it is. Yes, I do. It's as hard as it is to start flossing.
Yeah.
Well, this is an important question. Are you using the old school traditional floss, or do you use the little disposable pick things?
No, my story is kind of unique. So I got a Christmas present from my sister, who's a dental assistant.
Okay, I guess.
What? Yeah. What? Oh, yeah. I think you already know. What was the Christmas present?
Oh, I was gonna guess what dental place she works at.
Oh no! Don't dox my sister.
A water pick.
Yeah, I got a water pick.
I got it.
Water pick, love it. Little water, little hydrogen peroxide, power washes your teeth.
Interesting.
And I just was so invigorated by the feeling. It really changed things up. And I asked my sister, what's the best floss to get? And she told me about this cool like refillable dispenser, and I got that thing. I've been flossing, guys, once a day. It's not hard. So that's my advice to you. Floss if you don't.
Good deal.
Do you floss, Spencer?
I floss inconsistently, like most.
No, he doesn't floss.
Usually,
do you floss?
No.
Usually on like a Sunday night off.
1 out of 3 zingers floss. 2 out of 3 zingers don't floss.
I will.
Fun fact.
I do have a Philips Sonicare though, Jonathan. But the water pick.
He's not poor.
The water pick. I've read that you need to get one that plugs into the wall. You can't get like a one that you charge because it's not powerful enough.
I use my water pick to clean things around the apartment. Like
so it plugs. Powerful. It plugs straight into the wall.
It plugs straight in the wall.
All right.
Yeah. But yeah, it's great. You got some shampoo on your shower wall, tile. The grout's getting kind of dirty. Go in there with that water pick, clean it right out.
It's like a mini power washer.
It is a mini power washer
for your teeth.
Yeah, it's a exceptional value.
Okay.
And we are not sponsored by Waterpick. So that's a free one.
Yes, Ripster will be coming on. Should be joining us momentarily. We will keep you guys apprised.
There we go. I guess I meant, when I asked you for any like advice.
No, I was looking right here.
I meant like about the markets, but flossing is good too.
Oh, advice about the markets?
Yeah, right.
If you want to get into day trading, like really active morning trading, start trading just SPY and or QQQ. Just start with that, because they respond well to what's happening in the overall market because they represent the overall market. And if you can trade those, then you can start branching out to the unique personalities that every individual stock offers. So if you want to get in there and you want to scalp some options, you want to get in there and trade some breakout patterns and finish your day around 11 a.m. Eastern, start with just SPY and QQQ. Trust me.
That's a great tip. It's a great tip.
Thank you. In fact, that's all I've been doing. Once I see like a consistent uptrend return to the market, then I'll start getting some individual names.
Yeah, I really do like the way like SPY's been trading. It's like last week, the S&P 500 was up more than 1% for 4 consecutive days, and if we would have finished more than 1% on the 5th day, it would have been the first time ever. Like for the S&P to make 1% move in a given day is pretty, like, it happens all the time, but it's still a significant move for the S&P 500. But to do that 4 days in a row, I was having fun trading that.
Yeah, and I mean it's cheap options too. You guys, Brad Weber. If you guys know Brad Weber, check him out on.
We got to get Brad back on the show, Aaron. It's been too
Trading
long.
Grounds. Yeah, I know. Brad's busy. Brad has a young son, Thomas.
He's training him to trade.
Thomas the trader. But yeah, I mean, like we said, SPY. Yeah, we cheap options, especially with the midweek expirations.
That's the way to go.
You can buy
Just do
some
the
like
weeklies.
SPY calls on like Tuesday afternoon that are like dirt cheap, and then if you open up 0.5% on Wednesday morning, you're golden, or vice versa with puts.
Yep.
You got to learn how to trade both ways.
Absolutely.
Although I do admit,
are we being told, what does this mean? Does he want me to turn around?
That means that our next guest, Ripster, is
elongate the
here.
segment.
Make it long.
Oh yeah, elongate
Keep going.
the segment.
Keep
Just
rolling.
keep it rolling. Just keep it going. Elongate the segment. All right, guys. Quick rundown of the agenda. We are getting ready for our last chapter of the day, identifying long-term trends. We'll be joined by our good friend Ripster. You may know him from Twitter, Ripster47, one of the absolute OGs when it comes to technical analysis, EMA, clouds, you name it.
Yep.
Ripster's the man. So without further ado, Spencer, do we have a little special guest thing, or we just...
No.
You can do a video.
We're gonna bring him on. Just
Can you, Spencer? Can you give a special intro?
How was that?
Yes. Beautiful. Ripster.
Hey guys. Hey, how are you?
Good, man. How are you doing?
Good. Thank you for having me. I appreciate it. You started. So you've been starting to do the boot camp on a work day, huh?
We are trying to. Yeah, we typically do the boot camps on Saturdays, but we were trying out this week just to see kind of the feedback we get from our audience, if we get more or less people joining. So, not sure if the next one will be on a weekend or weekday, but I'll definitely let you know.
All right, not a problem.
But the cool thing about doing it during the week, Ripster, is that we get to talk about stocks that are in play.
Mm-hmm.
I follow you. I have my alert set up for when you tweet.
I appreciate that.
Would you mind starting us off with some stuff that you've seen in play today?
Yeah, and Ripster, if you're able to, please share your screen.
Okay. How do I share it? 1 second. So, I see. Share screen. Okay, let's see right here.
Serve.
Let me know. Do you see that?
There we go.
Yep. Yes, sir. We got it.
Yeah. Yep. So nothing much. I didn't came anything today with any prep, but I see the agenda is a long-term trend, and we have been trading Tesla and Apple today. Tesla since yesterday, and I know I talked a lot about the psychology last on my last boot camp. I just want to say one thing. Everybody, in this market, what happened for last 2 months, we were having Fed rates increase and Russia, Ukraine issues and everything. Everybody was looking for the dip. Everybody says it's cheap. And I keep telling everyone, nothing is cheap. What is low can go lower, right? You don't really, lot of fundamental investors don't even think about technicals, because why technicals are important, because technicals is human psychology. It's not just something random on your screen. It's human psychology that's impacted on shown on the charts. So while you are trying to buy the dip, human psychology, a lot of others are trying to sell it to you. So you just have to see where the price consolidates, where a buyer pressure comes in, and when the trend changes, right? You don't necessarily have to buy the lowest point. You can buy the reversal and ride it back up. I keep saying that. And I don't want to trade every day. I don't want to try to find something cheap. If Tesla is cheap, I don't really want to buy it there. I just want to come back when I see a buying pressure and trade it that way. So this is what happened since last week. I was on vacation last week. I was not on, but the reversal started to set in. And one important thing to note is the reversal just didn't start randomly. The fear in the market started to go down, right? If we look at the VIX, right? Okay, let me put it here. Okay, so what do we see? Let me know if you see my chart here, right? So
Yep.
VIX, and one other thing is people don't zoom out. Everybody wants to look at a daily 5-minute chart. We need to zoom out. We need to see at a bigger picture. So if I see the VIX daily chart, my levels are clear. So whenever the fear rises, it starts to bounce from the 1416, which is the lowest level of the market fear or volatility, and it starts to move towards 30 level, right? Back in November, we had this 34. VIX went there, market tanked, and then it came right back, and we found some reversals there. This time around, from last few months, VIX had been elevated. Every 3 times it went to 38. And it has been, when VIX is elevated, it doesn't necessarily mean that the stocks will reverse every time. It's not 1-to-1. VIX is volatility. So when the volatility is high, the spreads increase, the stock range increases. So what we saw from January to February, the volatility was high. It was staying. I consider anything above 21 as an abnormal volatility. Anything under 20 is a stable market. So what we saw was, mostly for last 2 months, VIX was elevated. Every time it went to 36, 38, it came down. So this reversal that happened past week was coincided with the same 36, 35 level, and the 30 was important right here. When the 30 broke, and that's why you started to see some fear go out of the market, and there was kind of reversals across the board. So this is the first when you're trying to trade the long-term trend in large caps, you have to look at what's the market sentiment. When you don't look at the market sentiment, you are just looking at one stock you like, and you say, oh, this is a beautiful stock, this is a strong fundamentals. Nobody cares about fundamentals when there's a fear in the market. So take that out of your mind. That's a mistake I see. Everybody's just, they're so blinded with fundamentals, they just don't care about the fear, the volatility, the market sentiment, and they just try to buy. And what happens is they keep buying while the stock keeps going down due to the market fear, and then eventually what happens is they stop out. So this is what happens when you don't have a risk reward, when you don't have a plan, you just want to buy a stock which is you think is a cheap. When it starts falling beyond your buy price, you start to have that I say pain. So there is a small pain you have. You say, okay, you hope that it will bounce back. The pain starts to increase as the stock keeps going down. And eventually what happens is your pain, you cannot tolerate it anymore. And you say, this is too much, and you cut it. And by that time, and the market starts to bounce next day, and you don't have the cash left. You don't have the capital to trade it back up, right? Like, let's say anything, let's say if Tesla bounced and somebody didn't have plan, they started it buying and they just stopped out and they couldn't ride the trend back. The reason being they never had a plan, they never had a risk reward. So what I say is find your stops. If market is bad, cut it. Don't just keep adding, and don't wait for the pain to become, you cannot tolerate it anymore. Cut when the pain starts. It's better than cutting when your wound is become so big that you can't tolerate it. So that was the high level, how I plan reversals, and I keep teaching on Twitter, what to look for in the large caps. So
Ripster, are you checking the VIX like every day while you're trading, or is it something
Yeah,
you
yeah.
check in more once in a while?
Yeah, when the VIX is under 20 or 18, it becomes the impact of VIX in my trading becomes less relevant. But when the VIX is all above 20 with a higher range, I check it every day. Every day, yes, and that's what I teach. I think I have thousands of traders that are using VIX in their trading, and I have noticed even on FinTwit a year ago, nobody was really looking at FinTwit level, the VIX levels, and since I have been teaching this strategy, I see a lot of other traders or other accounts as well as following and spreading the knowledge of VIX, which is good to see.
Right.
Yeah.
So you've got Tesla pulled up right now. Whether we want to look at Tesla, SPY, whatever, it's the same for both Tesla and SPY. But you can see the past week or so has looked pretty good, but we're still off of our highs. What would you say to people who have a lot of cash right now, who have been sitting on the sidelines, that want to get back in? Would now be a good time, or would you recommend kind of waiting to see if we do get another downtrend in the market before we get back up to those previous highs?
I think it's all about the risk reward. Everybody wants to. So you can buy anywhere, right? You can, let's say you can buy Tesla here, but what's your risk? You see, wherever you buy, your risk area is always the same, and you position accordingly. But if you have missed the move, wait for the pullback back to the risk level, right? And that's the best way to buy. I wouldn't say buy it right now, right away. Go see like the Tesla is extended from EMAs on daily. It needs a pullback. Calm down. But people don't understand is they say, oh, market has rebounded. Let's go in. Let's buy. No, that's not how it works, because market works in a cycle. It will be up, pullback, consolidation up, or down, consolidation down. So you have to follow the market cycle, and that's how you buy. But I do think market is trying to reverse, and the VIX, and I will talk about VIX. If VIX stays under 30 and then fades back to 20, it's good time to get back in. So you have to follow that. So but again, we are in news based. This Russia thing is going on, Russia, Ukraine. Until that really goes away and VIX subsides, we won't see a continued move back up, because the move doesn't happen overnight. It's not that I know we ramped up quite big last 1 week, but that's not a long-term trend. The long-term trend, when it comes, there's a lot of opportunity to trade.
100%. So yeah, this whole section's about identifying long-term trends. So whether we want to look at SPY, you've got Tesla pulled up. I want to see what you're looking at when you're trying to find more of a long-term trade, because we just talked about risk reward, and a lot of our audience out there, and every trader has different styles, right? Some people might like to do swing trades that are kind of 2 months out, or maybe even they're buying leaps that are a year out, and they're not really day trading. So how do you find those kind of medium to long-term positions?
Yeah, sorry, my kids were here. Can you repeat the question, please?
No problem. Yeah, just like, how do you find your medium to long-term positions, right? Not your day trades, but your kind of more month-out swing trades, or even leaps, maybe.
Well, right now, my long-term trades are catalyst based, or biotech investment based, because environment has not been that good for the swings. But I basically have 3 setups that I usually tweet that how to trade reversals. I want to see the consolidation. I wish I can show it here. Let me see. Okay, let me see. Let's find a name that I want to see. Okay, let's just look at a square. RNXT. Right. So I have the few setups that there are bull market setups, and there is a a market reversal setups. The bull market setups are usually when a stock is making let me see what is making highs today. CTDA. Okay. I just want to show you an example, kind of setups I do. So when it's a bull market setup where everything is making a new high and consolidating, this is my number one setup that I always teach, right? This is the setup where a stock is going up, 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 and then it consolidates. You see this range. Let me see if I can have the tool. I'm just trying to see if I can find the tool I want to show. Okay, let's see if this works. No, this is not going to work. Anyways, so what I'm trying to say here is this is a bull market setup. You see how the stock is in consolidating between this range from 50 back to 41, and then 46, 41, 46, 50, back to 44, 45, and breakout. So that's the bull market setup where I take a swing. This is inspired from William O'Neill and I forgot the name of the other trader, the box trader. So this is one of my bull market setups where I want to get in when a stock is breaking out of all-time highs, and then you get back in here, you put the stops here, and then you let it work and scale out. So what you see is what was the previous range from here, from this here to here was what, 10, almost $9, and how much is broken out and it has traded. It's almost traded at the same range. If you see, not yet, but it's on its way. So this is the one of my swing setups back in 2020 when we were having a strong bullish market where everything was strong. I think probably we nailed hundreds of such trades. There's a live examples on Twitter if somebody wants to go back of just this one setup, right? All-time high, consolidation, breakout. But this mostly works if it's a bull market and every stock is making highs. Even now, it can work. You just have to find your charts which are doing this, right? Every day I see what are the charts which are making all-time highs or going up. So this one, if I will swing it, I'm in a weekly chart. So you see my view is zoomed out. I'm looking at year level chart. It's breaking out too, right? So I will swing it right here. So I'll take it. So this is just one of the setups I like to swing, right? And yeah. So let me show you now. And so what I was saying was every day there are a lot of stocks that are making 52-week highs or all-time week highs. So you have to find those. Human mentality says, oh, it's a cheap. I want to buy something cheap, which is very cheap. But what human mentality forgets, or only the professional traders or seasoned traders understand, is something which is strong will become more stronger, right? What does human psychology says here? Like if you think in my way, the shorts will cover here. The bulls, the professional seasoned traders will see that right here. One second. Okay, this. Okay, right here, right here, right here, right here. These were all the resistances, multi-year resistances, which are about to break, and new buyers will come in to buy here. The shorts will cover, and the somebody who bought here will hold because it knows it's making a new high. So that's a great system of swing trading, range box trading that I teach. You should follow. Then okay, let me go back to Square. So Square is example of a stock that has sold off in a bad market. Again, here you can use your EMAs. I use EMA clouds, 50 MA, 34, 50 MA to study the trend. There are two things you need if you really want to be successful as a technical trader. You need a trend trading system, and then you need support and resistance, understand supply demand. That's it. You don't need anything else. Traders out there selling their products, you can make things complicated. Things will work. Everything points to the same thing. You can have 5 or 6 or 10 tickers on your platform, indicators on your platform. They all will point to the same thing, right? Yeah, but that's not a conviction. If you are trading with 5 indicators on your chart, that's not sustainable, right? Is you just only thing that works is support, resistance, market psychology. So anyways, so let's see what Square is saying here. So you see it has been downtrend. Every buy is a drop. People have been trying to buy it since, I don't know when. So everybody who bought here, new lows, he got stopped out. Somebody says, oh, cheap, he tries to buy here, new lows, he got stopped out. So the cycle continues until everybody's, just selling until he's really exhausted down here. So what's happening here? We got really far extended to like 2-year lows. this was the level from 2020. This is a support here. It's never a random. People think things bounce randomly. No, nothing bounce randomly. If you can understand the market is not random, you will find success. Well, it's not random. It's a February 2020 level square. It's June 2020 level square, bounce here, and it doesn't have to be exact. The level is always an area, so bounce from here. Okay, you can scalp from that bounce if you're a short-term trader, or you think, you need to know your levels, need to set price alerts. If you follow Square closely, if you're a Square diehard fan, you should have these levels, and then you can probably scalp from here. Somebody made good money, or somebody who averaged down here, who has been buying from here, is still in loss. So he says, let me get out, let me get out. I averaged down, I'm a little profitable or break even. He sells there, gets out, sells there, gets out. So the thing is, a lot of the old sellers have to get out before the real reversal sets. For me, I look at, let's see at this 135 level or 120 level. I want to see where the buyers will overcome the sellers from the downtrend. And that's my another reversal setup, where I just want to see the stock go this, and finally this. So that's the reversal setup. And then there are some gap setups. There are many setups I can keep going, but I think this setup is the market we are right now. This is really a good one that people can learn and try to replicate.
Yeah, I think, and again, this section is identifying long-term trends. So we just discussed how going back on Square, sometimes you need to go back as far as 2 years ago to find that area that's still relevant on a chart, 2 years later. So one thing I'm curious about, Ripster, and I know we only have a few minutes left, but what about on the flip side? What are like signs of a trend that you see that you're like, okay, this is not a stock I want to be in, or this is not the trading environment I want to be in? What are kind of bearish signs that you see that say, okay, the trend is not here right now?
Okay, let me see. So usually, right, of course, I don't want to be in when the trend is, if EMA trend is telling me it's a downtrend, right? I don't want to be in that stock it's in a downtrend. So what happened recently was, people were saying, earnings are coming, they are going to be bullish, we're going to be go get back up. No, it doesn't work that way. Earning bullish doesn't mean anything if the chart is bearish. If the chart doesn't bounce after earnings, every bag holder will just take an if it bounces, every bag holder will just take an opportunity to just get out of it, right? So for me, if the stock breaks those levels, support levels, I don't want to be in. I'm just trying to figure out an example. That's something that really tanked. Okay, let's see, Roku. Okay, so let's see. Okay. Yeah, for me, people were trying to get in Roku, but I was not getting in Roku until it went to 180. Right, and I actually called it a short when it broke this 150, and then and of course then it bounced from this again 100 psychological level, 24 September level. So if it's not always about making money, it's also about saving money. People don't realize, a lot of Roku investors who say we love Roku, they would have earnings is out. They say, it's a good earning, it will bounce. They will keep holding till 99, and they're barely break even if they kept held. Look where did it reject? I mean, I have told these things hundreds of times, and it does make a difference. And it's very simple. You don't really need somebody to tell you that where to buy. If you just open your eyes, remove clutter from your charts, you can see it. So Roku, I was never long, and I said I'm not interested long. If after earnings Roku reclaimed 180, because this was a range for a long time, then I would have long it, put some stop here. But after earnings, Roku broke this level. I had no interest going long in it. I don't care. I don't want to buy dip here. I'm not interested. That's not my style. It might be somebody's style. Maybe a good dip scalper is good. He keeps eye on the year levels. Maybe he scalps, but that's not a long-term trend, right? Maybe, it's not long-term trend. Even if you're an investor, yes, maybe you can buy here, right? This level. But then you're not taking profit here because you're a long-term trader, right? If you just buy here and trading here, then you're a dip scalper. For long-term trend to come, Roku has to, weekly chart has to show reversal, maybe over 150, then over 180. That's when the reversal start. And one thing to note, if Roku came from 400 in 1 year or 6 months, it's not going back there back in 3 months. That's not how it works. That's not a lot of people understand, right? And other thing to note is we are now going to be in high interest environment. When we were low interest environment, all the money was flowing in these growth stocks. People were ready to pay higher multiples. They will not pay the higher multiples. They will go in the heavens, which in high interest, which are paying them more. So understand that the stock will not go 485. It'll be a good trade even if it goes back to 160, 170, or 200, maybe in a year back to 280, right? It doesn't work like that. So set your expectations accordingly, set your risk reward accordingly. If you do that, you have your risk reward, you will succeed. But you're just buying blindly, even shorting blindly, then it's going to be a tough road ahead.
Yep, 100%. Well, Ripster, we thank you always for hopping on. If you have a few more minutes or final thoughts, now is your chance. But thank you again for joining us on our Benzinga Bootcamp. I know we did it on a weekday this time, so it was a little harder for you to join. But I appreciate you taking time out of your busy day. Your little buddies running around. Benzinga Nation says hi. Tell them we said hi.
Hi, Arjun. Say hi.
Hi.
All right. Okay. Hold on.
All right. Well, thank you again, Ripster.
All right. Thank you so much. Sorry,
Yep.
I need to go, but next time I will. Okay, Arjun, just tell your mom.
All good, man. All right, Ripster. All right, y'all. That was Ripster. I'll drop his Twitter in the chat. One of the best technical analysis guys out there on Twitter. We go ahead and bring my friend Spencer. Or Spencer, he might come up and join me from the desk. He might join from his desk. I'm not sure, but Spencer's got some final words he would like to share with the crowd before we wrap up this beautiful boot camp today. Spencer, how you doing?
Wait, am I live? Am I live?
Yes.
Are you sure?
I was gonna say no to see what you did, but then I thought that was dangerous. Always assume the hot mic.
Oh, you tried to get me the other week, and I
failed.
Yeah. Anyway, that was fun. All right, so guys, let us know what you thought of this. All right, this is our first boot camp that we've ever done during the week when the market is open. We're open to experimenting. We want feedback. If you have feedback for us on this event, do this. Send us an email. Okay, email us. I'm going to put it up on the screen. It's events@benzinga.com. That's the one. Email events@benzinga.com or shows, either or, shows@benzinga, events@benzinga. Give us your feedback. Did you like it on a random Wednesday? Did you not like it? Do you prefer it on a Saturday? Anyone you liked, you didn't like, people you want to see again, people you don't want to see again, tell us, please. What else do I want to say?
All right. I want to say, if you haven't signed up for your free trial of Benzinga Pro, now is your chance to do so. Go to pro.benzinga.com, free 2-week trial, no credit card needed. You'll get to hang out in the Pro chat room. Spencer and myself are there. We have guys like Nick Shaheen that are there. Always great to be in Benzinga Pro if you're looking to either get into day trading, get into trading, or just take your trading where it's at right now to the next level. Pro.benzinga.com, free 2-week trial, no credit card needed. Spencer, anything?
Like if your trading is here and you want to take it like here, that's what he's talking about.
If you're like Spencer level and you're trying to get AB level, you need that Benzinga Pro.
That's exactly what I meant. That's what I was trying to say. I have a special discount link to everyone who signs up to Benzinga Pro from this specific stream. You ready? I'm about to drop it in the chat right now. Here it is. Wait, let me make sure I got the right one. Is that the right link? Yep, there it is. Okay, use this link. It's going to be on the screen and in the chat. There it is on the screen. There it is in the chat. That link, Benzinga.com, benzinga.grsm.io/bootcamp. That link is a special link that for everyone that's watching from this show. That will get you 25% off your Benzinga Pro subscription using that link right there. And if it doesn't, email us at either of those emails and we'll get it to you. But special link for people watching this show right now. Benzinga Pro is what Aaron and I and many others here use every day. It is the first thing that I look at. Like this is the first thing. When I come in every day, I have usually this is what I have open. This is like I'm very, very particular about my Pro layout and setup. And this is my movers tool. Wait a minute, I'm in the wrong. Oh, I have two Pro things shared. That's weird. All right. I didn't realize I had two tabs open. This is the movers tool. Okay. I'm very particular about this. This is what I use. This is the first thing. This is what I leave up on my screen when I go home. And it's the first thing I look at when I get back to my desk in the morning. And I see what is up pre-market, what is down pre-market, what's the big news of the morning. This is what I do. And then after the opening bell hits, I go over to my scanner. I look at movers, what's up, what's down, what's moving. I use it for ratings. I use it for my watch list. I use it to find trading halts, see what's halted for the day. I use it for the squawk. I use it. I mean, I use it, and you can too, and you should too. So, that's all I have to say about that. Again, free 2-week trial for everyone, but if you use the code that was on the screen just there, you get 25% off.
The best part about Benzinga Pro, Spencer, pays for itself in one trade.
That's the idea, right? The whole idea is one trade and the whole thing pays for itself. That's the idea of the platform.
All righty. Well, unless you have anything else, Spencer, I think it might be time that we wrap up our Benzinga Bootcamp. Thank everyone that has tuned in today.
Wait, before we go, are there other things we need to promote? Yes, there are.
Oh, okay.
We didn't even promote either of our events.
All right.
Did
See,
we?
that's why I gave the preface. I said, unless there's anything else we need to talk about. So here are the other things we need to talk about.
Yeah, we have other things to talk about. We have the FinTwit conference, guys. The link should be in the description, but the link is also in the chat. I just put it there.
Las Vegas. If you want to come to Vegas and gamble with Spencer and I, maybe play a round of golf. Maybe gamble and play a round of golf at the same time.
You will not be able to play a round of golf with me, I promise. But you will be able to gamble with me if you want. I promise you this. Between now and then, I will learn how to play craps. That's a promise. It's on my to-do list this weekend to learn craps because I'll be in Vegas in a week anyway. But we can gamble. We can play blackjack. We can also just hang out and actually attend the conference, right? And attend all the sessions from people like Yves Bobach and Nick Shaheen and Kathy Donnelly and Chris Capri and Gary Black and Neil Hamilton, Jonah Lupton, many more. Mark Putrino, Brian Shannon, Jake Wojastic, and many, many more. Let me make sure I have the code for that as well. The link is up on the screen. And the code, I believe there's like an early bird code that is ending soon. So there's two things within there's two separate events here. There's the main conference, and then there's the exclusive Benzinga. See how it says join inner circle on the top right? That's the Benzinga inner circle, right? There we go. It took me to a different page. We are capping at 45 people. Oh, look at that. Ticket prices are going up tomorrow. I didn't even know. Actually, I didn't know.
And honestly, like if you want to come to Vegas for this event, which will be awesome, like you might as well do the inner circle package, right? If you're going to do it, if you're going to travel to Vegas, go all out. And then you get like so many more benefits working with Nick Shaheen directly if you want to get better at options trading. So I know if it were me and I was on the fence about, I want to go, but I'm not sure if I want to do this package, it's worth it.
Promo code for this specific event is on the screen. BZYouTube20. That's it. Price is going up tomorrow, or so it says right there. I trust the internet. Always trust the internet. Oh, the last thing. Thank you, producer Aaron Thomas, for the reminder. The thing about the boot camps, right? And I saw Christian Gallagher may have mentioned this in the chat earlier. These boot camps are special events for us. Every day we're live all day on YouTube, but these boot camps are special. Okay, you all obviously were able to watch this live for free today. Once this stream ends, we are making this whole stream unlisted. We're putting it behind a paywall. You have to buy the recording. That's how the boot camps work. Free to watch live, not free to watch after.
Yeah, and if you're walking down the street and you see someone trying to sell you a bootleg version of the boot camp,
don't buy it.
Do not buy it. We will find you. We will find that person that's bootlegging it, and you will be in some serious trouble.
Don't buy bootleg boot camps.
No.
What
about CCC?
Oh, wait. So I put the link up on the in the chat, and the link should be up on the screen too. It's just been events.benzinga.com/premium-membership. That's where you can subscribe and actually buy all of the recordings, not just this one, all the recordings from all the other boot camps that we've done. That's it.
Matthew in the chat's asking for more details on that special options package for the FinTwit conference in Vegas. I'll go ahead and drop you the link in there right now. I believe if you just go to Benzinga events, but then
remember, so if you go to the link, I guess I'm gonna all these links, by the way, guys, should be in the description of this video.
I'm dropping this link that Matthew wants right now in the chat, and then Spencer has it up on the screen.
You click Inner Circle, right? That's the one.
Circle. Yeah, and that's the live intensive workshop. You've got Nick Shaheen there. You've got Chris Capri, who are two just option monsters. Mark Putrino as well, who's just an overall chart monster. So again, like if you're going to make the trip, like you're already going to travel out to Vegas, get your hotel and everything. Like you got to pony up and just do this package because you will end up getting more out of it in the long run.
Hey, I don't know how to pronounce you in the chat. Sorry. Email us. Just email us at events@benzinga.com.
Are you talking about your YouTube membership? I think he might be talking about his YouTube.
I don't know what that's referring to.
All right. We'll figure it out.
Who's doing that with the banner?
Who's doing that?
That's you.
I swear to God, it was not. My hands are up here. All right.
How many likes? Wait a minute. How many likes do we need to get to send Chris to the FinTwit conference?
Ooh.
Who's messing with my dude? So it's one of you twos. One of you twos is messing with me right now. Stop doing that.
I don't even know if I'm going to the FinTwit conference. I'm just kind of trying to speak it into his existence, trying to manifest it because I'd love to be there. And if I'm not gonna go for work, I'm gonna buy a ticket and
go. Aaron Bryan, that is a very serious question. Okay, wait, to answer the Chris Kachi thing, how many likes do we need to send Chris to the conference? I don't know how many likes we have right now.
I don't know. Spencer, I definitely don't have the power to throw a number out there and make it happen.
No, that's the thing. Neither of us do, unfortunately. We don't even know who's going yet.
I see Edwin. I could ask Edwin right here.
There are a lot of people who are I don't know what's it called, angling to get to this conference. And like half of Benzinga wants to go to this conference. It's going to be interesting who we send.
Aaron Thomas just tried to say that he's going, but
Aaron Thomas does not know if he's going.
I am going. I'll be going.
You don't know that,
but I do.
Half this damn company wants to go. But the question from Aaron Bryan in the chat. To my knowledge, I don't know, frankly. I don't know. To my knowledge that we don't have anything going on, but I promise you, if there is a situation where we do have to postpone or cancel, you will be compensated.
Matthew, so if you go to this link that we just put in that chat and for that inner circle, you can see we're capping this group at 45. So you'll be in essentially, and there's 3 instructors between Mark Putrino, Chris Capri, and Nick Shaheen. So you will be in kind of these like small class settings, one-on-one with these guys at times, to be able to take your options trading and trading in general just to the next level. So it's really out of all the, educational programs and materials that we've offered, this is kind of the most intensive way to take that next step in a short period of time.
Okay. Will this live stream be uploaded later? It will be. This stream will be available at the link, and we'll put it in the chat again. It also, Aaron Thomas, make sure it's in the description, please. Events.benzinga.com/premium membership. It's what's the number? I think it's $57 to get access to every single recording, every single boot camp we've ever done. That's what it costs. It's on that link that's on the screen. That's where this, as soon as Aaron and I end this show right now, that's where it's going. And on that note, I think we're done.
We're done?
Well, you're the one that said that, not me. We are only at 343 likes. Can we get to 350?
You know what my third grade teacher told me, Spencer?
You're never done. Go back to sit down, Aaron.
Kind of. Turkeys are done. You're finished.
Oh, I thought she just said like sit down, stop talking.
No, she said that a lot too. But also the done versus finished thing. You're not done. Also, Superman does good. You do well.
I don't get it.
We'll work on your grammar though. All right, guys, we do a boot camp every single month. We will keep you guys in the loop when the April boot camp is planned, but make sure you guys come back for more education. We'll have a different topic and different great speakers next month. It was a pleasure hanging out. Thank you. All of our guests.
I'm not doing the icky stuff. All right. I'll see you guys on in 45 minutes for At the Close with Joel.
Smash a like for Spencer, guys, and Luke, and everyone else we had on today. Ripster, Brian Feroldi, Mark. No, not Mark Putrino. Who else did we have on? Anne Marie.
I'll tell you who we had on. How about this? We had all these people on. Right?
There you go.
Yeah. That's
Tony,
it.
Brian, Gianni, Luke, Spencer, AB, Neil. We got a surprise appearance from Neil. Smash the like.
That was fun.
All right, guys.
We're done. All right. How do we end this thing? Who's actually in charge? I have an idea.
You have a little outro video, or no, play a commercial for one of the.
I was gonna play the pro commercial, the fancy pro commercial.
All right.
How do we do that?
How about that?
All right.
Did you know nearly all stock price changes of 10% or more result from a single news headline? That's right. News headlines have a unique ability to drive stock prices up or down. These news catalysts create trading opportunities every day. All you need is a little help to reach out and take them. And if you're looking to grow your portfolio, it doesn't matter if your investment budget is small or big. An easy-to-read stream of news headlines will increase your opportunities to profit from price changes in the stock market, consolidate a knowledge-based investment strategy, and grow your portfolio. All you need is Benzinga Pro and its powerful news alerts, price tracking, and portfolio monitoring to make a positive change in your trading performance. We've already helped thousands of retail traders across the world, and they could not be happier. Increase your market knowledge, boost your exposure to big movers, and make informed trades before major price changes. The opportunities are all around you. Subscribe now, and we'll skyrocket your portfolio today.